loaning that system, then it is going to cost you more for that payback period. And so ultimately, these companies say that they still remain attractive, given that the final costs are still lower than what you're going to pay for your utility every month. But until those rates come down, until consumers feel like they're in a better spending position, we might not see a bottom for the sector just yet. And so that, Frank, is the key thing to watch ahead of earnings. Have we seen a bottom in the U.S. residential solar sector?
All right, our Pippa Stevens back at CNBC HQ. Pippa, always good to see you. All right, coming up here on Worldwide Exchange, watching the action in China EV stocks just one day after Treasury Secretary Janet Yellen said right here on Worldwide Exchange that the U.S. is, quote, open to EV imports from China. We'll be back right after this.
Done.
Welcome back to Worldwide Exchange. Congress returns from their spring recess today with several critical items on the agenda. That includes whether to approve additional aid for Ukraine. While opposition has been growing, more than half of previous funds have gone to U.S. companies making weapons and technology to send to Ukraine. Our Emily Wilkins is in Rochester, New York, where one defense contractor is awaiting the outcome in Washington. Emily, good morning.
Good morning, Frank. Well, yeah, we are here in Rochester, New York at an L3 Harris facility that produces tactical communication radios, which are critical for our armies to coordinate over long distances. And they're waiting to see if Congress is going to pass that $60 billion in funding for Ukraine that President Biden asked for, because if Congress does, part of that funding is likely to come here. Now, this facility has already gotten several $100 million since Congress began passing supplemental funding for Ukraine in 2022, but they're not alone. The majority of aid to help Ukraine, more than $96 billion, has been spent in the U.S., according to the American Enterprise Institute. Elaine McCluster, a senior fellow at AEI, who was part of the team that did the analysis, said the funding allocated to Ukraine has had a substantial impact on the U.S. defense industry. 117 production lines in 31 states are producing weapons that are being sent to Ukraine or refueling American supplies.
The money is really revitalizing decayed production lines. It's bringing back institutional knowledge about weapons manufacturing
from
to
other
the war,
waters.
and it's pushing America and its defense sector to innovate and modernize old weapon systems and to use things in new ways.
This L3 Harris manufacturing facility is not only waiting to see if Congress is going to be moving for more funding, but so are about 470 mid to small companies that help supply parts for these communication radios. Now, House Speaker Mike Johnson is working to find a proposal that would provide additional aid for the war in Ukraine while getting the support of a majority of House Republicans. He's considered several options, like making part of the aid alone or using Russian assets seized by the U.S. to fund the aid. We expect to learn more this week. House members have been back in their districts for the past 2 weeks, but they do return to D.C. tonight, and you can bet that Ukraine funding is going to be a top priority. Frank?
Okay, expect to be a priority, but there are certainly a lot of political considerations in this issue. For instance, Congresswoman Marjorie Taylor Greene, she's outspoken and said no more aid for Ukraine. She's also filed a motion to oust Speaker Johnson right before lawmakers left town. Could Johnson face an attempt to get him out as Speaker if he brings that Ukraine funding up for a vote?
Frank, it is a possibility that he could face a vote like that. And of course, it's a huge question this time as to what the outcome of that vote would be. There have been a couple of Republicans who seem to be with Congresswoman Greene as far as voting to oust Johnson, but at this point, we don't exactly know the number. Another big question is how many Democrats could step in to potentially support Johnson. There have been a few Democrats who have said, look, if Johnson's able to move on Ukraine aid and able to get that done, we can help support him to make sure that he stays in his speakership. But of course, lots of politics there, lots of considerations, but the signals that we've seen from Speaker Johnson at this point show that even with this motion to vacate hanging over his head, he is still planning to move forward on finding a way to get this aid done.
You know, as they say, politics make strange bedfellows. Our Emily Wilkins in Rochester, New York. Great story as always. Good to see you, Emily. All right, coming up here on Worldwide Exchange, the crypto asset hot on Bitcoin's tail, riding a new wave of optimistic speculation. We're live from Paris, Blockchain Week, with much more on that story. But if you haven't already, make sure you follow our podcast. If you miss Worldwide Exchange on TV, check us out on Apple, Spotify, or other podcast apps. And we will be right back after this break.
2 months free.
It is about 5:30 a.m. in the New York City area, 10:30 in London, and there's still a lot more ahead here on Worldwide Exchange. Here is what's still on deck. Investors, they're grappling with the growing prospects of fewer rate cuts from the Federal Reserve this year. We'll tell you why that's not shaking up our Jim Cramer. Plus, taking a bite out of Apple. Shares are falling once again this morning after a new note raises fresh worries around the tech giant and whether it can deliver with earnings fast approaching. And rise of the machines, why Elon Musk says AI that is smarter than the brightest person in the world and may be much closer than we all think. It's Tuesday, April the 9th, 2024, and you are watching Worldwide Exchange right here on CNBC. All right, welcome back to Worldwide Exchange. I am Frank Holland coming to you from CNBC London. Let's get you ready for the trading day ahead. As always, we pick up the half an hour with the check of U.S. stock futures, and take a look at this. Futures were kind of mixed, slightly lower earlier today. Looks like we're on pace for a Tuesday turnaround. Right now, you see the S&P's firmly in positive territory, the NASDAQ moving even higher right now. We'll continue to watch the futures throughout the show. This is investors await tomorrow's March inflation report after February's hotter than expected read. We're checking treasuries ahead of that report with yields at their highest level of the year and looking nothing like a market that's bracing for interest rate cuts, at least not anytime soon. The benchmark right now at 4.38, just a basis point lower than it was earlier. We also want to get a look at Chinese EV makers trading in Hong Kong. We're talking names like BYD, Li Auto, XPeng, and NIO, all getting a boost there. This on the back of comments from Treasury Secretary Janet Yellen during an exclusive sit-down with our Sarah Eisen on Worldwide Exchange yesterday, talking about the potential for those cars being on American roads.
They are allowed to sell their EVs in the United States. We don't have rules against it. Again, in that area as well, we're trying to foster a domestic industry. We're certainly open to imports, including those from China. There are no rule against China selling EVs in the United States.
And again, those Chinese EV makers trading higher in Hong Kong. Let's now get to some of this morning's top corporate stories. Our Silvana Hanau is here with those. Silvana, good morning again.
Hey, Frank, good morning again to you. The Biden administration is reportedly set to hand out its latest round of funds from the CHIPS Act. According to Reuters, the White House will announce $6 billion going to South Korea's Samsung next week. Reuters adds the money will go towards construction of 4 facilities in the U.S. and that Samsung will more than double its investment in this country to over $44 billion as part of the deal. General Motors' Cruise unit is reportedly preparing to resume testing of its robotaxis. According to Bloomberg, the self-driving car division will do so with safety drivers in Phoenix, and the report adds that Cruise has not set a timeline to begin testing after it suspended U.S. operations in October due to an incident involving a pedestrian. And Elon Musk says artificial intelligence that's smarter than the most brilliant human could come sooner than we think. In an interview on his X platform, Musk says that development could happen as early as next year. He added that AI has been held back by the availability of electricity and that the next version of that's the AI chatbot from his XAI startup, should be trained by next month, Frank.
Very interesting stuff there. Silvana, thank you very much.
You got it.
All right, turning back to the equity market, shares of Apple, they're lower again this morning after falling more than 0.5% to kick off the new trading week. That drop coming on the heels of a new survey from KeyBank warning of quote-unquote weak demand for the iPhone. The bank, which rates Apple as sector weight, says yearly sales for the iPhone, they fell significantly due to pent-up demand for the iPhone 14. KeyBank is also lowering its iPhone estimates by 2% and hardware and total revenue expectations by 1%. Apple is now down more than 12% this year compared to fellow tech giants like Meta, Netflix, and Amazon, who are all hitting fresh 52-week highs. Joining me now, right here in London, is Sarah Kunst, Clio Capital Managing Director. Sarah, it's so great to have you right here on set with me. Good morning.
Yes, thank you. Good morning.
All right, so Apple shares down on that KeyBank note. I'm going to dig a little bit deeper into that note because there was a lot of nuance in it. So first and foremost, Apple's iPhone sales, they're up 9% month over month, but they're down 15% year over year. Is this meaningful? Is the fact that we're seeing month over month growth meaningful, or is the fact that we're seeing 15% declines year over year meaningful? Which one's more important?
You know, I think that I don't love just sort of looking at the device sales like that is the only metric, because the reality is that you don't need a new iPhone every year. They're not necessarily coming out with these huge new features. They work well, right? Even if you bought a phone 3 years ago, it probably still works well. And we know that in markets like China, they're not seeing that same sort of embrace from the government that they used to have a little bit. And so I'm not shocked by the fact that it's down a little bit month over month, and I don't think that that's a huge warning sign.
All right, can I take you back a little bit of a throwback to FANG? We talk about Magnificent Seven all the time now. So 3 FANG stocks hitting 52-week highs. We just hit on them. But there's one that you don't like, Netflix. I'm not saying you don't like it, but you're not as bullish on it as everybody else. You don't have that same confidence in their business. Why is that?
Here's the thing. I actually think they're doing a great job with their business in that, they're profitable, right? They are a streamer making money. That is not something we are used to seeing. The problem is that most streamers don't actually have to be in the business of streaming. The Disney Pluses of the world can lose a ton of money. The Apple TV Pluses can lose a ton of money because they're not the only one. And so the thing that scares me a little bit about Netflix is that's their only business. And right now they don't have as many hit shows as we've gotten used to seeing.
So you're saying content is still king in your mind. It's not about ads and all these other things that have kind of come into the streaming space, or even, competition on price.
Advertising is so hard for media companies, right? And so the reality is that Netflix trying to become an ad company, what they're doing with the crackdown on sharing has definitely helped in the short term with gains. But there is a question long term of if they don't have hit shows, if it's harder to access it, do people just sort of forget about it and move on to one of their other 5 streaming subscriptions?
All right, we're looking at the chart right now. Netflix up 29% year to date. We just hit on the declines on Apple. So give me a sense, you as through your investor eye. Right now, is this an opportunity to buy Apple? Is this an opportunity to take profits on Netflix based on your thesis?
I would probably take profits on Netflix. They have done a great job of coming back from some of those post-COVID lulls where everybody left their houses. And so it's a great time to lock in those gains if you have them. For Apple, I like Apple. I think it is decently well priced. I don't think it's this big, exciting, sexy company, and I like that about it. It's going to continue to make good hardware.
All right, Sarah, sit tight just for a second. We're going to switch gears just a bit. We want to get your take on what's coming up. Coming up right now, we're going to be switching gears just a bit. Give me 1 second just to get that going. Coming up, Bitcoin and Ether pulling back after seeing some sizable gains yesterday. We go to Europe's largest crypto event for what industry leaders are saying about recent renewed excitement around the space. But first, we have some of your top trending stories. South Carolina is not the only winner in women's basketball. The NCAA championship game between Iowa and South Carolina setting a record with 18.7 million viewers. That is the most watched women's college basketball game since 1992. And I'm from Philly. Dawn Staley from Philly. Congratulations to her. I think she's kind of become the greatest women's basketball coach of all time. Props to her. Shout out to Philly. Okay, another year, another dog-dominated victory. The UConn Huskies winning the NCAA's men's title against #1 seed Purdue, marking their 2nd straight national championship. UConn joins Florida and Duke as the 3rd team with a repeat win since UCLA's reign with Kareem Abdul-Jabbar all the way back in the 60s and 70s. Those teams, amazing. And they may not be winning in basketball, but they're still on top when it comes to price. The cost to attend an Ivy League school next year, wow, surpassing $90,000. The most expensive schools in the league include University of Pennsylvania, my hometown of Philly, Cornell, Brown, and Dartmouth. Stay with us. Much more Worldwide Exchange coming up.
safe.
All right, welcome back to Worldwide Exchange. It is time now for your morning call sheet. We start with Goldman Sachs cutting its price target on Tesla from $190 down to $175 per share. It cites weaker first quarter deliveries and feels this new price target better reflects market conditions. As you can see, shares of Tesla down almost 0.5%. Barclays also downgrading its rating on American Express to equal weight. It cites factors including decelerating loan growth and some softness around consumer spending. Shares of Amex pretty much flat right now in the pre-market. And Deutsche Bank reinstating coverage of Cisco with a buy rating and a $51 price target. It says the recently completed acquisition of Splunk could improve sentiment, and Cisco's upcoming investor day, it might be a positive catalyst. Shares of Cisco up over 0.5% in the pre-market. Time now for your global briefing. HSBC is selling its business in Argentina as it moves to sharpen its focus on Asia. The company will take a $1 billion pre-tax loss in its fiscal first quarter. HSBC is selling the assets, which include banking, asset management, and insurance, to Argentina's fifth largest bank. Blackstone is reportedly close to a deal to take French skincare company L'Occitane private. Bloomberg reports the structure of the transaction is unclear right now, but Blackstone may join L'Occitane's controlling shareholder in taking it private. Shares of the company were halted in Hong Kong today ahead of a potential announcement. They hit a 2-year high in February when those deal talks were first reported. And Berkshire Hathaway is planning to sell yen-denominated bonds, fueling speculation. Warren Buffett is considering more investments in Japan. Bloomberg reports Berkshire will be the first major overseas debt issuer to sell yen bonds since the Bank of Japan scrapped negative rates last month. Shares of several Japanese trading houses, including Mitsubishi Sumitomo, rising between 2 and 3% today. All right, we want to turn our attention now over to the cryptocurrency sector with Bitcoin. Very briefly crossing above 72,000 yesterday for the first time since the middle of last month. Take a look at the move in Bitcoin right now. We just saw it down about 1.5%, trading at about 70,600. Meanwhile, Bitcoin's biggest rival, Ether, stealing just a bit of the spotlight, soaring as much as 8% on Monday, fueled in part by expectations around the approval of a spot Ether ETF. Sarah Coons of Clio Capital still with us to talk a bit about this. A lot going on in the cryptocurrency space. We have the halving with Bitcoin coming up in a few weeks, and also Ether, the idea of not only ETFs, but just the fact that a lot of people see it as a more viable and useful cryptocurrency because you can build apps on it. What's your take on some of these moves that we're seeing?
I think that when crypto's back, it tends to come back across coins. You don't usually just see only Bitcoin, and that's certainly what we're seeing. We've even seen some of those, coins that are a little bit, there's not much utility for them, have a huge ramp up over the last kind of couple months. And so I'm not surprised to see this excitement around ETH. I think that the crypto diehards think that ETH is sort of a more perfect Bitcoin. It's just that the price never quite catches up. But I do think that we're going to continue to see some positive moves in it.
All right, ETH makes it sound so cute. Right now, again, down 1.5%. I think some investors might not think that's as cute. I do want to talk to you about something that we've been debating here in Europe. Again, I was on some of the European shows earlier today. How important are rate cuts to the story of cryptocurrency, specifically Bitcoin? Is there any type of relation between the idea of central banks cutting rates and the rise in Bitcoin?
Bitcoin was supposed to be a non-correlated asset, and someday that might be true, but not anytime soon. I think that when rates go down, there's fewer places to get easy money. There's fewer places to get that safe money from sort of a sweep account or a money market. And so crypto looks like a kind of interesting, safe, relatively easy place to go. So it usually, as we get closer to rate cuts, we do find that people like Bitcoin more. But also, as we get closer to rate cuts, it means, the economy is doing some things that tends to mean that there's more sort of retail investor money going into Bitcoin as well. So
you mentioned retail investor money. Let's also talk about investor money. Not only when it comes to Bitcoin, but also Ether. Again, the idea of an ETF for Ether coming up. Also the halving. How do you see the landscape for cryptocurrency in this first month of the second quarter going forward? Obviously, we have central bank decisions. There's just a lot of action going on in the general markets. What's your forecast for the rest of the month? Will it continue to be an upward trajectory but a bit volatile, or do you see a significant shift in momentum?
One thing you always have to remember about these bigger cryptocurrencies is there are people who bought in at truly kind of zero per coin, and some of them are still holding. And so when you see these highs, you often see a little bit of a dip right after, because the ability to lock in a gain at 7,000 or 70,000 a Bitcoin when you mined it for $1 10 years ago is really, really, really tempting. And so I tend to see that when we do hit a new price floor, we often almost immediately see a dip. And I don't think that that's indicative of much more than people smartly looking at what they stand to make and locking in some gains. So I think it's going to continue to sort of go up and go down a little bit, but the overall trend line is clearly up and to the right.
All right, you know what? I want to put you on the spot a little bit, if you don't mind. If we can put up a year-to-date Bitcoin chart, because we've been talking about Bitcoin for so many weeks, whether it's the ETFs and everything else. I mean, we're seeing over 2 years it's up 65%, but a considerably sharper move just this year, up 66% year-to-date. The halving's coming up again. I believe it's on April 21st. Those are the reports. If you're somebody who's been on the sidelines about Bitcoin, you don't know about it, is this your potential to try to get in and make some money? Do you see the halving having a significant impact on an upside move that, as a lot of people are speculating it will?
It probably will show some price bumps. That being said, the best time to get into Bitcoin is not when it's in the news and not when it's hitting all-time highs.
Oh, that's a pretty clear answer right there. I like that one. Sarah Coons from Clio Capital, thank you so much for joining us, breaking down not only tech, but cryptocurrency. We appreciate your time and your insight, and thanks for being here in London. All right, time now, let's turn over to our Arjun Kirpal. He's live at Paris Blockchain Week, Europe's biggest blockchain and digital assets event, talking to some of the industry's key players. Arjun, over to you.
Good morning, Frank. Well, look, a few things coming out. Firstly, on the Ether ETF application approval, I spoke to the CEOs of both VanEck, one of the Bitcoin issuers, and CoinShares, another Bitcoin issuers. Both told me that they don't believe the SEC is going to approve an Ether ETF at any point in time. My second point of business is I've just sat down, coming off the back of an interview with the CEO of Binance. Now, this is right off the back of course, last year, Changpeng Zhao, the former CEO, pleading guilty to criminal charges with the Department of Justice as part of a $4.3 billion settlement with the DOJ in the US. And part of what the DOJ alleged was a culture issue at Binance. And that's what I sat down and talked to a little bit with Richard Teng, the new CEO of Binance, who addressed some of those issues. He comes from a regulatory background and he's looking to clean up the company. One of the things he said is a lot of what the DOJ alleged was past issues with Binance when they were a younger company, less mature, and his focus now is moving towards greater maturity and sustainability. The direction of travel, he said, is towards much more compliance, and he is focused on building what he called a very robust compliance program. He stressed the work the company is doing with regulators, and really the message he's trying to say is this is a company that's trying to mature, trying to clean up its act here as it moves forward, as part, of course, as the markets continue to be very buoyant. Just on the markets, as you was discussing there, Frank, he was very bullish, saying that actually what's interesting is the ETF combined with, of course, that upcoming halving will support markets for the rest of the year. And even his prediction for Bitcoin at this point was a bit behind where the market is right now. So still a lot of bullishness around crypto markets more broadly, Frank.
All right, Arjun Gopal, live at Paris Blockchain Week. Arjun, great to see you as always. All right, coming up here on Worldwide Exchange, we have the one word that every investor needs to know today. Plus, don't sweat the Fed. That's the advice our Jim Cramer is giving investors around the shrinking hopes around rate cuts this year. Also, this Thursday, CNBC lands in Colorado to explore how Denver and Boulder have leveraged the Rocky Mountain lifestyle to create two powerhouse economies. But that explosive expansion coming with some growing pains. Cities of Success in Denver and Boulder premieres Thursday at 10 p.m. Eastern, only on CNBC. And we are back in just a moment. Worldwide Exchange. It is time now for your WEX wrap-up. Shares of Trump Media extending yesterday's losses, where it dropped more than 12%. The decline brings the value of the former president's stake in the company now less than $3 billion. The Treasury Department is requesting more enforcement powers against foreign crypto providers. They say the sanctions are meant to protect national security from bad actors like North Korea and Russia. Tesla settling a lawsuit over its fatal autopilot crash of an Apple engineer. It comes just months ahead of the EV maker's planned launch of its robotaxi. And the odds for a June Fed rate cut, they're down to 51%. That's the lowest since October. Morgan Stanley's Mike Wilson says stocks are pricing in a no landing scenario, meaning the economy will keep chugging along even with no rate cuts this year. Here's what to watch today. In just a few minutes, we get the latest look at the health of small business with the NFIB survey. In Washington, the House returns from recess today with Ukraine funding top of the agenda for lawmakers. And in tech, Google kicks off its Cloud Next Developer Conference today. Investors, they're hoping for a spark of momentum today as we await that big CPI report. Taking a look at futures, they are now firmly in the green. Looks like the Dow would open up, well, a little bit higher, but the NASDAQ continues to move higher throughout the morning. While the markets continue to focus on prospects around Fed rate cuts this year, our Jim Cramer is telling investors, just be thankful that Powell isn't hiking anymore.
We have a robust economy, so I'm a lot less worried about this upcoming earnings season. When I check the record historically, this kind of job creation without a ton of inflation is about as good as it gets, regardless of where short-term interest rates are sitting. Bottom line, if you're hoping for Fed rate cuts from the Fed, I say maybe don't hold your breath. This economy doesn't need it. Just be glad we aren't getting any more rate hikes.
And for more on this in the trading day ahead, let's bring in Jeffrey Kleintop, Charles Schwab Chief Global Investment Strategist. Jeff, good morning. Good to see you from London. I'm just going to jump right into it. What do you think of Jim Cramer's take when it comes to the Fed? How do you see rate cuts in the economy and also the stock market being tied together?
You know, I think there are certainly stocks in the market that are looking forward to the release of liquidity that could come from Fed rate cuts. But Frank, I remain focused on the one place in the world where they're hiking rates. That's Japan. I'm still a big fan of Japan's stock market, not just because they're hiking rates, but because of the improved economic momentum coming from the manufacturing recovery and a lot of things in place there in Japan sustaining that, plus more attractive valuations than what we see here in the U.S.
Yeah, Jeff, you've been talking about Japan for quite a while. I think you're one of the first guests to really highlight the opportunities Japan here on Worldwide Exchange. I want to get to your WEX word of the day. You're actually kind of fitting in with one of our themes today, commodities.
Oil is my WEX word of the day. At noon, we get the monthly oil report from the U.S. Energy Information Agency, and the energy sector has led the stock market over the past month. Oil demand estimates may be revised higher in today's report, given the strengthening global economic data, and that could push oil to new highs on the year, along with the geopolitical concerns we're all well aware of, war returning to the Middle East, oil tankers under attack, Ukraine targeting Russian energy infrastructure, and so on. Even a temporary move higher could further boost the energy sector, but at the same time, a major and sustained upward move in oil prices could negatively impact the inflation outlook and worsen the outlook for rate cuts.
You know, Jeff, you just took the words out of my mouth right there. Oil's continue to rise. Look at WTI up double digits year to date. How do you see oil impacting not only CPI, the report they're waiting for tomorrow, but going forward as we get closer and closer to June? Is oil, in your mind, one of the factors that the Fed is going to see as obviously it's inflationary, but see as possibly something that they can overlook as they've overlooked a stronger than expected job market and some other stronger than expected economic reports? Or will that influence their rate cut decision?
I think it's getting harder to overlook a lot of the factors in inflation that are remaining very stubborn. And oil is one of those. It goes into everything. We know housing's been an issue for a long time, but now you've got other commodities, and not just oil, but metals and many other inputs. Now as the manufacturing sector ramps up, that could become more important for the Fed. So I wouldn't say they're just going to dismiss it and look at CPI X energy. I think it's going to become an important factor.
All right, let's get back to the markets for a minute. Obviously, earnings season's about to kick off. Also, yesterday was the eclipse. Jeff, you're really on topic today. So you're looking at what you're calling an earnings eclipse. We're going to show the audience this chart. Just explain to us, why is this important for investors, and how should this influence, if other people kind of follow along with your thesis, how should this influence other people's investment strategy?
So in the first quarter of this year, it's expected by analysts that it will be the last quarter that the Magnificent Seven earnings growth there in yellow is positive, while it's negative for the rest of the stock market. In fact, that by the fourth quarter of this year, relative earnings growth is expected to flip, with the rest of the world expected to eclipse the growth in the Mag 7. And this may further a shift away from the Mag 7 to other sectors where earnings are recovering, like financials, energy, and materials, some of which have really shown signs of life here lately.
Jeff, we got to leave it there. Thank you very much. Jeff Kleintock from
Fred.
Charles Schwab. Great to see you. That's going to do it for us here on Worldwide Exchange. We have Squawk Box coming up next. Thank you for watching.
NBC.
Good morning. Stock futures are relatively calm right now, but gold trading at another record high. We're going to show you what is moving right now. Plus, Elon Musk saying AI is getting smarter much faster than you might even think. Those new comments straight ahead. Plus, Congress is back in session. We're going to tell you what is on the legislative agenda and get a live report from a defense contractor awaiting word on a Ukraine funding bill. It is Tuesday, April 9th, 2024, and Squawk Box begins right now.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick along with Andrew Ross Sorkin. Joe is off this week. Let's take a look at what's happening with U.S. equity futures at this hour. You'll see right now that there are some green arrows. These are pretty modest advances. Dow's indicated up by about 4 points. The S&P indicated up by 5 points. The NASDAQ indicated up by about 30. That matches what we saw at the close yesterday, where the Dow and the S&P were down, but just barely. NASDAQ was up, but just barely. Why don't we also take a look at what's been happening with Treasury yields? Looks like the 10-year this morning is below 4.4%, but just barely, 4.39. The 2-year is sitting at 4.77. Gold prices, which we've been watching pretty closely, are indicated up another 1.33%. That's a gain of another $31. Year to date, you see it's up 15%. 2000 382. And then if you're watching Bitcoin, the gains there have been much more pronounced. This morning pulling back a little bit. Yesterday, though, Bitcoin was above 72,000. This morning it's sitting at 70,452. And I know oil prices have been picking up some steam as well.
Meantime, we talk about AI practically every, I don't know, 20 minutes on this show? Somehow.
Probably more frequently.
Even more frequently than that. It could be a drinking game. And we're going to continue that game right now in a different way because Elon Musk is speaking out about artificial intelligence. In an interview on his platform X, Musk saying his guess is that we are now going to have AI that is smarter than anyone human, probably, he says, by the end of, you ready for this? Next year. And he said within the next 5 years, the capabilities of AI will probably exceed that of all humans.
I don't know if that's commentary on the intelligence level of the AI or on the humans.
Ooh, burn. I don't know. But look, a year from now, that's fascinating. If it could really be that smart that quickly, you know, Sam Altman has talked about ChatGPT-4 at least as what he calls sort of an incompetent helper, which is to say that it's good, but they're a little incompetent. Right? They always do something that's like a little wrong. Like the answer's not always exactly the way it's supposed to be. So yes, are we a year away from the incompetent helper becoming a very super competent,
but if that's the case,
superhuman? I don't know.
If that's the case, if Elon Musk sees it as being smarter than any human by the end of this year, incompetent helper is going to get a very quick upgrade.
I may have missed it. I think we 5 years for smarter than anybody, right?
Oh yeah, but smarter than, what is it? Smarter than, you're right, 5 years to smarter.
I think he thinks it's
going
to be right. Smarter than some humans or a human
than
in a
any
year.
one human, but than any one human. That's
but
still gonna be,
right.
But if it's smarter than any one human, you're still going to have a better than an incompetent helper, I think. We'll
This
see.
is true. I don't know. It's possible. I mean, at the rate this stuff is going, I think I was recently playing with Claude, which is the Anthropic version of ChatGPT, and it's better. I mean, it is materially better. It can do stuff that's pretty shocking.
Is it? You know how you can have the smartest IQ person around, and they're not always the most.
And maybe not the most street smart person,
and they don't have EQ.
You know, we haven't gotten to the point, and this is what I think is going to happen in the next year. We haven't gotten to the point where it can do multi-step problems, but we haven't gotten to the point where it's doing like a 10-part, sort of 10 permutations of things that all have to happen at the same time.
Right, and just the emotional levels too, being able to read people. I don't know, maybe it's there, maybe it's not.
I don't think that part's there yet, though I think Claude is actually better than most of the others on that stuff. In fact, people are using it. We've talked about this before, about the psychological...
for psychology.
For psychology and other things.
To talk to, right.
In a way that's different than ChatGPT.
Yeah.
So.
Okay. We also have an update right now on the collapsed Francis Scott Key Bridge. That process of removing containers from the ship that crashed into the bridge has begun. That process is expected to take weeks just to remove all of those containers, tow the ship, and then reopen the Port of Baltimore for marine traffic. Engineers have said that the goal is to restore normal capacity access to the channel leading to the Port of Baltimore by the end of May. Very difficult process, though, and dangerous to boot.
Meantime, former President Trump has now lost an appeal to delay his upcoming criminal hush money trial. A judge denied his request to move that case to another court on the same day that his attorneys filed it. Now, Trump is charged with falsifying business records to conceal a payment to porn actress Stormy Daniels shortly before the 2016 presidential election. It's a case that has not gone, it's not disappeared yet. Jury selection for that trial is set to begin next week in New York, and I'm sure we'll be hearing a lot more about that. Meantime, take a look at this, because shares of Trump media falling more than 8% in yesterday's session, wiping out about $2.8 billion in value. The stock has now fallen below the March 22 level when it went public via SPAC, that SPAC combination. The company now has a market cap of about $5 billion, despite generating just $4.1 million in revenue in the last year. And we've talked a lot, including with the great Barry Diller, about the valuation of that. And I think he had some choice words about that. So we will await Becky, who's drinking a little bit of water this early hour to catch up, but we'll talk a little little basketball.
I don't know if you stayed up last night to see this.
I did not.
I stayed up. I watched the first half.
Okay.
I bet at halftime because it was a late game. Didn't start until 9 Eastern time. But this was really something to see. The first half was pretty close. That's not what happened at the end. UConn actually winning the men's NCAA championship in a very dominant fashion in that second half. It becomes the first team to win back-to-back titles since Florida back in 2006 and 2007. The Huskies beating their opponents in the tournament by an average of 23.2 points, really dominating this entire time through the NCAA brackets. Purdue's star, Zach Edey, scored 37 points. That was the most points ever scored in a losing effort in a national title game. He was pretty phenomenal, but UConn just had waves and waves of players who wore him down. The defense focused on taking away scoring opportunities from the players surrounding Edey. That was a strategy that really paid off. And again, in the beginning, they have two big men who were playing on this. Edey is so dominant and was able to score 20 points within, the first minutes of the first half on this. But really, they exhausted him, and UConn had this strategy, and it's just waves and waves of going through it. An amazing effort all the way around, really something to see. In the meantime, record ratings for the women's tournament. Sunday's championship game between South Carolina and Iowa drew 18.7 million viewers. That made it the most watched basketball game, men or women's, college or pro, since the 2019 men's title game. It was the second most watched women's sporting event outside of the Olympics, behind the 2015 World Cup final between the United States and Japan.
When we come back, a lot more right here on Squawk Box. We're going to talk about Tesla because its shares rising now after CEO Elon Musk saying the company's robo-taxi would be unveiled 4 months from now. Mark your calendar. I believe it's on August 8th. We will talk to an analyst about all of that next and what it means. And later, Dr. Scott Gottlieb, he's going to be weighing in on a new study of cancer drugs that shows some fast-track treatments remain unproven years after their approval. It's a fascinating story. You don't want to miss this. We are coming right back in just a moment.
Ben.
Welcome back, everybody. Tesla is settling a lawsuit over an autopilot crash that killed an Apple engineer in 2018. The EV maker has filed to seal the terms of the settlement from the public, including any compensation fees paid to the family. Tesla will now avoid a months-long trial around its self-driving technology, just months ahead of its robotaxi launch, which Musk says is coming on August 8th. In the meantime, Tesla co-founder and former CEO Martin Eberhard told investors at an HSBC summit in Hong Kong overnight that he is amazed, in his words, that Tesla gets away with rolling out autonomous driving given its history of fatal accidents. Again, those were in his words on this. The stock was up about 5% just on the idea that robo-taxis are coming in August, and that's something that we're going to be talking about right now. Joining us to discuss this is Tom Narayan, who is Global Autos Analyst at RBC Capital Markets. Tom, thanks for coming in today. So this was pretty big news as far as the market was concerned, the idea of these robo-taxis actually having a date.
Yeah, definitely. I think it was a surprise, but I don't think it was a surprise for investors who are long Tesla stock, or certainly sell-side analysts who have buy ratings on it. It's about 60% of my valuation, and has been for over a year, is robo-taxis, or really it's autonomy. So that includes FSD to some extent. So yeah, I don't think it was totally
self-driving for those uninitiated on the FSD.
Right. It's like a level 2+ assisted driving. And then robo-taxi is completely level 4, drives you completely.
The idea that it's coming in August, does that hinge on that valuation too? Or is this something that you could be a little flexible with that timeline? Because that's been the knock before, that timelines are laid out and then not met. If that timeline's not met, do you still think the same thing about your valuation call?
Yeah, I do. I mean, my valuation's based on a 2040 year revenue target, and then I discount that back and I apply a multiple there. Similar to FSD, which is like a 2030, 2035. I mean, if it's August 8th, 2024, if it's next year, I mean, robotaxis aren't going to be mainstream for a long while.
Right.
I do see why he's doing it, where, I mean, he's trying to highlight the value that this could bring. It's huge, right?
But when do you think it could actually roll out on the streets?
We have a robotaxi service in San Francisco with Cruise and Waymo, right? I don't think it's going to be in some big scale anytime soon.
Right, but the difference, I'm curious if you agree with this. There is a view among those in the sort of engineering community that the reason why the Waymo and Cruise products work is because they use LiDAR right now. You roll your eyes, but I'm just saying this is the whole thing. LiDAR, by the way, is effectively like a laser that's pointed at different places, and that gives you feedback about what's actually around you. Elon has decided he wants to do this solely with cameras and without the radar. It's just a completely different approach. And as a result, there are some people who have a view that that is not fully ready for full prime time, full self-driving, right. And that's the whole question. And so my question to you is, do you believe that the robo-taxi version of the Tesla is running solely on cameras, or somehow is a shift in strategy?
I could envision him pushing cameras initially. That's what FSD is based on. Could he capitulate on that and pivot towards using LiDAR eventually? Sure. Right. I mean, he's changed his mind before on that.
But that's a long delay, though, just in terms of getting things out on the street. If you're
I mean, it could depend on where we have this product. Is it geofenced? What cities? Where is it? Initially. But at mass scale, we've heard Mobileye is a company that has a product that's building with VW, the ID Buzz, that uses LiDAR. So, I mean, we'll see. It adds a layer of redundancy. Theoretically, it's not 100% necessary. But yeah, it depends. You'll have to re-engineer cities to make this work in the future. You can't drive.
Re-engineer cities how?
Well, like, imagine a robotaxi in the Champs-Élysées right now, right? The Arc de Triomphe. It's impossible. So some cities, I mean, they're already doing that in New York, banning private cars in certain streets. You have it on Oxford Street in London, where only certain types of vehicles, some pedestrian areas are separated. Cities are going to change dramatically in the next several years or decades. Regulators are going to mandate that we use these things because they save lives.
There have been problems along the way, though. As the former CEO, the co-founder of Tesla pointed out, look, there's surprises. It's not just Tesla that's had the issues with this. You've got GM kind of rolling out their taxis with safety drivers now in it because of accidents they've run into too. Grand scale, is it going to be safer eventually? Probably. You have people who cause accidents all the time, but the liability factor is a huge one that is going to weigh on the manufacturers of all these cars.
Sure, and that's been the real overhang of the difficulty. BMW always says the moment there's a headline that says BMW kills human, we're finished, right? But the reality is this saves, literally it'll save 2 million lives a year.
Right.
100 million.
Of being the one that kills somebody. I mean, there's still the legal framework you have to live within, and the outrage of the family that loses someone.
But what about the outrage of the 2 other million people who die, right? So,
but let me ask you this. I've asked Elon this question specifically and personally, which is, what is the politically palatable number in your mind in America of people who are going to die because the computer effectively is going to malfunction? That is actually the fundamental question. So right now, if you believe that 40,000 people die in a vehicle every single year in America, if I told you that 5,000 people were going to die every year in America, but a computer was going to do it because it malfunctioned, would you say that's a good outcome? Would you say that's acceptable to you? I don't know. That's why I'm saying it's not so clear. If you got the number from 30 or 20, I don't think that would be politically palatable. Right? So if you got it from 30 to 200, that might be politically palatable.
We know that 94% of accidents are caused by human error, right? So that number won't go from 30 to 5,000. It'll be a lot smaller. We have to remember other industries that's happened. Aviation, there were tons of crashes early on. Trains, and over time, those reduce significantly.
Spockian view,
Right.
Dr. Spock view of all of this, but logic doesn't always prevail when you are talking about, and when liability comes and there are deep pockets of a manufacturer behind it, that's what the lawyers will go after. And for the family that loses it, it's, again, I understand the Dr. Spock mentality, but that's not how things play out in reality.
It'll be difficult early on, right?
Yeah.
But we'll get there eventually. Plus, look at China. They're moving full steam ahead with this, right? That's a Spockian view, and it works.
It is, and that's the way when you have centralized planning government, that can kind of roll into that.
We'll get there.
Your valuation call, okay, so the way you roll this and roll this back, right now you're looking for, your price target is outperform at $298. Did you really raise that from $297? Or am I just reading that wrong? You raised it $1?
Yeah, but that was because of car business. I raised that like a little bit ago, but yeah.
Okay, so your long-term prospects for full self-driving, for the autonomy portion of this, for the robo-taxis, that's a huge part of the valuation. In the meantime, you've got the street also looking at deliveries that were a miss.
Sure.
So how do you kind of wrap up the immediate miss versus the long-term promise for the stock?
Sure, and I do acknowledge the car business does matter, even though it's only 10% of my valuation. Another 10% is energy storage. Nobody's talking about that. Okay. Incredible opportunity. And then the rest is autonomy. If you look at the delivery number, what did they do? 387K, right? Not that great. But the quarter before that, they did a 485.
Sure.
So there was that pull forward that happened, right? Because the Model 3 expiry and IRA. You had those 2 issues in Europe with the arson and then the Red Sea issue. They delayed the Model 3 on purpose because they were trying to get the Highland out. China, we just saw the data that came out this morning, rebounded in March. They actually performed okay, but the whole market kind of softened. So I think you have to look at a lot of these things. Model Y is being refreshed in the context of a perfect storm in Q1. They did this FSD trial. That could reignite demand. So I don't know. I think it's too early to start freaking out about this. Deliveries do matter for investors, largely retail stock. I totally acknowledge that. But let's not lose sight of the bigger picture here, which is autonomy, energy storage.
Tom, thank you for joining us. Tom Narayan.
Okay, coming up when we return, Google looking to turn down the temperature on the company's internal message board. We'll bring you that story right after the break. And then later, Japan's Prime Minister visiting the White House later today. We're going to talk to the U.S. Ambassador to Japan, Rahm Emanuel, in the next hour. Squawk Box coming right back in just a moment. Welcome back to Squawk Box this morning. Google is looking to turn down the heat on its employee message board. I imagine a lot of companies are trying to do that as tensions have been simmering over the war in Gaza. It's according to a New York Times report that said the company planned to eliminate virtual thumbs down that employees could give to their colleagues' posts. It'll also remove metrics that allow people to see how popular other employees' posts have become. Some employees worried the changes would censor their free expression or turn the beloved message board into a dull corporate tool, but I'm
That's
sure
exactly
if you're
what it's going to do.
a manager,
That's
you
probably,
prefer that it's a
right.
dull corporate tool.
Right.
I
Sounds
don't
like
know.
it's doing exactly what it's intended
Right.
to do.
For those of us who use Slack or Teams, though, I mean, there is the little icons that you can do the up and down and the thumbs up, and you can.
I know, but it's again, it's this popularity contest that
Right.
social media has kind of turned everything into. I guess it's one thing when you're at work and you're adults. I hate it when it's done to kids,
Right.
and they're put in that thing. But it's not that nice at work either, especially if you're looking at anti-bullying stuff or.
If people are thumbs down in your
It's essentially
positions, right?
you stink, right? That's.
If you're putting out your perspective, I don't know. I don't know. I think if you put out your perspective online, you're sort of asking for a lot of something.
Right, but as a workplace, do you want to be the one that's doing that? If you're doing
Yes.
it online as adults, fine, but do you
Right.
really want to be the workplace saying, here, let's grade and rate everybody?
Right.
Maybe not. All right, when we come back, with Congress back from break, the battle to approve new aid for Ukraine gets back on track. We will take you live to Rochester, New York, where one defense contractor is eagerly awaiting that funding bill. Right now, as we head to a break, let's take a look at yesterday's S&P 500 winners and losers. Good Good morning and welcome back to Squawk Box. We're live from the NASDAQ market site in Times Square. And on this Tuesday morning, you are seeing some very modest advances in the futures. Yesterday, the NASDAQ was up, the Dow and the S&P were down, but just barely. We're talking about 5 points, 11 points. So very modest declines. This morning, some pretty modest advances.
Okay, let's talk about this. We're going to go to Washington here because Congress is back in session this week, and aid for Ukraine high on the legislative agenda. Emily Wilkins joins us from Rochester, New York, where one defense contractor is awaiting that funding bill from lawmakers. Good morning.
Good morning, Andrew. Absolutely. I mean, funding for Ukraine, Israel, the bridge in Baltimore, plus authorizing a government surveillance measure, all on the agenda for Congress for the next 2 weeks as lawmakers are returning to D.C. And so let's start with the big deadline thing, because Congress is racing against the clock to pass an update to the Foreign Surveillance Intelligence Act by April 19th. Now, previous attempts to update this measure have been sidelined between clashes from lawmakers who want more transparency for consumers versus those who say that that could weaken national security. Now, Speaker Mike Johnson is working on a plan to pass the billions in funding for Ukraine, and I'm here today at an L3 Harris facility that would likely get some of that funding to make tactical communication radios for Ukrainians. Now, of course, Johnson's big challenge in getting that funding is getting a majority of House Republicans on board, and he's looking at options like making part of the aid a loan, but we're not expecting a plan this week. And speaking of additional funding, Congress is also going to have to consider approving spending to rebuild the Francis Scott Key Bridge in Baltimore. And in the Senate, Majority Leader Chuck Schumer has laid out a sizable to-do list. TikTok, kids safety online, allowing the cannabis industry to access banking services. But before any of that, the Senate is required to handle the House's impeachment of Homeland Security Secretary Alejandro Mayorkas. Now, we are expecting the Senate to dismiss this fairly quickly, but it's going to take time to get the procedure started, and that is time they're going to take away from other issues. Andrew?
Thank you, Emily. Stick around for more on the legislative agenda. I want to bring in Julie Grace, Rutsky Axios' congressional reporter. Help us sort of handicap, if you could, Julie Grace, where you think all of this is headed. What's the top of the list? What's going to happen and what's not going to happen?
Well, Mike Johnson's in for a rough week. So there's a divide right now on FISA between privacy hawks and national security hawks. So they're going to kind of be working through that on a conference meeting this week to kind of walk through that. They've pulled the bill twice before. So their leadership's kind of trying to get that done. Ukraine funding, that's a biggie. Leadership's hoping to unveil something and get something passed before Memorial Day. That being said, Mike Johnson's facing the biggest threat to his gavel yet. Marjorie Taylor Greene introduced a motion to vacate. She hasn't pulled the trigger on it yet, but she's kind of been adamant that if this Ukraine funding comes to the floor, that conservatives could oust him.
Can I throw something into the pot here, given that we have so many different issues that are already swirling? TikTok, McConnell, what's going to happen? Schumer.
Well, I think McConnell coming out in favor of this TikTok bill kind of put some pressure on Schumer. Now, Schumer's going to meet with Cantwell and Senator Warner today to kind of discuss moving forward, and there's been a push for public hearings. But I think that the McConnell push there, it definitely kind of ramps things up to get things moving on the Senate side.
So what do you think the chance? So if you were to literally handicap it, are we going to be banning TikTok before the election?
Now, there's still some pushback, but I've talked to a number of senators that have kind of said with some certain provisions changed that they could see something happening there. So we'll see how negotiations go and whether the House bill gets amended there. But it's going to be interesting to see how it all plays out.
Can we talk about the bridge in Baltimore as well? And I'm curious what your view is, as well as Emily's, in terms of federal funding for that. There seems to be some back channel battling, at least, about who's really supposed to pay for it. How insurance companies are going to handle it, whether they're going to get the private sector to pay for some of it. What's your thought? Or do you think that the government's just going to pay for all of it?
Now, the Freedom Caucus.
Well, you saw the House Freedom Caucus come out, and basically, I think we're on the same point here. You saw the Freedom Caucus come out, say, hey, look, we want to see what insurance is going to have. They want to see what other routes there are for spending. But at this point, President Biden made it clear when he visited Baltimore last week, this is full steam ahead on government funding. And it's just really interesting, Andrew, because in the past, you've seen Congress say, okay, a bridge collapse, no problem. We're going to have the funding to repair it. At this point, it'll be interesting to see how widespread that pushback is and whether that means that we are going to be facing some delays in getting this funding to the Francis Scott Key Bridge.
Julie Grace?
Absolutely. absolutely. So the Freedom Caucus, I would agree with Emily's takes on that. I think the Freedom Caucus, we haven't seen the full extent of whether that's going to stem out to other conservatives like the RSC on pushback there. But whether Johnson can get the majority on this, which was kind of an issue with the most recent funding packages for him, is going to be an issue, which has been kind of conservatives, one of their biggest complaints with him. So I think it's going to kind of take some maneuvering on his end.
And then finally, I just wanted to actually ask you both about where you think things stand. We talk about the Middle East, and we've been talking about actually the price of oil the past couple of weeks, about what's going on there. How do you see things playing out there, not really there, but as it relates to here, in terms of funding and the like, and the overhang of that conversation in all of these conversations that we're talking about now?
Now, I've spoken to a number of...
We talk about...
Oh, I'm sorry, again. Julie Grace, why don't we go,
we
go
talk
to you,
about...
and then I'll go to you, Emily.
All right, so I've talked to a number of members of leadership on this, on the Republican side of things, and they've said, despite Biden's calls for a ceasefire there, they're going full steam ahead, planning to bring up an Israel package, and it'll be interesting to kind of see how Dems vote on that after Biden's comments, but Republicans are kind of adamant that they're going to continue to show their support for Israel there.
Emily?
Yeah, and we talked about Ukraine funding, and of course with Ukraine, that package also included funding for Israel as well as funding for Taiwan. And yeah, it's going to be very interesting to see how Democrats approach this package. I mean, certainly there are some concerns about that funding to Israel without having some wider consideration for what's been happening in Gaza and in Palestine right now. So it'll be interesting to see exactly how all of those dynamics come together. Certainly, if you're going to be passing Ukraine along with Israel, then you have a lot of different juggling to do as far as getting different constituencies on board and making sure that there really are enough votes to get any sort of package across the finish line.
Okay, Julie Grace and Emily, appreciate your time this morning, your perspective and all of it. And Emily, good luck at the factory today. Thanks, guys.
When we come back, Dr. Scott Gottlieb will join us on a new study of cancer drugs that shows some fast-track treatments remain unproven years after their approval. And a reminder for you, you can get the best of Squawk Box in our daily podcast. Just follow Squawk Pod on your favorite podcast app, and you can listen anytime. Squawk Box will be right back.
Jim.
Welcome back to Squawk Box. A new study finding that some cancer drugs fast-tracked by the FDA's accelerated approval program remain unproven. This now after 5 years of those approvals. Joining us right now with more on all this, some shocking news. Former FDA Commissioner Dr. Scott Gottlieb is, of course, a board member of Lumen and Pfizer and a CNBC contributor. And this is a surprising one, Doctor, only because you'd think that if it was approved, there would be substantial data to support it. Now there's not. What's supposed to happen?
Yeah, well, there is data to support it. Remember, this is the accelerated approval program. So this program was created to give patients with life-threatening disorders who don't have available therapy, for whom there's no other drugs approved to treat their particular condition, earlier access to promising drugs. It was originally conceived in the heyday of the HIV crisis to give earlier access to HIV medications. Most of the medications that are approved under accelerated approval now are cancer drugs. 85% of drugs approved under accelerated approval are cancer drugs today. And these drugs are approved on the basis of measures like tumor shrinkage or progression-free survival, which is the ability to survive with your cancer without seeing it progress, but not on overall survival. So they're approved on the basis of what we call a surrogate endpoint that's reasonably likely to predict clinical success. Clinical success meaning the ability to live longer. And so tumor shrinkage or progression-free survival are seen as surrogates for overall success. Now, under the law, they're required to go back and prove after approval that they can be a clinical endpoint. They can hit a clinical endpoint like overall survival. The lament of this particular study isn't that these drugs aren't completing the post-market studies that they're required to do, although many drugs don't. It's that when they complete those studies, they're not proving overall survival. They're proving things like progression-free survival or response rates. And the problem is, the challenge is that it's very hard after a drug's approved and on the market for a life-threatening condition to prove overall survival under the construct that FDA currently requires, which is a randomized placebo-controlled trial. Because if you're someone facing a terminal cancer and there's a drug that's been demonstrated to shrink tumors or prolong progression-free survival, you're going to want access to that drug. You're not going to want to enter a placebo trial, a randomized placebo-controlled trial that would be required to demonstrate overall survival. So I think the bottom line is I think we need to think about different constructs post-approval that would allow the data collection that we need to demonstrate clinical benefits without requiring randomization to placebo. And those constructs exist. We just need to start adopting them.
Scott, I'm confused. They're conducting the studies and it's not showing those results, or they can't find anybody to sign up for these studies because no way, I'm not going to take the risk that I get the placebo.
Yeah, it's mostly the latter. If you look at this study, I think the particular lament of this study was that it was the latter, that people are doing these studies and they're not demonstrating overall survival, that the drugs are getting full approval on the basis of things like response rates or progression-free survival. There are certainly cases where the companies either don't complete the studies or the studies don't show any benefit at all. And we've seen FDA get more aggressive in recent years at withdrawing accelerated approval drugs that don't meet their confirmatory studies, that don't meet the confirmatory benefits that they need to show. In fact, one was withdrawn from the market about a week ago. Amylyx's drug for ALS was withdrawn after it failed to show a confirmatory benefit, clinical benefit in a post-market study after an accelerated approval. So it's both, Becky, but I think this particular study is mostly the latter.
That's two very different circumstances. One is the drug doesn't work. The other is nobody wants to sign up for a test or a study where you don't get the drug because it is so miraculous.
I think that's right. What the study pointed out, what this particular study pointed out, was about in half of the cases that the drugs go on to fulfill a post-market requirement and get full approval. The full approval is on the basis of something other than overall survival in the setting of cancer drugs. I don't want to diminish the fact that some of these drugs don't go on to confirm any benefit, so the studies don't work. The studies fail to enroll. I think that's the challenge here. That's really the point, in my view, is that we need to design constructs for collecting evidence post-approval that patients are willing to enroll in. Right now, FDA historically has asked for a lot of studies that have been very difficult to enroll, and they haven't enrolled. The agency's gotten a lot better at that in recent years. They're relying much more on real-world evidence to collect post-market data to confirm these benefits of these drugs. But as they do that, it's going to get harder and harder to demonstrate overall survival in the post-market setting. So I think people who believe that these drugs after accelerated approval should go on to demonstrate overall survival they're going to be disappointed because it's going to be hard to do after a drug's already on the market for a life-threatening condition.
Hey, doctor, I want to pivot and ask you about a different headline that I don't know if it's making me nervous or what. It's just, there's all these headlines about the avian flu in dairy cows, and I'm trying to understand what I'm supposed to think. If you go to the market, you buy some eggs, you're supposed to get pasteurized eggs, you're supposed to get the organic egg. What are you supposed to do here?
Well, look, the spread on the farms right now between cows does appear to be happening through the milking devices. And so the virus itself appears to localize in the udders. This is speculative, but this is what some people believe. And as the cows go in to be milked, that's how the virus is being transmitted between cows. If you buy pasteurized cheese or pasteurized milk, you cook your eggs, you should be fine. So I think people who consume dairy products shouldn't have any concerns about consuming those products as long as they're consuming them thoughtfully. I wouldn't be consuming raw milk right now in this environment. I wouldn't consume that under any circumstance, but I certainly wouldn't consume it in the current environment.
I hear you on that front. That's not a message that I've heard kind of broadly broadcast. That's really good to know. If it's pasteurized, you should be fine.
Well, you will be fine. I mean, it's not even a doubt. Pasteurization is designed to kill bacteria. It kills worse bacteria than this virus, or things that are harder to kill than this virus. So the pasteurization process will eliminate any risk.
Are we just, we're just talking, should we just be thinking about cows in this case? Or I thought we were supposed to also worry about chickens and eggs.
Well, look, it's been on poultry farms for a long time. We need to remember, while H5N1, this avian flu, has been around since the late 1990s, like coronavirus, it evolves, it mutates. The particular strain that's infecting the cattle right now has only been around since 2020. So this is a newer strain. It predominantly hit poultry, and now it's starting to migrate into mammals. So we saw it in foxes and otters. Now we're seeing it in cows. You know, it is concerning to see it move across species, but it's been around for a while. There's only been about 13 human cases with this particular strain. Most of them were very mild. 9 of them were just picked up incidentally because they were doing routine surveillance on poultry farmers. So there hasn't been a lot of experience with this particular strain, but it has predominantly, until now when it hit the mammals, it has predominantly affected poultry. There should be a human health risk from the infections in poultry. They've been fairly vigilant at detecting this in flocks and culling flocks. And again, there's no risk to eggs as long as you're properly cooking your eggs. I wouldn't be consuming raw eggs under any circumstance. You know, this is an increased risk, but there's always risk associated with doing that.
Okay, and final question. I don't know if you saw the eclipse yesterday. There's a whole bunch of people online who wore the glasses properly who are now saying that their eyes hurt today. I don't know if you saw this, and I don't know how much they're supposed to worry or not worry, or whether they're, if they're supposed to do anything. You have a thought?
Yeah, look, if you wore proper glasses properly, there should be no health risk. There should be no concern. Maybe perhaps they have eye strain for just staring through those glasses for such a long period of time, but there shouldn't be a concern with any damage to the retina if you wore those glasses properly.
If the glasses were properly made, I think they had to be certified to a certain standard. If you bought subpar glasses, maybe that could be the problem?
Perhaps, but I think most of the glasses that were available online, I certainly went online and bought a pair of glasses from Amazon. I think it was, you know, fairly straightforward how to discern the proper glasses. So I'd be surprised if a large portion of the population wore
basically
glasses that
if you
were
could
fraudulent.
see anything out of the glasses when you weren't staring directly at the sun, that's the problem.
But then there were a lot of people. I was on the street when this happened. There were a lot of people who were passing glasses around to each other, and then other people who were doing looking down, looking up, looking down, looking up. Right? I mean, that's what was happening yesterday.
Operator.
Yeah, the damage occurs. I don't want to downplay the risk of staring at the sun. Certainly, the damage occurs with sustained, you know, exposure to that. But by sustained, I mean, you know, up to a minute. So if you just took a quick glance for a few seconds, that's not going to to any damage.
Can I ask, actually, I need to ask a question on behalf of my children, because they made a point yesterday and I didn't have a good answer for them. They said, Dad, is it worse to just stare at the sun on a regular day than it is with the sun blocked? And I said, well, I would think just staring at the sun just by itself would be actually probably worse, but maybe I'm missing something.
No, you're not, but the reality is you can't stare at the sun on a regular day, and so that's why people don't do it. During a lunar eclipse, you can stare at the sun, so people are able to do it, and then they receive the damage from it. Try staring at the sun. Don't try staring at the sun. I don't recommend it. But it's impossible to look at the sun for any sustained period.
Dr. Scott Gottlieb, it is always good to see you. Thank you, sir.
Thanks a lot.
When we come back, college application chaos, we're going to talk about the delays for the financial aid form, the rising cost of attendance, and uncertainty over student loan relief. That's next. And later, White House economic advisor Lael Brainerd will join us on the latest funding from the CHIPS Act and much more. Right now, though, as we head to a break, here's a look at the U.S. equity futures this morning. Right now, a little bit of pressure. Dow futures off by about 32. The NASDAQ down by 15. S&P futures down by just 3. We'll be right back. The Biden administration has unveiled a new student debt relief plan that could aid as many as 30 million people if it survives expected legal challenges. Students are facing what many are calling the most tumultuous college application season in recent memory, with financial aid application delays, evolving test optional policies, and much more. Joining us right now to help make sense of it all is Angel Perez, the CEO of the National Association for College Admission Counseling. They have 27,000 members, including high school guidance counselors and admission officers. And thank you, Angel, for being with us this morning. I'm going to set aside the whole loan forgiveness part for now, because I think that's quite a bit more controversial. Why don't we talk about the other issues that are happening right now that are making it so complicated? There were changes to the financial aid forms that were supposed to be put through. Those were delayed, and now as a result, Families don't know necessarily how much financial aid they can get. The colleges don't know which students are going to come because nobody can really get any of this stuff together without that information.
Yeah, it's a complicated year. The Department of Education unfortunately had several technical glitches as they were trying to redo the financial aid application this year. So colleges have information, the data they need to make decisions about financial aid. That has been delayed, and as a result, a lot of students aren't going to get their financial aid awards until a little bit later this year.
What does that mean in reality? What does it mean for the families that are trying to figure this out? What does it mean for the colleges that are trying to get their class count straight?
Yeah, it's a lot of confusion, unfortunately, for families. First and foremost, if families have a really complicated financial aid situation, some of them have not been able to submit the application yet, so the department is working through that. But colleges and universities are trying to work as quickly as possible to try to get students financial aid awards. Obviously, they can't do that if they don't have the data from the financial aid administration at the Department of Education. So this year, there are a lot of colleges that are actually extending their deadlines. Typically, the deadline for enrollment in the United States is May 1st, but you will see that a lot of colleges and universities are extending those sometimes by a few weeks, sometimes by a month. This is the year to be patient. There's a lot that we still don't know.
Easy to say unless you're the family that's actually dealing with it. I can understand the frustration that it's brought forth. That's on top of confusion with the idea that some colleges are now saying we want standardized tests again after many of them got rid of those during the pandemic. So that changes things. And then you've got this idea of student loan forgiveness, which keeps being floated out there and taken away. It's fairly controversial because, of course, the debt's not being forgiven. It's being picked up by other taxpayers. What's your take on it?
Well, actually, my organization believes that any kind of support and relief that students and families can get around student loans is critically important. The reality of the matter is in this country, we are overly reliant on student loans to fund higher education. Most other countries provide a little bit more subsidy for families, and so we're delighted to see some relief, even though we know that it's controversial. We're also really big advocates for income-based repayment because the reality of the matter is if you graduate with hundreds of thousands of dollars in debt, that's going to be really difficult for you to pay your rent. It's going to be difficult for you to get into the marketplace for a car, for example, spend in the economy. And so we also think it's a good potential driver for the local economy.
Angel, can I just say, look, if you aren't going to be able to pay for these loans, maybe they shouldn't be offered, shouldn't be taken out. Maybe some of the onus should be back on higher education, which keeps doing things like putting in newer dorms, newer dorm amenities for kids, swimming pools at dorms, upgrading across the board to the point where those of us who went through college years ago don't even recognize these places that they live and the things that come along with it. If you want lower tuition, you need to have fewer amenities that are offered out with this.
I think yes, but it's a lot more complicated than that. I mean, the reality of the matter is that running, and this, by the way, is coming from someone who was a dean of admission for many years on college campuses, running campuses is a very expensive proposition. You are, feeding students, housing students, providing them with so many services, and this is the kind of stuff that families do expect. So I think it's both. Higher education does need to.
Angel, if you can't afford it, if we can't afford it, and the loans are too much, and it doesn't make financial sense for these students afterwards to come out with that much debt because they can't get jobs that will afford that, the entire system needs to change.
I agree with you 100%. It needs to change.
The cost of college tuition has far outpaced inflation.
Absolutely. And I will also add, because I always like to deliver good news, there's also millions of dollars in financial aid that go untapped every single year. And so, again, there is some hope out there for students that if they can get through this year's process, there's lots of resources out there available. The majority of students do not pay the actual tuition that you see, the set tuition price at colleges and universities.
Right, but not knowing that information makes it that much more complicated for students this year. Do you anticipate that there are going to be kids that get left behind this year and matches that don't make up because of all of the chaos that's happening on the federal level?
Yeah, this is where honestly I'm most concerned. So during COVID, we actually lost about 1 million students in the pipeline to higher education. Those are students that have not come back. They stepped out, never came back to the process. According to the National College Attainment Network, we're thinking that about another 500,000 students could potentially step out. I've been talking to a lot of high school counselors around the country, and they are really struggling to keep students in the process. They are very frustrated, and they say, well, maybe I'll do this next year. The reality is we know that once students step out, they don't come back. That's really important, not just for students and higher education, but it's important for the economy. This is 1.5 potential million students who are not going to be in the pipeline to higher education, not in the pipeline to future jobs that are going to require college degrees.
Angel, we got to run in a minute, but really very quickly. SATs. MIT's brought it back. There's some who said it was a big mistake to take the SAT away, that the whole meritocratic sort of system was upended by it. Others say that the SAT was, is racially motivated, changes the economic, changes based upon economic status, which doesn't necessarily surprise me. But where do you land on it? Because there seems to be a debate about whether the SAT is returning or not.
The reality of the matter is the majority of colleges and universities in the country have not gone back to the SAT and do not plan to go back. So while MIT, Yale, and Dartmouth get a lot of media attention, the reality of the matter is 90+% of the colleges and universities on the Common Application.
Yeah, but what do you think? Do you think this is a mistake or not?
If it's a mistake to go back?
Is it a mistake to go back? Was it a mistake to stop using the test?
No, actually, we really believe in my organization that not having testing is actually really good for students. There is a lot of research that shows that the testing is biased. There's a lot of research that shows that it favors students who are a lot wealthier. And institutions have shown that they've become more diverse as a result of dropping the test. So we're delighted by that. But I do want to say to the public that the majority of institutions are not going back to testing.
But what do you make of the other research that seems to suggest that the SAT is a pretty good indicator of how well you're going to actually do at college and is one of the sort of few things that can't be changed by grade inflation or something else?
I think it's important to note that that research happens on campuses that are the most selective institutions with self-selecting applicants. And so I would say take some of that data with a grain of salt, but what I don't want is for students to have this fear that they're gonna have to take the SAT in order to get into college when the majority of institutions do not require it.
Okay.
Angel, thank you very much for your time today.
Thank you.
Me time. It is now just after 7 o'clock on the East Coast. You are watching Squawk Box right here on CNBC. We're live at the NASDAQ market site in Times Square. I'm Andrew Ross Sorkin along with Becky Quick. Joe is off today. We got a lot going on over the next 2 hours. Let's show you where the futures stand right now. They're off just a little bit here, 20 points on the Dow. NASDAQ down, we'll call it just about a point, even less than that. The S&P 500 off even less than half a point. Treasuries right now, take a look. You're looking at the 10-year note at 4.394. The 2-year at 4.772. We've been talking a lot about just the upward pressure on gold. We'll also talk about crypto in just a moment, but right now you're looking at gold standing at $2,374. Crypto had inched up over $72,000. It's come down just a little bit. We're now at $70,707.
All right, let's get to Dom Chu with a look at this morning's pre-market movers. Dom, what are you watching today?
All right, good morning, Becky. Good morning, Andrew. So let's start off with a more macro call on the broader U.S. stock market. We've got today Wells Fargo's head of equity strategy, Chris Harvey, has now upped his year-end price target for the S&P 500 to its street high 55.35. That's the new mark in terms of highest on the street in terms of forecast. It was a prior 46.25. Now that's roughly 6% higher than where we were just at the close of the bell yesterday. Now he thinks that the amount of upside momentum in the market right now could lead investors to shake off some of the concerns about valuations at current levels. The S&P, by the way, currently trades at 21 times next year's expected earnings. So again, an interesting call coming out of Wells Fargo on the S&P 500. Sticking with that more macro theme, another day, another record high is gold in gold futures, as Andrew just pointed out. Prices are now riding a 3-day winning streak, and they've been up 10 of the last 11 days. The new benchmark high, by the way, for gold, 2384.50. So again, just a hair below where we are right now, 2373 overall. It's up 15% or so already this year to date. So keep an eye on some of the big publicly traded gold mining stocks. You got Newmont Mining, Barrick Gold, Agnico Eagle, all up roughly 2 to 2.5%. You can see there in the pre-market. Even the VanEck Vectors Gold Miners ETF is up about 1.75% as well, driven in part by those new record highs in the underlying commodity. And then we'll cap things off with an analyst call that's getting some attention this morning. American Express shares are lower by just around, well, yeah, just about flat now. Thinner pre-market trading volumes so far, so take that with a grain of salt. Now, the diversified financial services company and Dow component is getting hurt in part by a downgrade by analysts at Barclays to an equal weight. It was an overweight before. They make a modest bump higher to the target price to $221 a share. They're citing a more balanced risk-reward given the run-up that we've already seen in that stock over the course of the last several months. They think there could be a slight deceleration in first quarter revenue growth. So you can see there a big move higher over the course of the last few months, up 40% over the last year. Now, for more on that and other top analyst calls of the day, just head over to cnbc.com/pro. Subscribers there, Becky, of course, could get more detailed analysis. I'll send things back over to you.
All right, Tom, thank you very much. Our next guest says that she is not concerned about the wild market action so far this month. For more on that, we want to bring in Kristen Bitterman at North America Investments at Citi Global Wealth. Kristen, what do you mean?
So I think when you actually look at the backdrop and what we saw last week was simply geopolitics. It was a lot of Fed speak and a ton of macro data. A lot of that macro data actually being quite positive in terms of ISM manufacturing and the really robust jobs report that we saw. And so I think taking a step back, some of that volatility when you're at or near all-time highs is to be expected, but we still are in a position where we have a lot of cash on the sidelines. We have over $6 trillion in money market funds. We had earnings that troughed in Q3 of last year, and we're seeing that broadening. There's about 75% of US companies that are anticipating gross margin expansion. And so when you start to look then at the Fed funds rate has peaked, and there's a question as to when we're going to get that first cut, and inflation is going down, it's actually a pretty conducive setup for growth and for earnings growth.
Okay, earnings growth, I think that's the key. We're about to get into earnings season, and so much of what our focus has been the Fed, it's been inflation. We've got another inflation number coming tomorrow. But you're saying look through all of that, just focus on the earnings themselves.
I think inflation is important, Becky, as well. So I think Chair Powell has been extremely clear in the fact that he feels that he does not need to break the job market, the labor market, in order to begin a rate cutting cycle. This doesn't really surprise us because we had always been in the camp that the first time we would actually see a rate cut would be over the summer months. So I think what we do need to see, though, is because the labor market is so strong, yes, there are some points of weakness that you could point to, quits rate stabilizing, you could point to jolts coming down, but really inflation is in the driver's seat as to the Fed's trajectory. But strong earnings growth is also, if you're able to deliver earnings growth in this environment with elevated rates, the market has been rewarding that.
Kristen, you have a lot of areas you like, a lot of areas you're overweight. One of them would be the biotechs, healthcare equipment and supplies. Why?
So when you look at healthcare more broadly, I think we have to, kind of break out that sector into the numerous components. Obviously, when you look at the providers, like that's an area that's been under pressure with the recent announcement of Medicare. And also, that's kind of like the macro environment of healthcare, that the providers are going to be very much in the spotlight. Biotech and medical equipment are an area that have largely, yes, they've caught up over the past several months, but it's been an area that has been largely out of the spotlight. Last year, all of the action in this space was driven by GLP-1 drugs, and these are areas that on a relative basis have been left behind. So if we have seen peak rates, if we do see kind of this continued strength, if we see the pickup in M&A activity, that's going to be something that would drive flows into these sectors.
Beyond that, you're looking at the bond market as well?
We are. We're actually, when you're looking at all of the potential outcomes, I think the best way to play this as an investor is to seek opportunities both within yields as well within equities. So you can see within our equity portfolios, we're very well diversified. We're playing this broadening out. We have positions in similar positions to the S&P, equal weight, also looking at going down in terms of capitalization, but focused on those small and mid-cap companies that are profitable, that are poised for growth. Within fixed income, I think you have to look at the absolute yields. So when you're looking at rates where they are today, there are attractive coupons that become an important part of portfolio construction. So we're staying high in quality, but there's opportunity in investment grades. There are opportunities, actually with some of the seasonality we tend to see in April with munis, opportunities there. And then preferreds are also a really interesting part of the market right now.
Okay, Kristen, thanks a lot.
Thank you.
Okay, coming up, are you ready for this? I don't know if you guys follow this, folks, on on YouTube.
I do.
It's pretty cool.
Yeah.
The creator economy. We're going to talk to the team behind the viral Dudes Perfect videos. If you are not familiar, check them out literally right now during the commercial break because it's pretty amazing. And then later, the CEO of Mazda North America is going to join us. We're going to talk EVs and what's really happening here, also the disruptions from the Baltimore bridge collapse and so much more. Don't go anywhere. Squawk Box returns in just a moment.
Still to come this morning, from trick shots to a big money deal, the dudes from Dude Perfect getting a large investment to take that wildly popular YouTube group to the next level. Yeah, these guys are funny, and guess what? We get to hear directly from the dudes next. And Japan's Prime Minister is set to visit with President Biden at the White House. At 7:50 a.m., the U.S. Ambassador to Japan, Rahm Emanuel, will join us ahead of this major summit. Squawk Box is coming right back.
Welcome back to Squawk Box. Now with more on the creator economy. Dude Perfect, the popular sports YouTube group known for their impressive tricks and all those impressive trick shot videos, announcing a significant partnership today. They're receiving an investment ranging from $100 to $300 million. It's a lot of money from private investment firm High Mount Capital. This investment will fuel the group's expansion beyond YouTube into streaming, retail, and other ventures. Joining us right now are 4 of the 5 dudes from Dude Perfect: Kobe Cotton, Corey Cotton, Tyler Tony, and Garrett Hilbert and Cody Jones, as well as High Mount Capital's co-founder and general partner Jason Ilian. Good morning to all of you. It's so cool to see you. We are big fans here on the Squawk set. Let me start, Jason, with you, since you're the one ponying up all the money. How do you find these guys? What are you trying to do? What's the investment thesis here?
Yeah, I mean, listen, these guys are icons, right? They're pioneers in their space. And I got 3 kids that grew up watching them and following everything that they've done. And as we got to know the guys and the businesses they built, all you have to do is go stand outside of Smoothie King right now and watch the kids lining up getting Dude Perfect smoothies, or go to Walmart and get their toys. The more we got to talk to them and the more we saw them not just being YouTube stars, but growing in so many different areas, we said, hey, we got to figure out a way to partner with them. And so start a relationship, and it turned into a rather large investment.
Guys, did you ever think that you would get an investment like this, and what do you see yourself doing with all this money?
Yeah, you know, this has been a long process for us. When we set out on this journey, we didn't even really intend to raise as much as we did or get to this point, but we found the High Mount guys, and our goals for what we want Dude Perfect to become and what it has been up to this point were very similar. And so we felt like they were going to be a great partner moving forward. And we are looking forward to continuing the trust that we built with families for the last 15 years and just kind of turning that into an extension of the brand and creating something that can live long beyond the 5 of us, doing hopefully water bottle flips like you're seeing now when we're 65 years old. Hopefully that's still a very small piece of it, but the Dude Perfect brand has grown beyond that.
Can you just go backwards for a second and just take us back to the origin story and how this all began? Because I think people will be fascinated by it, but I'm also curious when you knew that, when the eureka moment happened that you knew that you had caught lightning in a bottle, that something had happened here.
Yeah, we started in 2009. We all met at Texas A&M playing basketball and in some Bible studies together, and became fast friends and made a video our junior year, and ended up on TV and made another video, and probably within 6 or 7 videos, we got our first brand partnership with GMC, and we did a TV commercial for the World Cup and NBA Finals, and that was the first time that we got paid to do something that we totally would have done for free if we realized that there was money out there for it, that we were doing for free before that, I guess. And so we just continued to make the videos, just 5 best friends having fun. And I was so early on into YouTube that I don't think we had any clue of what could be. But as we just continued to do it, and as the space continued to grow, we've just been so blessed to continue to be able to make content. And that was actually 15 years ago today that Dude Perfect started. So we didn't plan that, but pretty fun timing.
I've got a production question for you, because I was just watching another video. I don't know if you consider him a colleague, a peer, a rival, Mr. Beast this is, who is saying he's now spent something in the order of $3 million for every video that he produces. When you produce a video today, what's the all-in cost?
That's a great. We're not quite at $3 million level, but you ask if he's a colleague or enemy or whatever you said, he's awesome, right? Like, it's been amazing how each of the creators who've come up within the last 15 years have pushed all of us to be better, and he has raised the bar in a lot of ways. So it's been really cool to see that.
So that sounds like a competitor.
Yeah, he's a competitor, I would say. Technically competitor. We're friends with Jimmy. He's awesome. We're very pro Jimmy.
And so in terms of where this all goes as a brand, but also where it goes within the social media ecosystem or media ecosystem, we keep talking about YouTube. I'm so curious, by the way, what you think is happening with TikTok, which I know is a platform that I imagine you have to care about to some degree. How you see all of your content getting to people in the future?
It's been fun. This last year, we launched the Dude Perfect streaming service, which is a Dude Perfect app that's available everywhere, and the response has been unbelievable. The premise behind it was simply that we want to make the most trusted entertainment on earth for families. And
families now can watch Do Perfect content with clean ads that are pre-screened before it ever goes on our service, and we're also featuring other creators whose stuff is trusted. And so that's been a blast for us. We're really looking forward to it. That's one of the main reasons that we took on this opportunity, is in order to expand that. But we're really just looking to change kind of the direction that we're headed and make it even broader for families. The last 15 years, people have trusted what we've done by watching it mostly, and now we want to bring experiences to them in person where people can touch and feel the fun that is Do Perfect these next, hopefully the next 15 years.
Hey guys, we've shown a lot of the flips, the bottle flips, and other things that you have done with those videos. The stuff I love the most are your stereotypes and some of the very funny videos you put out there. Where do you guys come up with content? Do you sit around and just make this stuff ripping off of each other?
Yeah, it's definitely the hardest part 15 years in, but having 5 guys in the group total is nice because everybody has their own individual role. And when we started off 15 years ago, I was in charge of the creative and still am to some degree today, but it's very much an idea comes up, we'll go get in a room together, sit at a table, discuss it, but the stereotypes are a lot of fun because we get to involve the whole team, even outside of the 5 guys. We get to bring in the production guys and the editing team and let everybody kind of get involved. And I think that's been one of the fun things about this journey, is just the different pieces of content that we've come out with over the years. And that's for sure a fan favorite, is the stereotype series.
Okay,
Also,
go ahead. Sorry.
Rage Monster, I was saying to your point earlier, Andrew, you asked about our expensive video.
Yeah,
anytime we rage on something, that price just goes up and up.
So here's my last one, because I think people are watching this and they're probably saying to themselves what I've always wanted to know, which is how many takes does it take to sometimes land either the bottle? I mean, we're showing some really cool things where you're seeing all sorts of balls landing in various hoops. There's the famous sort of David Beckham viral video where he lands the ball in and people think it's all edited, and I know you say it's not edited. So how many times does it take to do this?
It just depends. Usually the hard ones that you think are going to take forever end up being really fast, and the easy ones take a long time. But just a couple of examples. Cody's blindfolded, world's longest shot, that was the first try. The shot out of an airplane that Corey mentioned earlier with GMC, that was the second try. And then the Las Vegas world's highest shot that we did not too long ago, that was 3 days. So pretty much any time between 1 try and 3 days, and the answer is somewhere in there.
I do wish that AI had come around 15 years earlier. That would have saved us a lot of effort.
Okay. Dudes, if you will, I want to thank you. Jason, we want to thank you. We'll call you a dude for today, and congratulations on the investment. We want to follow your progress, and we hope to come on back. Maybe you flip some bottles at the table here. Thanks.
Thank you, guys.
Thanks, guys.
Thank you, guys.
Very cool. When we come back, Binance CEO sitting down with CNBC earlier today for a rare interview. We will have some of the highlights next. Squawk Box will be right back.
There's no sound. Oh. Duh.
10.
Paris Blockchain Week kicks off today. It is Europe's biggest blockchain and digital assets event, and CNBC's Arjun Karpal is talking to some of the industry's key players, including the CEO of Binance. Hi, Arjun. What can you tell us this morning?
Well, Becky, look, it's been a buoyant month or few months for the crypto market. It's been a pretty turbulent few months for Binance in particular, coming off the back of that $4.3 billion settlement with the Department of Justice and the former CEO, Changpeng Zhao, of course, pleading guilty to criminal charges. So now it's up to the new CEO, Richard Teng, just a few months into the job to clean this company up. He comes from a regulatory background, and I sat with him just a couple of hours ago and started by asking him how he plans to change the culture at Binance. Let's listen in.
In those very early stage of development, again, where rules are nascent, early stage of development, there's no clarity on that. Finance was operating in a certain fashion, right? But we have moved past that. As the company moved into greater maturity, we're looking at sustainability. The direction of travel now is very clear towards much more compliance, which is why we're building up a very robust compliance program.
Teng stressed these were past mistakes of the companies when Binance was a lot younger. He stressed now the company's working a lot closer with regulators around the world to address some of the concerns they've brought up, that this is the big task of on his plate right now, changing the culture, a long history of the culture at the company, but also making regulators trust the company again. Second up, markets, a big focus here in Paris at the Blockchain Week. They've been extremely buoyant. As I said, Bitcoin still very near its all-time highs at this point away, and we're a few days away from the so-called halving, a very key Bitcoin event which reduces the supply onto the market of Bitcoin and is seen as very buoyant for Bitcoin as well. Now, Bitcoin often moves in these 4-year cycles, and many are saying this year or this cycle is very different. That's the view also of Richard Teng when I asked him his views on the market. Let's just listen in.
Normally, after about 6 months after halving, that you see a new all-time high in terms of prices. But this time around, it happens even before the halving, right? Which is why it's unique in terms of market cycle. And one of the key reasons is really the introduction of the ETF, where you bring in so many new users, new liquidity.
I've seen some very wild calls on Bitcoin's price this year, but one thing's for clear here. In
Clear
Paris,
here.
the industry generally is very bullish right now and very excited about where the market's at. Andrew, back to you.
Thank you so very, very much. Fascinating stuff. When we come back, a lot more right here on Squawk Box. It is back to work on Capitol Hill.
Back to work.
Of the Trump Tax Cuts and Jobs Act on the horizon for 2025. Why Congress needs to start working on a plan now to avoid paying later. And don't forget,
I don't even want to hear about it. Oh my.
it's going to happen at 10 a.m. Eastern Time. Squawk Box coming right after this.
Doodle-doo, deet. Tesla. I heard another price downgrade again today. Oh, wow, I didn't know that. Tesla settles case of Apple engineer killed in 2018 autopilot crash. Oh, Apple engineer.
Welcome back to Squawk Box. Former President Trump's Tax Cuts and Jobs Act set to expire at the end of 2025. And while Congress stalls on what comes next, if they do nothing, the law will automatically impose tax increases. Joining us right now to break this all down, National Review editor and Washington Post columnist Ramesh Panuru and Natasha Sarin, Yale Law School and Yale School of Management professor, former Treasury Department official. Good morning to both of you. Ramesh, I want to start with you. State of play. What has to happen in advance? Because I think there's partially a view that, we'll get to 2025 and then we'll debate it and the clock will get to midnight and then we'll have a big food fight. What could be done in advance and what are you arguing for?
Well, I think both parties need to really think through their priorities and what an acceptable deal would look like, because this is going to rush up on people pretty quickly after the election, because you've got, as you said, you've got the automatic expiration of all of these tax cuts, but you've also got the debt ceiling kicking in sometime in 2025, and you've got some healthcare subsidies expiring at the same time. So people need to ideally be thinking through what kinds of trade-offs that they're willing to make.
What kind of trade-offs are you willing to make?
Me, personally, look, I think that we ought to have a fiscally responsible package, and I think we ought to have one
I thought that was a woman.
the child tax credit in particular, and helps it make up for some of the ground it's lost due to inflation.
It probably is.
Over the last 2 years. I think one of the things that means is that we need to take some of the tax breaks that were shrunk in the Tax Cut and Jobs Act and shrink them further, finish the job really of eliminating some of those tax breaks.
Oh, that's funny.
Natasha, if I made you king or queen for the day, what would you do?
Be
queen.
queen.
What's interesting and great is that I actually think there are a lot of areas where Ramesh and I totally agree on this. If you just blanket extend the expiring provisions of the TCJA, debt to GDP ratios in the next decade are going to rise from 116% to over 130% if you don't figure out a way to finance that. So my dream package would include a substantial focus on revenue raising, and much of what Ramesh said would include refundability of the child tax credit and making sure that we help those families that need it most.
Okay, so how are you going to raise revenue, and how are you going to do that at the same time that you're hoping to grow the economy and not put the brakes on things?
So the package that I would sort of dream design would include an increase in the corporate tax rate as has been proposed by the Biden administration. It would include also extending many of the business investment. So, I mean, the Biden administration's proposal is to go to 28. Yeah. I think it's worth noting that when TCJA was legislated, what Business Roundtable wanted, what the business community hoped for, was a tax rate of 25%, and TCJA came in lower than that. There is a lot of revenue to be had by a pretty small increase in the corporate rate, and there's a lot of revenue to be had.
Should the Biden administration be asking for 25, or should they be asking for 28, or is this some kind of Overton window situation where if you move it one way, you hope that maybe you can get to 25?
No, but I think that's kind of what Ramesh said in his column, which I thought was pretty thoughtful, which is you kind of need to start sketching out areas of compromise where you're hoping to see both revenue-raising focus and spending focus, and most importantly, fiscal responsibility in the years ahead, because we're just not in a position where we can deficit finance going forward and have debt to GDP ratios continuing to rise and rise. That has real costs for the American people. interest rates are going to be higher.
Right.
We're going to see more inflation, and it's really fiscally dangerous.
Ramesh, what's going to happen to the individual tax rates? And dare I ask, since I am in one of those states, what's going to happen to the SALT tax?
So if Congress doesn't act, the individual tax rates jump up, and the SALT deduction, the state and local tax deduction, the cap goes away. At the same time, just a lot of other things happen. It's a complicated situation, and it's going to be hard for people to predict exactly how their taxes change, because the child tax credit shrinks even more than it already has, but the dependent exemptions jump back up. But on the third or fourth hand now, the standard deduction shrinks back again. So there's gonna be pushes and pulls on people's tax bills in all different directions, but the net effect is going to be an increase for most households.
Okay, and then finally, I don't know if you watch the broadcast, you know I have one tax hobby horse, which is carried interest, because it's one of it's actually one of the only things in the tax code that to me makes literally no sense. I think it's inarguable. What do you think happens to that?
I think that there is a huge battle and a lot of lobbying money gets spent and then nothing changes, because it seems to be the way Congress likes it, is to keep it as a lobbying issue.
Natasha?
I'm more optimistic. I think you can't defend carried interest. There's just no way. It's $10 billion over the decade, so it's not the hugest money, but it really is a set of provisions that has to be addressed. It's crazy.
Donald Trump even doesn't like it, or at least said he didn't like it originally. I think he was ready to go.
You can't find anyone to defend it, really, outside of the lobbying community, where there's a lot of energy.
Ms. Sinema can defend it, but she's not in the job. She's not going to be in the job. Ultimately, I'm waiting to see when she becomes the vice chairman of a private equity firm.
Donald Trump says a lot of things.
We'll see. Ramesh and Natasha, thank you. Appreciate it.
You're welcome.
When we come back, an automaker directly impacted by the Baltimore port closure, the CEO of Mazda Motor Corporation, will give us an update on that, plus the other big challenges facing the industry and where he sees demand right now from consumers. We'll talk about everything from EV demand to the supply chain issues. Squawk Box will be right back.
Welcome back to Squawk. An update now on the collapsed Francis Scott Key Bridge. The process of removing containers from the ship that crashed into the bridge has begun now officially. It's expected to take weeks, though, to remove those containers, tow that ship, and try to reopen the Port of Baltimore for marine traffic. Engineers have said the goal is to restore normal capacity access to the channel leading to the Port of Baltimore by the end of May. So we will see whether they can meet that deadline.
Japanese automaker Mazda is one of many companies feeling the impact of the Baltimore port closure. Joining us right now with that and many other issues that they're talking about in the industry right now is Masahiro Moro. He is the president and CEO of Mazda Motor Corporation. And sir, thank you for being here in studio with us.
Oh, thanks for having me.
Why don't we start talking about the Baltimore port just because it's in the news this morning. How big of an issue is it that's so important to automobile exports and imports?
Sure, absolutely. First of all, our thought go out to those who are, heavily affected by this tragic incident, and also we'd like to extend sincere gratitude to everyone who have been working tirelessly on recovery efforts. Really appreciate it. We have used the Baltimore port for a long time. It's the biggest port for us. And our local team has been working closely with the Port of Baltimore and the concerned entity to understand the long-term impact. In the meantime, we have found nearby points to discharge, and probably we have to temporarily need to go to another port so that minimize delays or delays of delivery to customers. But we have committed to come back to Baltimore port once operation is resumed.
How big of an impact will it have on, I guess, your financials? Have you because the U.S. is a pretty important market.
Absolutely. Baltimore port is the biggest port for us for East Coast side. Right now we have inventory on the ground, and the vessel is about to arrive at a nearby port. So I don't expect a big impact right now, and we are quickly shifting alternative route so that we can work very hard to finding trucks and route. So I don't expect a big impact right now, but we are closely monitoring further development of this issue.
Let's talk a little bit about Mazda, because in the first 3 months of the fiscal year, your orders and your global sales volume was up 17,000, and your up 83% just in terms of the earnings from a year earlier. A big part of that is the United States, but what's happening? What caused that huge increase?
Well, there's two parts. One is we have been working on drastic network restructuring for many years. When I was in US for 6 years, we are working together with our dealer partners to rebuild dealer facilities, and they are really engaged to selling Mazda cars and focusing on brand value. That is one part. The second part is our products are very successful. We have introduced a 690 and about to introduce 670 and 650. We produced that in Alabama plant. So last 5-6 years, our per unit revenue has gone up $8,000.
One of the things you said that really made a lot of news at the end of last year was that EV adoption is pretty difficult, and it's hard to see how consumers are going to get to that point. As a result, you're changing some of your strategies and pushing off the pure electrification for things like hybrids. What's happening in the U.S. market and around the world?
Well, EV adoption pace is slow right now. It's faced a reality. And our approach for the electrification has been so-called multi-solution strategy. We'll provide mild hybrid, plug-in hybrid, and battery EV, so that we respect each individual needs and wants and lifestyle. This is, I think, a well-received strategy, and we are our large product like a 690, 670 will have a mild hybrid and a plug-in hybrid, and the 650 will have hybrid. So our approach is very prudent, and consumers is everything a starting point for us.
Yeah, I've kind of been in the of the opinion that you can't force things down the consumer's
No,
throat.
I think freedom of choice is important.
There are standards in the United States that require massive amounts of fleets to be electric in years coming up. Do you think those standards will be met, or are they too difficult because consumers don't want them?
Well, always we focus on actually demand. Consumer comes first, and the regulation at a standard is a different story. You have to find out way to deal with. So we put the customer at the center of everything we do. That is our business philosophy.
What are the biggest challenges right now, just in terms of the global supply chain or regulations or other issues that you see? What are the things that you are working hardest on?
Well, last couple of years, semiconductor shortages are a big issue. Right now, it's a settled down. Logistics is a big challenge for us. There's a geopolitical risks out there, and the truck shortage, and there's a number of challenges for logistics side, and the supply chain is another big challenge for us.
Moro-san, we want to thank you very much for being with us today. We appreciate your time.
Thank you so much.
Thank you. Coming up, Japan's Prime Minister set to visit the White House. U.S. Ambassador to Japan, Ron Manuel, is going to join us next with more on the key items on the agenda between those two nations. And meantime, soft landing, hard landing, or no landing? The big question for the future of the economy. Former Kansas City Fed President Thomas Honig is going to give us a preview ahead of tomorrow's key inflation data. We'll talk to him in just a little bit. Squawk Box returns after this. Welcome back to Squawk. Tomorrow, President Biden is set to host the Japanese Prime Minister for an official visit to the White House, the first such visit by a Japanese Prime Minister in nearly 10 years. For some insights on what we might expect from this significant diplomatic summit, I want to bring Rahm Emanuel, the U.S. Ambassador to Japan. It's nice to see you. It's been too long. Good to see you. Help us understand what you think are the most significant issues between these two countries right now.
Well, first of all, this state visit comes at a historic moment. If the last 60 years were defined by alliance protection, the next 60 are going to be defined by alliance projection. Japan has done a series of major changes in their defense posture, acquiring Counter-Strike, increasing their budget from 1% to 2%, becoming the third largest military, taking off the cap on defense technology exports, normalizing relationships with South Korea. We're now also making a series of fundamental changes from a hub and spoke system with bilateral relationships with multiple countries in the region to a lattice-like system architecture, strategic architecture. We're bringing coalitions of countries together, like you just saw the other day, Australia, Japan, United States, and Philippines doing a naval exercise. At the end of this visit on Thursday, you're going to have a major, significant, first time ever, the leaders of the United States, Japan, and the Philippines coming together for a historic trilateral relationship. That combination of changes in both countries will lead to a series of actions that will change the kind of cooperation on the level of deterrence, both diplomatically, development-wise, as well as on the defense side. On the defense side, they've made Japan have a new command control center, a joint center. We're going to fundamentally change the way we have a posture there so we can do a better coordination with Japan and make the most of the efforts of bringing deterrence to the theater. The second area, now that Japan is willing to do defense technology exports, is we're going to have an military industrial council to look 180 degrees what we can co-license and co-produce together, because one of the big challenges we have is our military industrial base is stretched thin, and Japan's has never been on the field. That's going to be an additional benefit, so we can fulfill that effort. And then major, also in the area of AI research, as well as in science and cooperation between NASA and JAXA. Japan is a major science spatial partner for us in the exploration of the lunar area.
Let me ask you this, though. Janet Yellen just spent time in China, and we have talked about having this sort of, I don't know, frenemy relationship with China, where we say we want to be friends in some ways, and we say we want to be enemies in others. This is a huge impact on Japan, to be honest. And the question is whether these mixed messages, whether you can be both, whether you really can be a frenemy.
Now, here's what I think is fundamental, is that the United States will say, look, you want to have a strategic competition, we're fine. But if you're going to continue to adopt the relationship of being a strategic adversary, these are going to be the consequences, and these are the steps we're going to be taking. I think that's exactly how you should approach it. China basically has spent a decade of intellectual property theft, economic espionage. I mean, take the look of semiconductors. ASML is obviously is a Dutch company. There's Tokyo Electron and Canon, which are Japanese companies. They compete and innovate, and they compete against each other. China was just seen stealing trade secrets from ASML. Tokyo Electron doesn't do that. Canon doesn't do that. So either we're going to be strategic competitors or strategic adversaries. Google just discovered in the AI space that China was stealing trade secrets. You can't have an economic competition where stealing and cheating are the norm and accepted. You
I don't disagree with you, Ambassador, but then the question is, if that is the case, then the answer isn't, I want to be your friend. The answer is, I can't be your friend at all.
No, the answer is exactly before this goes any further, is making a choice. That's why it was so weird to have U.S. business leaders in China applauding the leadership of the PRC, having all had their, I can't tell you as Chief of Staff how many one of those individuals were in the office talking about trade secrets being stolen or being forced to hand over all the family jewels so they can get access to the market. And then yet, China's discovered, and by our own FBI and intelligence agencies, actually spreading misinformation in the United States.
You're making the argument against doing business with China.
I'm making the argument that you're very clear with China. And that the fact is, if you're going to continue down this road, here are going to be the consequences. That's what you do before you take that next step.
But aren't
and
we
then the second big, I'll take that. Number
I mean,
two.
I agree with you as 100%, but let me just ask. I mean, what does that mean for American businesses? Because it's really, American businesses can't go and do that. A CEO can't show up and say, you're going to change the way you do business. The administration has to do that.
That's right. And the United States has to be clear with the U.S. businesses. We understand that's a market. They want our capital. Now, here's the strategic import. There are 3 Chinas, not 1. There's a China that's at the core between the PRC and the Chinese people that want calm, and it's rattling really hard because they have capital fleeing and they have people fleeing. Number 2 is what's in the region, what I call the conflict. They're in conflict with India, they're in conflict with the Philippines, they're in conflict with Japan. And then there's the outer ring where they just want to say to the rest of the world, it's a win-win, and the charm China. The 3 C's, charm, conflict, and calm. And there's a tension in each one of those. And in China, the basic point is their economy, for a series of bad decisions they made in years past and even currently, is on the back heel. That back heel is one of the greatest pieces of deterrence. And to the American business, here's a China that remember this, and I would say this to every leader in the United States, your research and development is subsidized by the United States taxpayers. It's not just yours. We give you a tax cut so you can do that. You cannot allow economic espionage to go just because you want access to a market. You're part of an economic strategy, and I would say to the United States, I would say to be very clear also to the Chinese leaders. You want international capital, you want actual business leaders investing and growing your economy. You cannot cheat and steal the way you did for the last 10 and 20 years to leadership.
Ambassador Emmanuel, that makes sense, but you're dealing with a lot of different United States too. I can think of at least 4 or 5 different United States. One is we want trade. A second is we want cheap imports, things that are cheap for consumers. A third is we want to make sure that we have peace and safety. A fourth is we want to make sure Taiwan is free. How do we take all of those things and kind of add them up? What should be the driving goal in everything we talk to? Because we talk to so many people on the show who say, yeah, we just need to talk to the Chinese and make it easier. The other is we need to ban TikTok. What's the U.S.
Here's my view is, creating, one is redefine what deterrence is. On this show, as well as other shows, and in the United States, just public debate, we think of deterrence is what the Ronald Reagan aircraft carrier brings. I would tell you when the president brought the leaders of Japan and Korea together at Camp David in August, a historic trilateral meeting, that's deterrence. When the United States economy is growing at a pace and China is shrinking, not growing at the pace it used to, and the spread between the United States and China is growing, that's deterrence. When in fact there's capital fleeing and Chinese middle-class families and others are fleeing, that's deterrence. And having a more global approach and saying there's a cost to the choices you're making. Now, you took hundreds of millions of people out of poverty, but you didn't do it. The international system you were a part of allowed you to do it. Now, if you want to turn your back on it and you think raw exercise of power and intellectual property theft and economic espionage is the way you're going to go, we're not participating in it. And that's exactly clear, not just the United States. Brazil, a member of BRICS, just told China, I'm taking you to the WTO. Thailand did that. EU did that. The world is organized. So the principal strategy with China, their entire strategy, their most persistent and pernicious economic strategy is coercion to achieve political ends. Their goal is to isolate Japan, isolate Australia, isolate the Philippines. No, we're all coming together. You're going to be the isolated party. Now, either you participate in a system that helps you raise poverty and rather eliminate poverty in your country, bring people into the middle class, or you're going to return, which is what you're doing to your youth, with a 30% unemployment. You have a choice to make, and we're ready to work with you and have you be part of a system that helps you grow economically, or you can turn your back on it. But when you do that, you're the isolated party, and there's cost and consequences which result in a lost generation of Chinese youth. You make the choice.
Ambassador, before you go, if you look at the polls, it is very possible that you and this administration will not be this administration at the end of this year. And I'm so curious, as an ambassador to Japan and speaking to the international community, how you discuss that very topic and how you think they perceive us and they perceive you.
Well, my joke is, at least on me, is that I've been there 2 years in Japan, and for the Japanese people, it's felt like 20. Look, here's where I think it is, and this is an example of going back to the original question. There's 2 competing visions between China and the United States. China, this is our backyard. America's a declining power. You either get in line or we're going to give you like what we're doing to the Philippines. Our basic position is we're a permanent Pacific power and presence, and you can bet long on America. And when you look at the trilateral relationship that the president brought together in August in Camp David, you look at the trilateral meeting, we're going to have a first ever historic meeting this Thursday. You look at the state visit where Japan's made major changes to be a full partner. Each day America's gaining in China's strategy of basically this is our neighborhood, get out of here. That is declining because the people of the Indo-Pacific, whether that's Australia, Singapore, New Zealand, Korea, Japan, Philippines, even Vietnam and other countries that may not be fully there, they want a America that doesn't allow China to be unanchored in that area. And then I would also say that what we're doing today is putting the roots down into the system of America's lattice-like system that has changed from a hub and spoke system. The people of the Indo-Pacific, the countries of the Indo-Pacific, the leaders in the Indo-Pacific want all of America. Our development, our economic assistance,
And that's how
our
I get it.
economic
My question
investment.
is, if former President Trump becomes the president of the country, does all this work get undone? Do you think it persists?
Yeah, but Aaron, I think here's the way I look at it. Yes and no. That's the simple truth. Some of this is embedded in the system, like what we're about to do on space, what we're about to do on defense. The other part, and I will say this firsthand, having worked for 3 presidents and worked and seeing what the leadership of President Biden. What happened at Camp David is when people not only trust America, but they trust the leader, they'll go past the minimum. They'll stretch themselves politically to achieve something because of America's leadership. And President Biden's personal touch to that allowed the Prime Minister and the President of both Japan and Korea to not do just enough, but to do something historic. And so when you ask me, the answer isn't a yes or a no. The answer is it's complicated, and the fact is some of it can't be undone easily. On the other hand, the intangible element can be, and it starts to unravel. Nothing is ever permanent. Today we are in a better place and China is isolated. And it's not because it just flipped a switch. China's made a series of mistakes, and President Biden and the Biden administration has made the most of those mistakes to America's strategic advantage, where our deterrence today at least has some credibility to it.
Right. Ambassador, I want to thank you for joining us. It's always good to see you.
Thank you.
Appreciate it.
It is just after 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Andrew Ross Sorkin. Joe is out this week. We've been watching the U.S. equity futures, and so far, things are actually picking up a bit. Dow futures up by 50 points, the S&P futures up by 10, the NASDAQ up by 53. If you're keeping track of the Treasury yields, which a lot of people have been doing for a long time, there is a little bit of weakness with the yields this morning, slightly lower than what we've seen in recent sessions. 10-year right now is below 4.4%. It's sitting at 4.38. You've got the 2-year sitting at 4.76. And we do have CPI that's due tomorrow. That inflation number is very important. The Fed guessing game continues all around it, as that report could dim the outlook for future cuts. For more on this, we want to bring in former Kansas City Fed President Thomas Honig. He's now a distinguished senior fellow with George Mason University's Mercatus Center. And thank you for being with us today, Tom. Let's first get your thoughts on what you think that inflation read is going to be, because there's a lot riding on it.
Well, it's hard to know. I mean, people are projecting that inflation will stay near the CPI near the 3% number. Whether it comes down or not is a big question mark. No one knows. I don't. But I do think there's a lot of reasons to expect it's going to remain elevated. And if you start with the real economy, as we've already been talking about, the economy is doing relatively well. We just saw the jobs number. We saw the manufacturing index numbers strong, greater than 50%. And we're also seeing the commodity markets pick up. Not only in the United States are we seeing this improvement, which has been our track record, but around the world. So that means there's a lot of demand being, I think, created in this stronger economy. And then on the financial side of this, you have basically the banking industry is being backstopped in terms of the liquidity issues around the Fed. The Fed still has a lot of liquidity out there. Its excess reserves are still above $3.5 trillion. It's still working with the money markets and has $0.5 trillion there. So there's just a lot of liquidity still available in the market, and I think that's also a factor stimulating. So it's going to be, I think, real questionable whether the Fed can lower interest rates as it wishes. We'll see what tomorrow's CPI number goes. But one final point I'd make on this, that, you know, right now, the Fed, so-called Fed funds rate is near 5.5%. And a lot of people, including myself, think that the so-called real equilibrium interest rate is around 2%. If you think about that, and you think of inflation, your Fed funds rate is 5.5. Take 3% out of that, you're 2.25% real rates. You're really not a particularly tight monetary policy right now. So I think there's a lot of reasons for the Fed to think carefully about that next move, influenced importantly by the inflation numbers that come out, but also just about how well the economy in the U.S. and now picking up globally is. So they have a big challenge ahead of them, and I'm not sure that interest rate cuts necessarily should be on the table, but we'll see.
It's really weird. I mean, Neil Kashkari, who I've always thought of as being pretty dovish, is saying that he doesn't anticipate any cuts this year. And then you have former St. Louis Fed President Bullard, who's saying he still thinks it's 3 cuts for this year. I mean, how do you come out with such a diverse outcome of opinions and people kind of flipping the roles of what you would have traditionally expected, because Bullard's always been pretty hawkish?
Well, that's a very good question. I don't know what Bullard's thinking is, and I am surprised by Neil, but I think Neil's comments make a little more sense given how strong the economy is and how much liquidity is in the U.S. economy and globally for that matter. So maybe Jim is thinking that, well, we are going to see a slowdown, we are going to see inflation numbers that have come down, maybe they're going to continue. But I think about it as when you think of where interest rates are and where they should be, they're not that far off the mark, so long as the banking industry doesn't run into difficulty. And I think the Fed is determined to make sure liquidity problems don't enter the banking industry, which gives you, I think, a good case to leave things where they are. And that's what Neil is advocating, it appears.
I will say, Bullard did predicate it with the same thing that you just said. That's on the assumption that inflation does continue on a downward trajectory. I guess, how confident are you in the data that we're getting? We're saying we're so data dependent right now, but 1 month's data can be, you know, pretty useless or kind of something that gets revised away later. If you're looking at 3 months, though, where inflation runs hotter than expected, where jobs run hotter than expected, does that make you think there's no way a rate cut should come if that number this week is hotter than expected?
Well, I think right now, even without looking at those numbers coming forward, if you look at the conditions in the U.S. economy and globally, there's no real case for cutting rates. We're near equilibrium. You wouldn't want to cut them very much if you cut them at all, because the fact is real interest rates are a little more than 2%, and that's probably where they belong, given how strong the world economy is and how strong the U.S. economy is. So yes, we'll look at the data. You're data dependent, but in the long term, in terms of this, I think where we are is probably a pretty good place, watching the banking industry carefully and making sure we know where our liquidity is and that the liquidity that the Fed's continuing to supply. And if that remains strong, I think it would be hard to justify a rate cut.
Okay. Thomas, we will leave it there. We appreciate you joining us today, and we'll see you again soon. Thank you.
All right, good to talk to you.
Coming up, growing the nation's chip economy. White House National Economic Council Director Lil Brainerd is going to join us as the Biden administration grants billions to Taiwan Semiconductor to set up shop in the U.S. Squawk Box returns after this.
begins here.
Welcome back to Squawk Box. Want to get over to Dom Chu with a look at today's morning movers. Dom.
All right, good morning, Andrew. Good morning, Becky. Let's start off with the healthcare side of things for this check on morning movers. We got shares of Pfizer, which are right now fractionally higher, just about 0.5% on around 60,000 shares of volume. The pharmaceutical giant said that its vaccine targeting respiratory syncytial virus, or RSV, showed promising results in a trial at how effective it could be for higher risk adults that are under the age of 60. Now, Pfizer's Abrysvo is currently approved in the U.S., Europe, and Japan and other countries for adults 60 and over, as well as expectant mothers. Now, it says it plans to submit the trial data to regulators and apply for expanded use approval, so Pfizer shares catching a bit there. We're also keeping a close eye on shares of some of America's biggest defense contractors like RTX, Lockheed Martin, General Dynamics, Northrop Grumman, and others. Many of them are notably lower, as you can see here in the pre-market trade. One of the reasons why is their peer companies across the Atlantic. Analysts at Goldman Sachs said in a note to clients that they remain constructive on the sector in Europe, but are not recommending European defense stocks given a sharp run over the last year and challenging valuation premiums. Weakness in companies like Rheinmetall in Germany, Saab in Sweden, and Leonardo in Italy is what's contributing to some of the downside in some of America's biggest defense contractors, so keep an eye on those. And we'll end with shares of Freeport-McMoRan, the big copper and gold miner. They're higher by just roughly 3% or so, 65,000 shares of volume, helped along by, of course, another record high in gold prices, but also because analysts at Bank of America have upped the rating to a buy from a neutral. They also raised the target price to $59 a share, given what they think is better free cash flow trends, also leverage for those rising copper and gold prices. Now, for more on that and other top analyst calls of the day, just head over to cnbc.com/pro. Subscribers there, Andrew, can get the full story. I'll send things back over to you.
Thank you for that. We got a lot more coming up right after this. Congress getting back to business. We'll talk about it. The future of TikTok on the agenda. Will the Senate demand a sale of the Chinese-owned social media titan in the name of national security? We get into the TikTok politics with one Trump insider right after this. You do not want to go anywhere. He currently has 2 million TikTok followers. Squawk Box coming right back after this.
Welcome back to Squawk Box, everyone. The futures actually picking up a little bit this morning. Dow futures now indicated up by close to 70 points. NASDAQ futures up by 75. And then you've got the S&P up by about 15.
Okay, with the Senate back in session, Republican leader Mitch McConnell is calling for action on TikTok.
Today, 170 million Americans are active users of a social media platform that the People's Republic of China treats as a tool of surveillance and of propaganda. This is a matter that deserves Congress' urgent attention.
Joining us right now is John McEntee. He is the former director of the White House Presidential Personnel Office during the Trump administration. He's a senior fellow at the Heritage Foundation's Project 2025, and he is the co-founder, if you know him from TikTok, of The Right Stuff, a dating app for conservatives that has more than 2 million followers on TikTok. So who better to talk to about this and so many other things? John, it's nice to see you.
Thanks for having me.
Okay, so you are a TikTok star. How worried are you about the national security issues around
like
TikTok?
you said, 170 million Americans. We love TikTok. Obviously, It's fun. My sister and I share videos. We laugh till we cry. It's been great for our business, right? We've gone from 0 to 2 million and
really on the back of TikTok.
More than anything, because TikTok lets a person without any following go viral. It's very rare now. You know, you can't do that on YouTube and older platforms. So people are discovering our app through TikTok that would have found it no other way. That's not why I'm against the bill. I'm against the bill because it's new censorship power for the government.
Interesting. But what about the national security concern? Do you have one?
Okay, so the only two things they say are Chinese propaganda, which no one has ever seen. There's been no instance of that, or American user data. But American user data, it's all stored in America with Oracle, an American company. So are they scared of it somehow getting to China? Well, why don't we ban the sale of American data to China? American companies do that.
What about the idea that this might be prospective, which is to say maybe today it is not a national security threat insofar as data is being misused today, but potentially if the Chinese government were to want to use it, that's why I say prospectively, in the future for some kind of, to create a national security threat, or, and some people use as an example, just the power of it, you know, when TikTok went and posted a full screen the day that they were worried that they were going to be banned, they put up a full screen and all these people started calling their Congress people. By the way, I think they have every right to do that. We have free speech in America to do that.
Right.
Having said that, there's some people who say, look at the power of this thing. If these guys wanted to flip a switch, boy, could they influence America.
It is incredibly powerful, and that's why they want to ban it. It's news and a narrative they can't control. It has nothing to do with China. The Chinese government doesn't own TikTok. ByteDance does.
China.
That's not even a Chinese company. That's a global company.
Senator Ted Cruz was in, and he said that he has big concerns about it because the algorithm is different and puts things out there. He went through cases of Uyghurs not being mentioned nearly as frequently on other social networks. Went through issue after issue where they are very much pushed on TikTok and not on other social media apps. And his concern is that. And I will also say, anybody who has access to the highest level of defense issues and concerns around this has come away and said this, and that's Republicans and Democrats alike. I don't have access to that. I know you were in the White House, but you probably didn't have the highest level security either. Those senators who do walk away and all say the same thing, and you don't see both sides of the aisle agree on much of anything these days.
The TikTok algorithm feeds you things off of your own interests. It doesn't promote anything. It doesn't put out its own content. Creators create things, they share videos, hard stop. It's a younger audience, which is why boomers have a hard time understanding this. Like,
okay,
why
I'm
isn't
not
there
a boomer? First
no,
of all,
Ted Cruz might be. Why is there less pro-Israel content? Well, the younger generation is less pro-Israel. That might be good or bad or whatever, but it's just feeding American public opinion. No one's actually like promoting or censoring Uyghur content. Like, no, it's just not a top of mind issue for most Americans. That's why you don't see it. You can Google or
But why
search.
is it so different from other social media apps? Because I thought they were doing the same thing.
It's not that different.
That's what Ted Cruz said. I don't.
All of these studies are based on hashtags. They say, oh, it's TikTok promotes suicide because the hashtag I'm done. Yes, Ted Cruz could be wrong. The hashtag I'm done is a suicide hashtag. It's like, I say that every day. These studies are all crazy. They're ridiculous. It has nothing to do, it's not controlled by China. Okay.
Okay, let me ask you a different question.
It's like gaslighting.
Truth Social.
Yeah.
What do you think? You investing in Truth Social?
By investing in it, well, I don't really invest, but yeah, I mean, I like it. I think it's a great platform. Obviously, everyone is there to see what Donald Trump says, and it's exciting. And in an election year,
I mean, I think one of the things we should know, for those who don't follow this, you have a dating app. That's your business.
And we do have a Truth Social account, yes.
And you have a Truth Social account because the business is putting conservatives, Republicans, I don't know what you describe the group as, together. That's what it is. So I would assume Truth Social would be a big part of that.
Actually, Truth Social has an older demographic, and that's why we use TikTok, because we're targeting a younger demographic, a dating app. We want to keep it cool and young and light. We're actually targeting a new conservative, which is a cultural conservative. Someone that might not understand economic policy, they might not follow Twitter or Fox News, but they know culturally things are weird in the country. Like they're being told men can get pregnant. That's why our videos resonate, because we're calling out just how crazy things are.
So Truth Social as a investment, not for you?
Well, I don't really invest like that, but sure, I would if I did.
No, I'm saying, like, you look at the valuation of it. You run a business. The company is bringing in $4 million in revenue. Do you say to yourself, this $4 billion
I really have no idea. I think, like, the upside is that it's an election year. You have Donald Trump, the most iconic man in the world, exclusively on one platform. What's the value out on that? I don't know. It's probably pretty high.
The other thing I wanted to ask you, just actually about sort of the future of the country, but also maybe even your own experience. There were a lot of very talented people who went into the Trump administration the last time, some of whom then left. I'm curious what you think, if in fact he wins again, and the polls would suggest he will if the election were today, what kind of people you think he's going to be able to surround himself with?
I think he'll get the best people. I think we have junior people in the first part of the administration, the first term, that can now occupy more senior roles. We know who they are. And Project 2025 at Heritage has been doing local and national news, gotten a ton of attention, and got a lot of resumes and good people already, and that's going to grow throughout the year, especially when he wins in November. We're going to get inundated. We're going to teach them how to be effective political appointees, and then we can hit the ground running in January 2025.
What do you think of his take on TikTok? We talked to him about it when he called into the broadcast a couple of weeks ago.
Yeah, I mean,
TikTok, and he was sort of not taking a real position.
Well, he's 100% correct.
Even though he had a position when he was the president.
He's 100% correct that this enables Google and Facebook to dominate, right? That's who started this narrative. 2019, Mark Zuckerberg said he was getting a ton of heat. He said, oh, actually, you should all be worried about TikTok, China, and then all the Republicans, they fell for it.
Right.
Okay, the Trump administration made some demands, and then TikTok exceeded them. Right? There's a third-party oversight over the algorithm. All the data is stored with Oracle. What else do you want? Do you want to stop American data going to China? Make a law that's illegal. That's it. You don't need this new power to censor Americans.
One of the things I wanted to read you, and I just thought it was fascinating, when you worked in the White House as director of presidential personnel, Jonathan Swan wrote about your role at the time in making sweeping staff changes. And he said the following. He said, this campaign helmed by Trump's loyalty enforcer, that's what he called you, a 30-year-old former body man who now runs hiring for the government, is part of the systematic purging of reassigning of those deemed insufficiently supportive of Trump. What do you think of that? And what do you think of what the American public should think of what that administration was then and what it would be in the future as it relates to trying to bring both sides together, to the extent you think that should be the case?
I think our understanding is the executive should have full control of the executive branch. His checks and balances is with other branches, not within his branch. Everyone that's working for him as a political appointee should be on board with the agenda. If you're not, just simply don't work there. So I think people should be optimistic about what we can accomplish in a second term based on what we've learned the first time and then having everyone rowing in the same direction.
So it was a little more than that, though. He also went on to say that you had become such a powerful figure in the West Wing by late 2020 that one senior staffer described you as effectively the deputy president, having finally realized many of his own advisors were thwarting his wishes, often because they considered them dangerous or too illegal. Trump enlisted McEntee to do the things his more senior aides would not. What do you say to that criticism?
Yeah, I think there were some people, there was this myth that Donald Trump was surrounded by yes men. No, he was surrounded by no men, you know, and his instincts were correct, especially if you're coming from an America First perspective. If you want to be a hardliner on immigration or bring the troops home from abroad or renegotiate trade, there's no one better, so you need people that are aligned with that vision.
I guess there's a question, though, about whether you want people who are aligned with this sort of broad vision, but folks who are willing to say, you know what, not a good idea, right?
Yeah.
I mean, you do want people with different perspectives around the table, hopefully to make your own ideas better to the extent that you listen to them.
Yeah, and I think actually Donald Trump is unique in that he would listen to anyone, right? If something comes on his desk, he'll ask anyone in the room what they think about it and then make his own decision. I think that's what makes him so great. Whether it's the valet or the national security advisor, he just wants to know your opinion and then he'll come to his own conclusion. So I think he always asks people their opinion, and I think it's actually a healthy way to do things.
And what is the chance that you return to the White House if, in fact, he returns to the White House?
Well, of course, I'd be honored. I was honored to the first time. I don't know in what capacity they would need me. If they did, I would. Right now, I'm totally focused on my dating app, The Right Stuff, for conservatives, and my business and growing my brand. So I'm focused on that, but it's an honor to serve, of course.
We appreciate you joining us this morning. Really appreciate it. Thank you.
Thank you.
Coming in.
All right, still to come this hour, White House economic advisor Lael Brainerd will join us on the latest award from the CHIPS Act and her view of the U.S. economy. A reminder right now, though, as we head to a break, you can get the best of Squawk Box in our daily podcast. Just follow Squawk Pod on your favorite podcast app, and you can listen anytime. We'll be right back. Our future. Welcome back to Squawk Box, everybody. The futures this morning have improved over the last couple of hours. We're off the very highs that we saw just a little bit ago, but the Dow still indicated up by about 50 points. You've got the S&P indicated up by 13 and the NASDAQ up by 66. Google kicking off its Cloud Next conference today. The company is expanding in its in-house chip efforts and introducing new hardware with an ARM-based data center processor and a new AI chip. The Axion chip will be focused on powering search and AI-driven services in an effort to reduce Google's reliance on external chip makers. Google plans to make the Axion chip available to cloud customers later this year, further expanding its cloud offerings. Shares of Google this morning are up by about 1.2%. When we come back, former SEC Chair Jay Clayton will join us to weigh in on a range of topics, including the Biden administration's stance on China. That is straight ahead. Right now, though, as we head to a break, let's check out the price of gold. It's up about 17% for the year. You can see right now it's up by $16, $23.67. Squawk Box will be right back.
Welcome back to Squawk Box. Yesterday, Treasury Secretary Janet Yellen wrapping up that big visit to China. Tonight, President Biden's hosting the Japanese Prime Minister at the White House. And earlier this morning, we spoke with U.S. Ambassador to Japan, Rahm Emanuel, and we talked about the issue of China. Here's what he had to say.
I would say to be very clear also to the Chinese leaders. You want international capital. You want actual business leaders investing and growing your economy. You cannot cheat and steal the way you did for the last 10 and 20 years to leadership. Can't happen.
Joining us right now is former SEC Chairman and CNBC contributor Jay Clayton. You've testified in front of the Select Committee before on these issues. Can you be a frenemy in this environment? Is that too far?
Well, we are. Right? We are frenemies right now. Janet Yellen is just returning from...
Well, she's saying to them, we need to be your friend. And then we have a whole bunch of other people saying, actually, these folks are our enemies.
Right? And I want to be fair. I think they're both right. what Rahm Emanuel is saying, and I thought that was one of the most cogent and comprehensive discussions of where we stand with China that I've heard. I applaud him for it. Very honest, very candid. Challenges, talked about coercion, talked about theft. And he's saying, look, we need to reset the table. And Secretary Yellen is there saying, look, we need to reset the table, but we also need each other right now. No one wants, we've talked about
the
this.
question we keep asking is, can you really have, everyone says, oh, we need to have both, but can you really do that? You know, if you tell me you hate me and yet you want to be my friend, it's very hard to actually think that could be true.
Right, and the question that we should be asking is, how do we get from where we are now, which is we continue to make a bunch of short-term, frenemy-type decisions, to a better place? And if that better place is a decoupling, or that better place is fair competition.
I thought Ron made a very good point about some of the changes and the, not just bilateral, but trilateral, kind of putting together a lattice work of powerful allies to stop and say, no, we're not going to go along with the way you're kind of dictating things.
I thought it was a terrific explanation. He was basically saying that China has used economic coercion to continue to facilitate the status quo. You know, the way that they have been playing this competition game. He says, we need to combat coercion with coercion. We can't just expect, we have expected too long that they would change their tactics.
And we've been the more mature party for too long.
And we have been the more mature party for too long. I thought it was a terrific explanation, which is, now let's get a lattice work together. Let's use our own economic power of that group to say to China, if you want to be part of a global trade, a global fair competition, you have got to change.
Okay, let's continue this on the TikTok front, since that was what we were just talking about actually before the break. Where do you land at this point on TikTok? Is TikTok genuinely a national security threat? And is it a threat today, or is it a prospective threat in the future, and should there be a distinction?
Look, I'm not qualified to say whether TikTok, what level of national security threat TikTok is. What do we know about media, all sorts of access to a citizenry throughout history, that countries are appropriately worried that it will be manipulated. We have the First Amendment. We take much more risk.
But that's perspective, first of all.
Right.
Right? Meaning, what you're talking about is a prospective threat, not a current. I think this is important.
No, I'm saying even today, okay? Because of the openness of our society, because of the open access to all sorts of social media platforms, we run a risk of foreign influence. That's 100% true. No one can doubt that. The question you're asking is TikTok a more acute threat to national security than any of the other platforms and people's access? That's I think, the question that people should be asking. If the answer is yes, and it's materially more acute, we have to do something about that.
Okay, different question. As we're talking about social media, let's go to X and Elon Musk, someone who you brought a case against, by the way, when you were the head of the SEC. The Brazil judge has now opened an inquiry into Musk after his refusal to block these accounts on X that he's saying should be allowed under free speech laws that he believes are in truth in Brazil, but he believes that the judge has made the wrong decision. At the same time, he's also said over the years that he would comply with local laws. What say you?
Well, let's go to the case at the SEC, which is fascinating, because what we did at the SEC, and people use this euphemism, the Twitter sitter, we said that when you're communicating with respect to Tesla and with your investors, we actually want a process in place to ensure that the information is accurate, fair, and complete, like it should be when you're communicating. When we did that, I can say that I was actually, I was a bit nervous, because right there is free speech to the public, and the First Amendment is such an important thing in America, but that's commercial speech. It was a time, place, and manner, and it wasn't a restriction on what he was saying. It was a restriction on process. Go to Brazil. What are they saying? They're saying, you know what? We don't want to hear those views. You have to block them. That's a big step, and I think he's right to say, look, that's a very different place to be than an open forum.
Okay, so one of the things that's fascinating about this, and Becky and I were talking about it just yesterday, is, if this was taking place in China, and by the way, I applaud him on the free speech stuff, both here in the U.S. and to some degree, or maybe a lot degree, in Brazil. But what's interesting is he able to do that because the business that he has in Brazil is not that big? Meaning, if this was China, or is the issue that Brazil has free speech, it's supposed to be somewhat of a democracy, and that's just different than China, and we shouldn't conflate these two types of issues. You see what I mean?
I see what you mean, and you know what? You probably had one of the best interviews ever with him. I think you should ask him next time you talk to him whether he treats China different from Brazil.
It's an interesting question.
Let me make a point on this.
Yep.
We're having this issue right now in the United States. The Supreme Court just heard a case on whether social media platforms were unduly influenced by the executive branch and executive branch agencies. The questions from the justices were such a good civics lesson, because of course if you're in the White House, you're going to have Lael Brainerd on. She's going to pitch their view, wants journalists to pick up their view. I mean, that's what I would say is appropriate dialogue. Where does appropriate dialogue become a threat and coercion around speech on these platforms? We're going to be facing that issue for years to come.
That's an excellent point. And you're right. But at the same time, should the administration not be able to contact? That's really weird.
The justices were great on both sides that you think of. There was no real partisanship there. They were like, wait a second, this is
like really getting down to the.
We need to grapple with this.
Yeah, it's a tough question.
Jay Clayton, thank you for coming on this morning. It's nice to see you at the table.
Thank you.
Thank you. When we come back, a lot more. Can you name that stock? It's a member of the Magnificent Seven. It's near now an all-time high, and analysts feel it still has room to run. We're going to unveil the name when Squawk Box comes right back. Can you guess?
Yabba dabba doo, retail traders. Oh, looky here. Double top. Double top, baby, yay. We might have broke resistance. $5.20, baby. I know somebody had that number. So that's our channel today. Squeezy. Oh, no. What did I see here? What the heck was I looking at? Something ain't right here. There it is. Jeez. Robbed me. Bicycle.
CNBC Pro.
Welcome back to Squawk Box. The mystery Magnificent 7 stock that is back within striking distance of its all-time high is, drumroll please, can you guess? Amazon. And Wall Street showing no signs of calling a top for the e-commerce and tech giant. Kate Rooney joins us from San Francisco with more on Amazon this morning.
Off with the music.
Hey, Andrew, good morning. Yeah, Wall Street has been overwhelmingly
Oh,
positive on
God. That's not music.
price
Oh.
increases and
The
calls
heck?
reaffirming Amazon as one of analysts' highest conviction stocks out there. The average target's now about $209. That's roughly 13% above where Amazon has been trading. 95% of the firms out there have the
That's too
equivalent
funny.
of a buy rating with just 3 holds, no sell ratings out there. As RBC put it in a note this week, Amazon is one of the internet's largest true alpha dogs thanks to its scale and advantages in e-commerce combined with its cloud business. It's a top pick for Morgan Stanley, too, that firm laying out what it calls better cost to serve and efficiency upside. Also points to Prime membership, driving some of the recurring revenue there, cloud adoption as well, hitting an inflection point, and advertising potential for Amazon. Jefferies, for its part, says there's still plenty to be excited about and plenty of runway ahead for Amazon, despite it nearly at an all-time high. Very few mentions, though, of AI as any sort of driver for this stock. Jefferies does bring it up.
Like I've said before, Google and Amazon did not run like the other ones did, 400 or 500%. So that's why they're pumping this one. They're going to sell off and they're going to throw their money in these two. They've already done it. I've been talking about it for a couple weeks.
Thank you for that report. Forward to see you again very, very soon.
All right, still to come this morning, the Biden administration granting billions to Taiwan Semiconductor to build its
Damn, you look
first
hot today,
US
Becky.
in Phoenix. National Economic Council Director Leo Brainerd will give us more of the details on this drive to increase chip production on U.S. soil. Squawk Box will be right back.
I don't think that's right to be dressing like that. Amazon. I'm gonna go get my coffee started. Then I'll go over the watch list. Support and resistance for coin. Yippee-yi, says moon.
Will.com.
Welcome back, everybody. Taiwan Semiconductor Manufacturing will use some of its $6.8 billion U.S. government grant to build its first U.S. hub in Phoenix. Joining us right now with more on this is Leo Brainerd. She is the director of the White House's National Economic Council. And Leo, let's talk a little bit about this, what it means for the country.
Yeah, this is a really important announcement by
Important.
TSMC. It really means that we are bringing leading edge semiconductor manufacturing to the United States that is in line with President Biden's vision, and it's a new chapter for the American semiconductor industry. Right now, 90% of those leading edge chips TSMC manufactures in Taiwan. Taiwan is an important supplier, but now TSMC's committing to 3 fabs here in Arizona. And of course, they produce the leading edge chips that go into high-speed compute, machine learning, AI models, and EV and AV technologies. This is an incredibly important announcement for the future of high tech in the United States.
There have already been delays that have been discussed with this for the scheduling for production at those plants. One of them came when TSMC said that it was going to have to push that timetable back because they couldn't find enough skilled workers. A second came when it delayed production for a second factory. That was
It's because we're raising a bunch of idiots in this country.
Realistically expect this to be
Becky.
up and running and to make it so that we are less reliant on chips that are manufactured in Taiwan.
Yeah, well, as you know, these very large, complex fabs require complicated construction schedules, but actually TSMC is on track for the construction of these fabs.
Becky's concerned about hiring anybody with enough common sense.
First fab this quarter, production coming online next year, and then the second fab 2 years after that, and the third fab before the end of the decade. So right now they're on track, and again, really important to see not just the leading edge fabrication capacity in Phoenix, but we're also seeing suppliers, advanced packaging, a whole ecosystem growing up around those commitments.
So when can we expect to have a reality of a chip supply chain that is not so reliant? Are you thinking 2028, 2030, or beyond?
Yeah, no, we are seeing already that next year that first fab will be producing advanced chips, and the second one 2 years after that, the third before the end of the decade. So all of those will be producing.
Oh, hogwash. Now, I wish I had I do have this on recording. I'm going to come back 5 years and we'll see how much of a mess they made. The federal government. This government.
Firing on all
That's exactly what Trump was trying to do.
Stronger than anticipated.
Make America great again.
The concern, though, has been inflation and whether that continues to stay stubborn. We do get a CPI number coming out tomorrow. What is your expectation for that number? What would it mean if it's a hotter number than Congress have expected to this point?
So what?
See, this inflation thing should already be in the bill. They didn't fix it. They haven't fixed it. They've just called.
Anticipation.
Can't fix greed.
Expansion in the supply side of the economy. With regard to inflation, we've seen it come down by 2/3, and I anticipate that we'll continue.
It ain't come down, baby.
Steady progress on inflation.
Go out and buy a lawnmower today.
Coming months, but of course that's really important for American consumers. So we're going to keep our eye on that, but I anticipate inflation will continue the remarkable progress that it's made.
Well, what do you say? I don't know. We've been talking for the past couple of days about this Greg It piece in the Wall Street Journal. It looks at the way people are polled about how they feel about the economy, yet some of how the data seems to be at odds with it. But I wanted to ask you, when you look at inflation over the last 3.5 years, what you tell the voter who legitimately feels, and the data would support their feeling, that their wages have been outstripped by inflation.
Yeah, so it is difficult for American consumers, and the president is very focused on the fact that when you go into the grocery store, some of those prices went up, and although they are not rising any longer, they are higher than they were pre-pandemic. So we're seeing, for instance, the price of a gallon of milk and the price of a dozen eggs coming down over the last year.
Liar.
Still up relative to pre-pandemic. Now, we know from the data that the earnings, wages have risen much faster than inflation, and so people actually have more purchasing power, even with those price increases, than they did pre-pandemic, and they have more wealth even with those price increases. But we have to keep fighting to bring down the prices of healthcare, where we are getting insulin prices down, inhaler prices down, caps on drug prices, as well as on things like groceries. Leo Brainerd, thank you for your time. Thank you.
We've got just a couple of seconds left, so make sure you join us on tomorrow. That's all I can say. Squawk on the Street begins right now.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Bit of a wild pre-market this morning, but futures near some session highs as we await CPI tomorrow. And yield somewhat well behaved, 10 years back to 4.37. Our roadmap begins with a prediction.
Drug prices lower. They've been working on that since Obamacare. I thought they fixed that already. You'll hear it in another 10 years, and you'll hear it another 10 years after that, and another 10 years after that. They'll never fix it. There is nothing to fix. Just quit spending, please.
Let's begin with this ongoing AI revolution and the possible concerns down the road. Last night on the social media platform X, Elon Musk weighed in on the rapid development of artificial intelligence.
My guess is that we'll have AI that is smarter than any one human, probably around the end of next year. And then AI, the total amount of sort of sentient compute of AI, I think, will probably exceed all humans in 5 years.
We're going to get a lot more today, Jim. Google Cloud CEO keynote at noon.
I love Tom Curry, and I think he's going to tell you Tom's Curry's going to do a good job. Don't call him Tom. I will not. I spent a lot of time at GTC, this is the NVIDIA conference. And we talked so much about when they're going to be smarter. And they are already. I was surprised at what Musk said. I mean, one of the things that Jensen says is, put your 100 smartest people together in a room, and it's smarter than they are. Already. It's just smarter. And by the way, anything that can be done physically, it can do better. What?
You keep saying this as though it's already here. Physically, but
no, I made it up because I really have nothing to say at 9:02, so I'm going for it.
About the bartender who couldn't really make your
drink. The bartender's an idiot. With the people who program.
The bartender's an idiot. I say that. How can you say it? Okay, we broke a double top today on Google. This is a very important breakthrough. This is bigger than the eclipse. Target 158.62. Google. When everybody starts to quit talking about Apple, that's when it'll bounce. Mister. Friday, we hit my bottom support line on Mister at 14.20, 14.30. And then we bounced up. And now we've pulled back to the top of that gap for Mister. How much time we got? Then we got Meta. Meta has to come down. We are at the 63 EMA on the hour.
a certain extent. It hasn't stopped him from moving forward with his own efforts in terms of AI. It is a race in many ways still. It's a race condition underway in terms of competition between Alphabet and Google, which was way ahead not that many years ago with DeepMind, but had concerns then even about the development of this technology in some areas. Mr. Musk obviously has been concerned and has criticized the company he once helped to found, being ChatGPT, or I should say OpenAI, excuse me, ChatGPT being the product. But here we are. I mean, and if he's right, and in 5 years, everything they're going to be, there's going to be general artificial intelligence that exceeds our own. I don't know what it means.
Well, what happens if we try to make money off it for a second and discuss some of the stuff? Okay. For instance, we talked about Thomas Curry. It's all about gas. Thanks, Mom and Dad. Okay, so we just found out that ARM is going to be the backbone of Google. This is new. This is on the Google.
This is
the Axion.
The Wall Street Journal story today about developing in-house chips.
Right, and I think that's totally, it's incredibly good for ARM.
And they used in their last quarter, Broadcom was a big beneficiary of the effort by Google in terms of making their own chips as well.
Yes.
Perhaps as much as $1 billion.
So I come in here and I say, Jim, where do you see support today on SPY? Well, I'll tell you what. We already completed the double top resistance from the stranded of low support of 518. So again, we're going to use a compass and a barometer of the 200 SMA on the 1 minute for the pivot point. That will tell us either we're going to drop down to a tubus and a freebie, or we'll hit a head and shoulder, or we'll stay at the 200 and break this top. Come back in double top. 10-4. Good morning, Magnificent. I hope you had plenty of sleep last night. I did. I went to bed at 4:30. The solar eclipse wore me out. When I stared up into the sky, I thought I saw an angel. Who's that blind man? He makes a lot of sense. Snow. Hike. Snow kind of has an ascending triangle at the bottom of the channel. Snow on a 20-day, 1 hour time frame with a 1, 2, 3 fault off of Head and Shoulders Friday, inversed. You gotta watch the VWAP on the SPY.
On TV, web, and they love Google. And Instagram, we were covered gaining because real TikTok. David, the teens hold the key.
There's a lot in there regarding TikTok, Instagram, Nike, Lulu.
Nike still maintains #1, but is losing share. Lulu is losing share. Hoka, Deckers picking up share. Dutch Bro taking share.
Hoka's picking up share with teenagers?
Yeah.
Not with old guys like me.
No.
No.
No one cares about you.
No, they don't.
They already know what you want.
Yeah, we don't.
See, David's mind is so made up. He's not with the teen surveys at all. He doesn't care that Sephora's taking share. You think he even knows what Sephora is? Let's see. Sephora.
By the way, the Piper Teen Survey comes out every year. It's 100 pages plus. It's actually, you say it moves stocks.
I think it's fantastic. And I've gone over it this morning. We spent Celsius moving up over Monster. Celsius is a publicly traded company.
Yes, it is.
By the way, Birkenstock did quite well.
Really?
Yes, really. No, next slide. VF Corp not doing that well.
Oh, okay.
Overall teen spending, though, down 6 year on year.
I think the teens are gloomy.
This is self-reported.
Yeah, I thought the teens were gloomy.
What they say they're spending.
Look, I think that, like everybody else, like some of the people that we, at the end of the show that's before us, Squawk, they talked about how the people are down. They think that inflation hasn't come down. The teens, I think, the teens are down. And it's not just TikTok brainwashing because they're switching to real.
The teens are down. Okay, thanks for that takeaway.
Well, maybe because they don't have 401ks to look at with stocks at record highs.
They don't have 401ks. What they have is YouTube.
And employment.
You can get a job if you want. Look, the notion of the survey is that to try to figure out forward thinking where the stocks are going to go. And I don't want to own Crocs after this. I don't want to own Lulu. I think Lulu could be.
Do you not want to own Nike as well?
Absolutely sell it. Sell Nike. I mean, brutal. Nike is losing share.
You've turned
in
on
every
Nike.
category.
Well, yeah,
slowly but surely you have
Nike
turned on
lost
them.
share in athletic. Well, you know what? Did you see the stock? That actually makes sense. Nike lost share in athletic brand preferences in the fall. We're now starting to see weakness in overall brand. And by the way, Nike gave the clothes of the NFL away, the worn jerseys are
To
Ruben.
The Ruben, right.
And people are not happy with it. Look at Nike. This is what the survey is showing you what that's about. That's hard to reverse. Under Armour also. If we sold Under Armour, not good. Hoka.
Yeah,
Yes,
but did
on,
they get Under Armour
on.
many years ago when the teens turned on Under Armour?
On my dictionary. On was just doing incredibly well. 15 bips of mind share sequentially. You and I both know. You tweeted about this morning, and I came in with my team, and we pulled this thing apart because we think this is one of the most market-moving surveys that we get.
It's really considered to do some rigorous work, which is interesting because the backdrop of viewership, say for the women's national championship game, did you see those ratings?
18 million.
18.7 million.
Unbelievable.
I mean, the biggest basketball game, pro or college, men or women, ever.
Now,
Is that right?
Do you know that at the peak,
I watched.
At the peak of ESPN, when they had 100 million people, my old friend John Walsh had come up with a plan to have an all-woman sports station. He said one day people would watch that more than they watch men. Now that was about 15 years ago. Boom. Right as rain.
Actually, it's since 2019, any basketball game. But for women's, it is a record.
Well, I just think that people are, it is a very positive thing, but it also is indicative of, ahead of the Olympics, what we want to watch.
Yep.
I'm out on thin ice with you, and I don't know what to do, frankly. I would love it to be 8:59, and we could just, like Superman when they ran the movie.
Really, you don't feel like it went well?
Goes backwards and
because I don't. Gene happened. I just don't feel. I just feel that I'm on quicksand with you. I don't know what to do.
We got a 3-minute break, maybe 2.5 minutes. We're going to take care
This
of that.
survey is really important.
Yeah.
We'll dig into it some more today. We're also going to talk to Matt Boss at JPM. Another upgrade from Boss today, this time AEO. We're upping PVH. Take a look at the pre-market here. Some interesting action in Europe, which we'll talk about in a moment. Squawk on the Streets back after a break.
Yeah. Well, it was said again. Google and Amazon. Their eyes are on Google today. SPY has a 1, 2, 3. Good morning, YouTubers. ARM up 3% pre-market from Mannequin. Parge, Goldman Sachs cuts Tesla. I heard that. Are they some kind of idiots?
Good morning, YouTubers.
How they? Well, I can accept 175 on Tesla. It's better than 120. Hard. And actually, we got a 1, 2, 3 fault. And we didn't make the 3 yesterday, so we're going to call this the 3. Do you understand? So we're going to move this down.
If you're hoping for Fed rate cuts from the Fed, I said maybe don't hold your breath. This economy doesn't need it. Just be glad we aren't getting any more rate hikes. Yikes.
That's Jim on Mad last night saying the economy doesn't need any rate cuts as rate cut expectations do fall to the lowest level since October with new inflation data coming up tomorrow. Of course, CPI, PPI the day after.
They're so full of shit. These guys are.
Are just reflecting better growth.
Yeah, they do. I mean, I had Ferguson on last night. A lot of people feel that's high-end plumbing. No, that's only about 15% of their business. It is piping. It is data center piping. And I was talking with the CEO about what Gina Raimondo said, the Secretary of Commerce. They want to hire 20,000 people. And he was saying, well, look, we don't have the people to do this. We don't have the plumbers to do it. We don't have the technicians to do anything. We're out of people. And that is what I think would be a very big issue, especially when you have travel and leisure hiring 50,000 people, healthcare hiring 70. Where are these people going to come from? And now, they could be, remember we asked Lyle Brainerd about...
All these illegal immigrants.
They won't tell us. It's just
all these criminals. They'll do it.
But I wish they would tell us. But I just don't know where you have to bus people everywhere. Wherever there are some tradespeople, they'll bust them in. So I think that the idea that we are, I mean, that this is all federal blasted. When you have TSM building something for $65 billion, that's federal. And so the federal government created jobs.
It is running hot. Morgan Stanley today, Jim, I'm sure you saw Katie Huberty's chart. It's titled, Do We Spy an Inflection? It measures shipper sentiment, highest in 7 quarters.
Right. But then we have small business, lowest in 11 years, and we had Bullard, who's a guy I really like, saying, I mean, the base case is 3 cuts. I just think that, look, I love this economy. Don't get me wrong, this economy is robust. It doesn't have all that bad inflation. But the idea that the people keep talking about cuts, well, show me where we can find workers.
You've got 12 million illegal immigrants.
Thinking about cutting? Wait, 3.8% unemployment, for heaven's sake. What are we thinking? Who are these people who make these numbers up? Now, I love Bullard, but honestly, I mean, you want to go through the roof and have
He's right.
Import workers from other countries? David?
Well, we already are.
Well, no, but
See, the federal government is we're at a total, I would say, socialist economy right now. They are trying to dictate where they want the economy to grow instead of the private sector making that decision. And 90% of the times it fails. If you can't, I mean, any businessman would know if you open up a business and you can't find the employees to work it, why are you opening it up, for one? They'll figure something out. We'll give you $200 an hour to come work, please. But that's okay. You've seen what they've done with the EV sector. They've got their hairy legs involved in it, and we were going in the right direction without them. We didn't need their help. I think I'm still upset because I let a legislator do my, or I forgot what he was, a representative do my taxes. He had a tax accounting business, and he was a politician, had an accounting firm, and then I turned around that next year and got audited. What the heck? During the Clinton years. I got audited twice during the Clinton years. And I kind of think they quit picking on the, I don't know. At least I got to knock on some kind of wood here. In other words, it's been way too long. I'm due. And I really was worried about this year. ARM is at the top of the linear channel at 134. Did ARM have any news? Artificial intelligence narrative. ARM-based.
All right, let's start talking a little stocks, shall we? And get to Jim's Mad Dash. We have an opening bell 7 minutes from now. We've talked a bit about that move in gold, which continues higher. Bitcoin also has had quite a nice rally as well. I'm not sure you can connect them. Don't know.
Well, yeah, no, there's stores of value. There's stores of value.
And by the way, commodities also, in general.
Right, they've had a big move. Now, if you look at this, you say, why haven't the stocks contributed? And why did they just get started now in the last few weeks? Well, the answer is that their finding costs have gone up dramatically. They went up from around 800 in 2018 all the way, David, to $1,300. That's Barrick, which is a great operator, Dr. Mark Briscoe. So you get the look at this. Now, David, I know you want the fabled head and shoulders. That is not Procter & Gamble. But what you need to know here is that the reason why these haven't kept pace is because they can't find enough, and because they can't find enough, that has jacked up the price of bullion. They're not replenishing. They used to replenish 1% a year. Now let's bring this even more back to stocks. Costco Try getting the gold. Dennis, we try every week to buy Costco gold on the website 3 times a week. Sold out, sold out, sold out, sold out. So this is going to add 1% to their comp stores.
All right, but I want to go back to the miners.
Sure.
And you can take a look at like the GDX, for example. Why? I don't understand.
Well, because
the metal just keeps going straight up. Are they going to start
now? They are, yes, because the delta has been reached. The cost at 1,300. Now, if you get 2,600, hey,
GDX.
Mine are Rooney McFatty, man.
I mean,
now,
finally starting to move a little bit.
The reason why it's
literally
going up. Now, a couple reasons why it's going up. David, no more arsenic. You can't use arsenic, okay? But Caterpillar trucks, autonomous, even they go up. Labor go up. Environmental damage go up. Insurance go up. So that's how they went from 800 to 1,300.
Cost.
Yeah, but
cost
now 1,300, making a lot of money with gold where it is, and you can't find gold at Costco. As much as I try.
Thank you for that.
Please have a deposit box. Don't put the gold under your mattress because bad guys know that it's there.
It's very heavy though.
Especially the politicians.
Opening bell a little more than 4 minutes from now.
Jimmy
Don't
boy.
forget, you want to catch us anytime and anywhere. Well, you can do that by listening to and following the Squawk on the Street Opening Bell podcast.
Okay, well, let it be said. We're going to have fun today. Yabba dabba doo. Arm. We got to have shoulder line resistance at 136.22. Yippee-yi. How are we playing it open? Well, I'd say we're at resistance. And the SPY did break resistance. So I'm thinking if the SPY holds the triple, 520.12, 520, we'll have an upward day today. If we can't hold 520.12, we might pull back and hit the 200 on the SPY on the 1 minute. That's my game plan. We hold 520 and move up today, or we pull back and hit the 200 and retest. Go get some more coffee.
Watch Amazon today, rising in the
We have less than a minute.
after hitting a 52-week.
Watch Amazon today.
Is aiming for its first record closing high in almost 3 years. Jim, got to go back to July of 21.
A lot of things that are behind the scenes that are excellent. They're still lowering the cost of something that's coming to your house. They're beginning to see an inflection in Europe because of Prime Video, which is really
52-14-48.
It's a great way to be able
Jim,
to get Europeans, and Europe is very, very important.
if you are not going to talk about stocks, we're going to talk about support here on the SPX, and I'm going to cut you off. Do you understand? Washboardjim says support will be the previous high that we had after hours or yesterday at 5214.56. And I'm going to set an alert for the double bottom. It's a good idea, Jim. Spy says it's finished. I say it is too, but we still got to wait for them numbers, right? Small business index 8.5 versus 9.4. Prime Minister Netanyahu says the date has been set for a invasion of Gaza. God darn. Israel Netanyahu says the date has been set for the Rafah, R-A-F-A-H, invasion of Gaza. We got a megaphone. Nope, we got it. Okay. Something's happening here. Spy broke out. I gotta wait. Okay. This is what we're gonna do. This is how I'm gonna play this breakout. I'm gonna wait. Here's the pullback. Now this is the starting of the flag. We're gonna wait to see what kind of indicator it's going to give us to take this trade. Unless you have another one you want me to study. Okay, get ready. We're going to get our support level for the double bottom. I think we're up, well, I think it's trying to tell us something. But it might be ahead of itself. Because we're still waiting for the PPI and the CPI, right? Here's the double bottom, triggered. The crowd's going wild. Where's my alert at? Lily had an alert gave this morning. Lily. Okay, Randy. On your mark. Do you think we can catch it off the support level of 514, 5214.56? Or should we move over to the SPY? SPY can drop to 519.37. We have a 1, 2, 3. We have a 1, 2, 3. The crowd doesn't know what to do now. Hammer? Hammer on the SPY. Or actually not a hammer, but well, yeah, that's a buy signal. Washboardjim. The 52.25 strikes or the 52.30s. Okay, now we know what one we want to take, the 52.30. We're above the VWAP. We want to see a chicken enter the hen house here. And we got a higher lows. So if we can bring this, put that body right there. And we already took, no, if we can get here and touch this, I'm going to take the trade. This is the 52.30. Oh, no, that's a SPY. Damn it. I'm screwed up again. I would have took that there double bottom. I was too late. So that's our first pattern. Is the double bottom with a hammer. This is a lot more clear trade than this one. The SPX. So now we're going to wait for a 1, 2, 3 and see if it holds. Or we bounce above the 9. We got 3 white soldiers buying at the bid. Okay, watch Amazon. Watch Amazon. You see where support is? You see this pull back right here? We want to get it off this. You know, they're pumping Amazon this morning. Yeah, we hit it. We just now went below it. I think we're going to drop more. We are building a flag right here. So we've got 2 tops and 2 bottoms now. So we're waiting for number 3 on the bottom, and then we're going to take the trade on SPX. Maybe right there. So we're building what you would call is kind of like a wedge. A wide wedge. And we've had a 1, 2 on top and a 1, 2 on the bottom. And we got to wait for a 3 and then a pullback either way. I'd rather see it come back and hit this. Got an alert. NVIDIA says it's going down. Now we're at support on NVIDIA. We got a symmetrical flag. Watch NVIDIA right here. We got snake. And we got a symmetrical flag. We got these two big fat candles. I'm giving you all kinds of opportunities to look here. Okay, we got our 1, 2, 3. Damn, Jim, you nailed it. Well, it's the boogeyman. Now we're going to start to take off. If this thing holds support, it's a double top breakout or a refusal. I'm not in the trade. I missed it. I wish I'd have saw that there. I was looking at the SPY, and this one charted out perfect. Now we've got our flag here. So we're trying to figure out what we're going to do. We want to see it knife to the 200. But you don't know. And then take the trade. But this is, I mean, this can go either way is what I'm trying to say. And it being a breakout, I think it's going to come down. And then I'm going to be prepared. And that's the SPY. So get your SPY chart up. Contracts ready. With the SPX. Ooh. About ready to trigger my alert on the SP. There it is. Now they're going to drop. And I'll be ready to. There's a double bottom right there off that wick. So that's our next bridge of support. You ready? Here in Missouri, you want to make sure that you spray off on you when you go into the woods, or you might get ate up by chiggers. High gamma on SPX at 5210 and 5250. You have to one day tell me about this gamma. Arm. Okay, get ready. There it goes. Bingo, nailed it. Here it comes. Randy. Randy. $52.30s at 3:30 ride day. That we can still drop. I'm taking the tweezer bottom here. I don't know if it's going to pan out or not. Tweezer bottom with a double bottom, boo-boo. But I'll set a stop because this is the way we pack our bags, pack our bags, pack our bags. You're going to break resistance at the VWAP. If you're in this trade, enter at your own risk. I think I have too much gamma, don't I, Jen? It's just not looking good here. Oh, Jimmy sees a falling wedge. We can fall one more candle. So I'm going to keep that. I'm going to stay in the trade because we have a falling wedge. They can easily hit that 200. What is the 200 on here? I don't have the 200 on here. What? The hell is going on here? I know I have it on there. I don't understand why I don't have the 200 in here. There's my 200. Well, come on. I think I've already dropped below it. Right now I'm down on it, so I didn't get out of it. But I should have. Okay, Jimmy's going to get out of this one. Start over. SPX just now hit the 200. So I'm going to stay in it. We got a golden cross. And I'm going to add 4 to this 1. Put that on the wrong one. Doot. give it to me for cheaper. Oh, man. Do it or not. Okay, he did it. Okay. I knew we were going to sell off. So I'm going to try to scalp my way out of this with less. We got a golden cross, but we're still bearish because we're under the 200. So I picked up 1 at 330 and 4 at 200. I got 1100 in this. Now I'm even, almost even. Well, I was. Uh-oh. Back to 2. If I can break that 200, I think it's going to be a pretty present. If not, I took a loss. Tweezer bottom. Anybody in this trade, if I don't hold here, I'm out. Oh, at 52.05, what is that? Whoa, 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 Jim, don't get carried away. Stay in it. Yeah, oh man. Yeah. We could drop more. Stay in it. We definitely can drop more. We could see 52. Drop, $8 drop. We hit the 200 here, we hit the 200 here, and we hit the 200 here, and we could do it again right here if we don't break this 21. This is on the 5-minute. Vanessa Filat. In the red. Is anybody in this trade? Subway. This is our bottom line right here. We're kind of bearish and bullish at the same time. As long as we're under the 200, we're bearish. And then we got this little bitty golden cross, which I don't think it has as much as that 200 has. If we break the 200, it's a pretty good shot up. In other words, I'm stuck. Amazon's got a snake breakout pulled back to a double bottom. Amazon. So let's go through some of these tickers and see if we're getting bullish on them. Amazon looks bullish here at a double bottom, but getting ready to squeeze. Google broke out. SPY can drop more. It's real strong support down here on the SPY. Your next support is right there at 518.59. $518.63. You know, this is going to do something any second. Some ping pong. I got some at $2 and at 130. One at 230, 330. Like if I even make it to the 200 and be at 50 cents, I might sell it. No, it's not in our favor. No. God darn it. Two, three. Double bottom. Lower low. Hammer, hammer, hammer. This is always the hardest part, is the waiting. Jimmy doesn't like to wait. So that's 4 of them. This one here almost hit it. I'm going to call it a hit. I'm going to call them all a hit. So it's definitely hovering resistance. And it held support. I'll get stopped out if we're going lower. And then I'll probably regret it. Because it can come down here and hit this. 5,200. Easily. Right now you're at a shoulder line. Left shoulder, head, and right shoulder. Da-na. Man, I ain't going down for that. I wasn't at Diddy's house, I promise you. Way to go, baby. Break out. I ain't going down for that. Break the 200 because it ain't going nowhere. Yeah, I don't like this here. This line, I do not like this line at all. I mean, I really don't. So we have to break here, or we have to break the 200, or we'll end up down here today. And that's where I'll load up, make back my $300 or 200. And got a golden cross. Snake breakout, pull back, boom, baby. Today's red is Mr. down. Ooh, Mr. down $100. And that Kava, that one there. We got a nice snake here on we got a wedge. Well, yeah, kind of a wedge. You call it wedge with a inverse head and shoulders on Mr. Double bottom on SMCI. So that's at a support level. And Lily was down $12. We broke support on Lily. So resistance will be the old support. Come on, man. I'm down 230. It ain't working for me. Hold on. I don't think it's going to work. CCL at 1544, Norwegian, JP Morgan down 196. Tesla broke out of the 123. This ain't looking, this is definitely going to come down. Come on now. Didn't jump up much when I hit the 200. That kind of disappointed me. So we've got an expansion pattern out of the snake. Megaphone. That's your pattern. Then you got your 1, 2, and 3. So now we got to come back up here and hit the 3 up here if the pattern's correct. If not, it's going to be an ugly day. Could be an ugly day if this doesn't hold right here. One, two, three. And 1, 2, 3 up here. They can continue on or stop and then come down to the 4th time and bam, snake. So I'm getting out definitely if this doesn't break. Last chance. I'm surprised. I had 3 white soldiers there. Yeah, it ain't being too tough right now. Being very weak. Volume is low. I'm definitely pushing us to the limit here. The dollar down 50 cents. Right at my neighbor talking about Netflix. It's down 5. Ooh, Netflix took a big hit today. At the 200 here. Netflix. On the 30-minute. Come on, baby, break out. See, now if we hit the 3, it'll be a breakout because the 200 is now under the 3. So if we break the 200, it's an automatic to the 50, and I might just sell it. I don't know. Could go up higher. We had a number 4 on the bottom. And then we're going to make me lunch here in a second. I know we're sweating right here, but we got a megaphone pattern breaking out of a snake. We know how them turn out. But it's just not a wide-lipped one. Still could be, it's still bearish as long as we're under the 200. We get above the 200, then it's going to be clean day. Just that. Okay. I promise on Mother's Day, I'll buy my mother a box of chocolates. Jen, do you have any Baileys in your cupboard? Let's break the 200 now. Mira, don't be a hero. I like African coffee. Cannabis butter. Yeah, this thing, come on. We couldn't break the 200, see? That body. I want to sing I'm excited. I'm almost out of breath. Break. So now I got 2 resistance levels here. But that don't count. It's right there now. Okay, I'm going to walk into the kitchen and grab a Valium and a shot of vodka. And when I get back, I want this to break to 5214.56. Do you understand me? Dick. Oak. I think I am getting old. I can't leave around like I used to. Well, it didn't work out. This is what I'm looking for right here. But I don't know if we're going to have it that way. Not with this. Now, if we start to build some respect up along here and have higher lows, I think we'll squeeze out. But if we come back down again, it ain't going to look too good. We're waiting to break the 200 SMA so we can move on to the upside. Now, if we keep these higher lows here, Jimmy will be very happy. As of now, he's not. It's the hardest part, getting in at the wrong time and then not knowing if it's going to break out and feeling very bearish. Break out. I could add a few here and take a big chance. The bigger one. Like 10 here at 160. But that's too late, see. Down here would have been better. 150. So let's keep the higher low. And flag out of this thing. So we're down to another minute. Break out. That's an ascending, well, kind of. See how we're squeezing right here? We got like 1 minute candle going over next. It's either going to drop below or it's going to break. IWM pulled back, hit the 200 and bounced up. Traded the SPX. SPY has an inverse head and shoulders right now. No, didn't hold it. Well. So now we got us a little inverse head and shoulders. I'm still in this thing, but we could drop more. We could drop quite a bit. 5,200 is what I said earlier. It's kind of gone up a little bit. 5204, under 5204. Yeah, it's going to drop down here. 5203. SPX volume mark 50. Okay, one of my alert just triggered. Whoa. Yep, I said it was going to knife. It's not looking good. I can't see shit. It can get a lot worse. We're definitely on the threshold of the 21 right now. SPX on the daily. Be sure to get out if you're in trouble. And we still got more room on the SPX to drop down to 51.49. We busted a major support level. And that's right here. That's on the weekly. I'm not saying I'm totally bearish yet because we're above the 9. Right around 5,200. Yeah. Now on the daily is a little bearish.
Is maturing now and really wants to try to work with the global regulators in the markets that it operates in. Now just moving on to broadly the markets, of course, crypto markets have been very buoyant. Bitcoin sitting near those all-time highs as well. And we're
PHAT.
That key Bitcoin event that happens every 4 years.
No, I'm not
In
green.
which the supply of Bitcoin onto the market gets reduced, and this often precedes a bull run.
Dadgummit.
But actually, this cycle is very
I hate to start my
different.
day out like this.
All-time high in Bitcoin, and that's something that the CEO stressed as I asked him about his outlook on the crypto markets. Let's just listen in.
Normally after about 6 months after a halving that you see a new all-time high in terms of prices. But this time around, it happens even before the halving, right? Which is why it's unique.
We all took a loss.
And one of the key reasons is really the introduction of the ETF, where you bring in so many new users, new liquidity.
So Tech said his price forecast ahead of this year was $80,000 on Bitcoin. He said that Actually, he thinks the market's going to go a lot higher than that. He's clearly very bullish. A lot of the players I've been speaking
We ain't
to
missed
about
out on it
the
yet.
blockchain week here are, of course, as you would expect, very bullish, given, I think, two things. One, the excitement
P-hat.
around those spot Bitcoin ETFs, and two, the halving that is upcoming, which, as I said,
We did
has been very
call it, though.
supportive in the past for crypto prices. I've
Yeah.
seen some pretty wild calls this year, guys, on Bitcoin. I've seen 100,000, 150,000. At this point, it's anyone's guess where it's going to go. For now, back to you.
Absolutely, Arjun. Thank you. It is sitting above 69.
Yeah, I'm not too confident on
Okay.
RIT, on
Amazon shares
SPX
within
at all.
inches of all-time highs. So what investors need to know and where the street stands on the stock is after this. We'll be back in just a quick moment.
They're going to chatter about Amazon and Google because it's the only one that didn't really run with all those other AIs. They ran 500 or 600%. So they've been pumping them real hard for the last couple of weeks. Amazon and Google. Now we got we got tweezer bottom here on the SPX. And I got to think about how I'm going to make this money back. See, this none of this makes sense. I'm definitely too far out of the money now. So it might be a good idea. Oh, who told me that? To move closer to the money. Mike, was it you? When you get moved out of the money too far? $52.10s. SMCI real close to hitting my support. Nvidia's got a big hammer down here with a long leg doji and another hammer and another doji. Nvidia. AMD at a shoulder line. Apple at the 200 on the 1 minute. Yeah, Jimmy got beat up on this one. SPY. SPX. Damn it. Wow, I just was looking at the IWM and it just wow, it's the pot stocks are down. Hillary is at 206, Tilray. We got a lot of, I mean, we're close to a lot of supports on my fat cat runners. And Tesla broke out. See, they keep bashing Tesla and they keep babying these other pieces of crap. Woo, more selling. I'm gonna make some money here in a little bit. Jimmy doesn't like taking losses. Does anybody understand that? Magnificent. Give me a D. Give me a D, please. I know it's against your will, but oh, you got out of a put? Oh, God. I was right, though, wasn't I? I should have stuck with my first instinct. That's bad. I want a D. Ha ha ha. Only 2,000 a contract. Don't make him mad, Randy. And say you're sorry. He's probably rolling up in a ball right now. Fuck. Ugh. Okay. What do the ladies do when they make a mistake? I know they don't do it very often. Do they ever apologize? Men? Amazon, looking sexy here. We got Apple at the 200. And Meta keep pulling on back. The lady blames her husband. Okay. That makes a lot of sense. Randy knows. Randy, why didn't you get the noodles for the chicken soup tonight?
Literally from the supplier in China all the way.
It's getting worse.
We think that they're basically taking a page out of the AWS playbook of offering logistics as a service. We think it's a $100 billion business, and that's good investment. We think, we'd love to see them invest more in that, because we think that's, again, $100 billion
22.
that only Amazon is positioned to win.
Yusuf, we started out talking about the e-commerce business, and the Piper Sandler survey that surveys teens twice a year came out today and shows us again that Amazon just continues to dominate teen market share. Really impressive numbers. 61% basically when they're asked where do they shop online, Amazon continues to be number one, but by 61%, and the second is Shein at 7%. I'm wondering how important it might be for an Amazon to grab a younger consumer's mind share.
Okay, ladies and gentlemen, watch SMCI here. We got a setup, but I don't know if it's going to hold.
I think it's super important. But remember, so by our math,
I just can't listen to this hogwash when I'm in a red day here, and I got to figure out how to win. This keeps falling on down. I'm out of the stock. Don't take me wrong. Is anybody still holding this? They don't want to talk to me? We have 5149.38 next. Actually, it could be a little higher. Right there. We have a 1, 2, 3. Inverse head and shoulders. We might be getting somewhere here. I'm going to buy a bunch of this crap. We got a double confirmation. And we also have a confirmation down here. Oh, crap. Might have to call Brandon here, see if he can do a trick or two down there, Feds. Okay, we're going to see if we hold this support right now. Mike? It's Washboardjim from Planet Mars. Mike, this is Washboardjim from Planet Mars. Read. $5.13. Okay, I'm going to give you my guess. We got 5.13. I'm going to clean this up because I nailed it yesterday and I'll nail it again today. This is definitely a washout. And the market has remember, they're backing out of it, but they said the market priced in 6 rate cuts. That's what they said. And they were wrong. We're holding up the 9 on the weekly. So Randy, you ready for this? My number is 514.63. $514.63. If I can never get it again, I might adjust it. $513.76 for sure. Yep. I rest my case. Jim, is it true that you're going to take the George Foreman cooker today and cook a hot dog? It's true. This is just not an ordinary hot dog. This has beef in it. Randy, we wanted to touch 513.76. Roger that. But we are at a double bottom with a tweezer bottom. This could be it. Okay. The crowd's anticipating. Well, what do we got here? Somebody put a chart in the room. Oh, Randy put a chart in the room. Ladies and gentlemen, I don't see this very often, but Randy put a chart in the room. Please look at it. He's talking about a double bottom. Magnificent. Give Randy an A+ when you have time. Jim says one more red candle. You have been trying to learn it? You will become the best. Follow my steps. Take your right finger and stick it up your butt. Take your left finger and stick it in your nose and yell, Sasquatch. You know, I'm just being... Randy, I'm glad you take my sense of humor. It's pretty funny. Oh. Mike left. Dadgum him. I was needing his help. Yeah, at me. People used to laugh at me all the time and throw beer bottles at the cage. Knife coming? Well, we're going to find out.
Equity market. We have a lot of companies you think are poised to go public. We have relatively decent performance of the IPOs you just pointed to, and yet,
Yeah, I think the real problem is for a lot of these companies, particularly biotech and tech, is a valuation haircut. You hear this time and time again. The rounds of funding that were happening in 2021 and 2022, magnitudes of order above where the people want to price it right now. And who could blame them? The IPO people, our viewers who buy this stuff after its price, routinely see a pop on the first day and lose money in the days afterwards. And I get the email. Thank you very much, Bob. We had a nice price. You had the CEO on the first day, and we bought it, and we're down a month later. And that has happened time and time again. And I think the viewers have a point. They need...
Well, the viewers have a great point. You never buy an IPO unless you're scalping it or day trading it at open. You don't buy an IPO and hope that it goes up, because it's a momentum trade and you got to let it consolidate to make your entry for a swing. Do you understand me, old man? I hope you're not telling people to, unless you're on the initial offering and you're in early, and then you got to wait to sell it. In most cases. Okay, we're coming back down for the third time here out of this snake on the SPY. So getting ready for another squeeze. Randy, If you can count to 3, you can trade with Washboard. There it is. 1, 2, 3. Now. The timing is now. See, it's actually a wedge. So it can go lower. Yep, see? You see this one right here, this low? That's a little bit lower than your other one. So now, you know, if we hold this low here, okay. There's your 1, 2, 3. Bubbits. Tubus. And a freebie. I would love to see 513.76, but I might not get it. So I'm going to go into the kitchen. There's so many squeezes happened today. I'm just scared of them all. It's not one of them days where you can sit here and call them out right and left. I mean, I'm sitting here looking at 879.32. I called this out yesterday for SMCI. I didn't take it yesterday. I said I'm going to wait. Now I'm here. And I don't know if I want to say wait. I've got a 1, 2, 3 breakout with some kind of wedge here. Well, actually, hell, I don't know what to call that. If we were going up, it would be a bull flag. And it still would be a bull flag, I think, if we were going down out of a snake. So, I mean, it's set up also to break out. Watch it. Watch it, watch it, watch it. Okay. We got a fallen wedge on the SPY. Watch the SPY here. Fallen wedge on the SPY. Out of the snake. I mean, this looks sexy. It looks sexy, man. Gosh. This looks real sexy. A lot of red on this. Missed her down $130. It was 89 earlier. Now we've got, what's this? SPX at the 21, and we're past the 9. Randy? 9 over the 21 crossover. Who's got the crossover set up? Tell me what you're seeing. Someone said 13 and something, or... So I'm looking at the 5210s. So we got the 9 crossing the 21 here. 9 cross the 21, and then the 9 crossing up across the 21 here. And that's your resistance. We break this resistance, we'll go a lot higher. Not a lot, but we'll go higher. Double top at 5169.93, Randy. Oh boy. Snake breakout wedge, falling wedge to the VWAP on the SPY. My target 5, and it moves. For right now, it's 517.50. Do you understand? Let's do it. Are you going to make it go up to the VWAP, Randy? I think any woman that can put up with you for 40 years needs to be put up on a pedestal. That's the gospel truth. We just want to hear about the good times. Not the time where you had to go out and buy a new iron skillet because she cracked the other one on your head. So we got snake breakout from a fallen wedge on a 1, 2, 3. I mean, it's a beautiful setup right here. If we can gain respect at 5169.93, we're off to the races. And my oh, impressive. No, not really. It will be here in a second. Okay. You're right, Mannequin. I will in the day green. Probably not on the trade I was in. I sold out, but on the recap here I will be. 1, 2, 3. 1, 2, 3. 1, 2, 3. Well, that ain't gonna work that. Ah. It's not an easy day today. What's tomorrow be a zip? See, this run still scares me on NVIDIA. 1, 2, 3, 4 months almost. Up 120% or 100%. Snake breakout. This is the breakout. Well, you know, that's the breakout. Still, it's a pullback too. 1, 2, 3, 1, 2, 3, boom. Now we got to get on up. The 5210 strikes are now at 150, 155. Go, baby. Snake breakout. 1, 2, 3. 1, 2, 3. Boom, consolidate, extension. I'm going to be like that one guy on CNBC. He's up here talking. Oh, it's just nothing but a flush out. We have this all the time. Oh, guy up here. Yeah, man, I'm telling you, I've been back in the day. We used to have these 2 or 3% pullbacks, and everybody'd freak out. Now we have these 100, 200% pullbacks, and it's nothing. Don't worry about it. Just go wet your whistle. Grab you a beer and come back, and the thing will be back up before you do it. This is what I should have done this morning without jumping right into the trade. Because I felt my fingers were sweaty. I felt like it wasn't time to be messing around. We had the PPI numbers coming out. It's just not wasn't a smart move. So I had to wait and then wait for the pattern to show up, and boom. You're up $600. It's got to be more disciplined. Got discipline. I mean, I really love this strategy. I just got to wait for the pattern. Basically, to go in when I want to really go in. If we break this and go to the 200, I'll probably have a 200 or 300%er here. I'm going to sell 5. Well. God. Randy, should I sell? I want to make a business decision, but if we break this, bam, man, there's nothing holding it back. Ugh. Do-do-do-do. Snake breakout, pullback, boom, to the 51 and the 50 SMA. $51 EMA and the 50 SMA. We're squeezing. Break it. Come on, you cotton picker. You have 5/16/64. Well, you're there. Oh, 516.64. Yep, 516.64. I see it around there, a little bit higher, but not much. Breakout. Very choppy market. Jim, is that you snorting? I don't snort. Go, baby. Right now we're at 175. I think we're going to break it. If we break it, I'm going to be a happy camper. And I'll buy you all a lemon drop. $190. Oh gosh. I got a little excited there. SMC Head and Shoulders bounce at support. Yep. SPX, baby. The crowd is going wild here at the sports arena. We are at $2 now from $135. I think now would be a mistake selling. So at this point, I'm just going to ride it out. And I think I'm going to take my chicken out of the freezer, and start to thaw it for chicken soup. Actually, I can't cook it tonight. I have to wait until tomorrow. We're now almost up $100 a contract, and I got 10,000 of them. Has anybody in here ever been circled by a rattlesnake? Nobody's been circled by a rattlesnake in this room? You have eaten rattlesnake? Very good. Not too many people have done that. I ate possum too. I ate squirrel butt one time. Breakout. I ate crawdads. I've drank coffee out of bird poop. Try coffee out of bird poop. I'm so happy to have this winning trade. Did anybody take this other one? This rebound? Please tell me you did. That's right. It's great stuff. I think it's time to take a little profit here. Yes. I got lucky. I got unlucky and then I got lucky. Mamma mia, what's a Mario? Now we're retesting, and we're going to come up to the 200 SMA, and everything's going to be all better. The SPX, SPY hit the 63, and we break it, we're going to the 200. I really think we should. We do have a 1, 2, 3 on the way up and a 1, 2, 3 on the way down. Yes, we do. Bear flag. I see it, but I don't believe it. Randy. Mister's already rebounded some. Snake breakout, pullback, boom. SMCI now down 40. Had a little falling wedge out of the snake. Not a big spread, so that doesn't mean it's very bullish or the squeeze will be that big, but we are squeezing now into another flag here on SMCI. You see that? That flag? So we're getting ready to squeeze on her again to the upside, and I think we could have a breakout this time. Yes, I do. Get ready. Mannequin, do you see it? That's a resistance at the 63. Unless you think it's going to break out. And your hard resistance will be this double top. 893.70. Right there, 893.70. And it could break the 63 and hit the 893.70 and pull back hard. But right now you got an ascending triangle. Breakout of a falling wedge out of a snake. Where is it at, Jimmy? Right here. I'll show it to you. From that line right there over to there. And then you got that to that. Snake, falling wedge, ascending triangle, boom to the 200. 901 something.
Hi, Seema.
Hey, Carl. Travel has no doubt kept inflation higher than expected, with airfares up about 8% on a 3-month annualized basis, while lodging up about 3.4%.
Honey, would you stop with the frickin' lies? It's up more than 8% from the bottom. You just went back a couple of months.
That's up 3.4% from a year ago.
They're up almost 40, 50, 60, 70%.
Lowering their prices amid slowing demand. Average daily rates there ranging from 70 to 90.
I don't know where you're pricing your. I look at them every day and I'm going, what the? Paying no $1,000 to go to Jamaica.
The stock market are still willing to pay up for resort travel, while value-oriented, price-conscious consumers are thinking twice about taking that vacation or trip. It's continuing to influence how hotel operators are thinking about growing their pipeline this year. Intercontinental just last week signing twice as many deals in the luxury and lifestyle space than it had 5 years ago.
IHG, I've never heard of that one.
Like Marriott and Hilton. Talk about the cruise lines, though, continuing to expand their offerings. Norwegian Cruise Line just revealing
Knife.
the biggest ship order ever, along with plans to further develop its private island in the Bahamas. It's seen by Truist analysts as a way to go after Royal Caribbean's Coco Cay experience, and I think concerns about an oversupply is what's hitting.
Snake breakout, pullback, higher low.
CEO of Norwegian Cruise Line
Set up for IHG, but I don't like the volume.
Yeah, it's going to be interesting, Seema, because the industry, I was thinking mostly of Carnival, but have been pretty adamant that we're not going to over-expand when it comes to capacity, even though we have this incredible traffic and pricing power.
Yeah, that seems to be the messaging from the major cruise lines, but I think because demand is continuing to improve going into summer, fall, and even early next year, they're really incentivized right now to put in those orders. As you know, Carl, it takes about 2 to 4 years to even build these huge, massive ships. So even if they put the order in now, we're talking about those ships not coming to market for about 2 years.
Tesla's at the 200.
In the cruise industry and when it comes to premium travel, which is definitely what's been outperforming. Seema, thanks. Seema Modi. couple hours into trading here. We did take that brief spill. Dow's down almost 200. Let's get post to post with Bob Pisani.
You know, Carl, somebody hit the take profits button about an hour ago. I mean, we were up, and we've been emphasizing some of the market leaderships and industrials and things like that. All of the big market leaders that have been leaders this year are trading down today. So I've been mentioning some of these big industrials like Parker Hannifin, Eaton hitting new highs on Friday. It was 330, and now look down, 315 here. Down here. No particular news out there, but again, this was one of those big market leaders, GE, along with that. Insurance stocks, Hartford's right here. Insurance stocks have been huge market leaders this year. Hartford's up 24%, but it's down today. Allstate's down today. It's had a great year. They say about all had pricing. That's the key story here. Aflac's had a great year. It's trading down today. So again, somebody's sort of hitting the take profit button. What else? Oh, Lilly. This was one of the big leaders, of course, weight loss drugs in first quarter. This was $800.
This guy right here.
And now $760. Been slowly moving down as well.
I've good flashbacks. This guy right here, back during the crash of Obama, they all, the market just kept, after he got elected, it just kept tanking and big time, taking and taking. It dropped 50% from its highs, from 13,000 to 65, 7,000. And this guy here, he was just going berserk, screaming, "There's no reason for this, no reason." I mean, we were losing 6, 7, 800,000 points a day for 3 months. It was just bizarre to watch these people, how they were reacting to this, because they didn't expect to sell off like that. They got their guy in the White House, and the market just kept tanking. And I couldn't understand why they were picking him anyway, but because at the time they were having big Wall Street protests, and Obama had everybody worked up against Wall Street. But everybody on Wall Street was paying his tab. It was the funniest thing I ever saw in my entire life. I mean, the donations that came into that man from Wall Street was just incredible. It's like they wanted to be markers of the first black president or something. I don't know. It was just strange. And then the market crashed, and they couldn't handle it. And they defined it differently than what I did, of course. They always do. Just the way they predicted 6 rate cuts. They make things up as we go.
Coming up after the break, the stock that Needham is calling an underappreciated semiconductor AI story. The analyst behind that call is going to join us next. Plus, we're just a couple days away from the
SMH
CNBC franchise, Cities of Success. Our latest episode is going to shine the spotlight on Denver and Boulder, Colorado. Premieres Thursday night, 10 p.m. Eastern Time, only on CNBC.
And then when they bailed out General Motors, that was like the trade to be in. Is at 50 cents a share. It was a big crash. I mean, it was huge. It was a great time to be learning how to trade, that's for sure. I paper traded at that time. In 2008. Back to almost my entry here on the SPX. I sold 5 contracts and kept 5. I think I'm going to get out of them here, not losing money. Because we broke support. Pretty close to it. Man, another expansion pattern. We get to the VWAP on this trade. If we hold this support right here. It's a 1, 2, 3. On SPY, Randy. So it has to bounce here because we've already had our 1, 2, 3 up here. We're a little bearish. I bet you probably only 2% of the traders out there know about the 1, 2, 3. Maybe not even that much. Yeah. So that's your support right here. 515.33. I'll tell you what. I wasn't around Diddy. I didn't go to that party with Ellen DeGenerate. She was at Diddy's. So was Hillary. But I didn't go to Diddy's. Back in high school, I was a senior when I moved out of my parents' house. I moved out as a senior. We used to have these parties, kind of like Diddy's. I mean, that's what everybody did back in the 70s. We had kegs and we had these big parties. I mean, and everybody, I mean, we were all about peace and love and taking a mushroom here and there or doing something. But there were 5 or 6 of them. We always had one to go to every weekend. But they get, you know. If anybody knows about the 70s. Everybody got along. We didn't have no gangs or anything back. We had gangs, but nothing like we do today. Everybody got along. Break. We're waiting for the big break. I'm gonna go get me some more coffee.
so NVIDIA have a second source through Amkor, but at the same time, their base business, auto industrial part, just went into that downturn. So, I mean, I think that's why the stock has a little bit underperforming, but let's not forget about the fact that AI, their exposure is real. We think it's probably going to be like 5% of the total revenue this year. But, you know, given how strong the AI chip market is growing, it's very difficult for us to say you will stay at that 5% level. It may go up even higher next year. We don't have a view yet, but we are very optimistic about the future.
A viable second source, does its success depend on taking something from the likes of a TSM?
Well, in some way, yes, but it's a growing market, right? TSM has already also ramping up, doubling the capacity. Amkor is tripling the advanced packaging capacity this year. We think it's gonna almost equal to like 1/3 to half of the capacity that TSM has set in place this year. I think even from TSM perspective, they would probably be happy to have a second source, so their customers are happy.
Come on.
One thing I do want to point
Yeah,
out.
I'm just starting to feel weakness.
TSMC, Apple, they jointly announced that they're going to set up an advanced packaging facility in the U.S.
It's taking too
I
long.
wouldn't be surprised that some of the AI chips wouldn't leverage
Might
that facility.
stop my other 5 here and get out even.
In the U.S.
I think that's a good point, Charles, and you're talking about.
And then come back down here and retouch this support level.
Geopolitical risk, and Apple is one of its customers sort of moving more orders its way. How does that factor into your ultimate recommendation for Amkor?
Yeah, absolutely. You know, when people talk about semiconductor manufacturing reshoring, right? Most people think about foundries. Most people think about alternative to TSM, right? People think about global foundries, GFS. If you look at the valuation of GFS over TSM or other peers of them, UMC, they actually trade at a very meaningful premium. Amkor is kind of in a similar situation in the semiconductor packaging part of the manufacturing supply chain. They trade just in line with their peers.
AMKR. Add AMKR to our watch
From
list.
that perspective, and with more of the AI prospects,
I'll look at it here in a second.
becoming a bigger part of the story, we think that
Hidden gem of AI stocks. AMKR.
That probably will reflect it in the multiple going forward.
Yeah. Charles, going into earnings season, I wonder whether you are.
Like I said, these stocks have ran 400 or 500%. It's not good. So they're looking for a hidden gem maybe in the AI sector to transport some of that money in that they've made. Same as Amazon and Google. I'm telling you, I've never seen anything like it. They made a lot of money this year.
Of the semiconductors may see some inflection point. So I think I'm quite optimistic about the rest of the year.
They were smart.
For my overall
I wish I was that smart back then when I was saying cheap.
Charles, viewers, I'm sure appreciate any new idea because the market's definitely on the hunt. Thank you, Charles Shee over in
I'd have thrown $1 million in there.
After the break, a new fund provides a way for retail investors to invest in private companies, including Stripe, SpaceX, OpenAI, and others. But could it prove to be the next meme fad that's coming up? And keeping an eye on shares of DJT, down 40% in April. Today, it is down further by about almost 3%.
Let's go.
Stick with us. We'll be right back.
Exit idea is the 200 SMA. You understand me? Man, I should have bought the dip on that. I sold 5. I could have bought the 5 at 140, 5 more of them. That would have been smart. That would have been smart. Jim, please answer the door. Jim. Oh, what? Yeah? Is there a fire or something? No, Jim, we hit a double top. I'm scared. I'm up $400 or $500 on this trade. What to do? I'm up $50, man. Right now I'm up 40. It's going down on me, Jim. I'm scared. Just relax. Take a Valium. Grab a shot of vodka. And let's see if we can break the 1, 2, 3. Boom! See? Let's wait for the 200, and I'll tell you when to get out. Just relax. Take a chill pill. Shh.
Sebastian! Excuse me, please. Sebastian, please. Don't interrupt my act. Sebastian! Well, Mr. Blowhurst, I didn't see the lights there. I forgot about them. What in the world are you doing? Why interrupt my act like this? Well, look, Mr. Blowhurst, I mean, after all, if you're in a ballpark, they always sell peanuts and popcorns and things like that. I know that, Sebastian, but not in front of... I beg your pardon, friend. Ladies and gentlemen, and also the children, will you excuse me for a minute, please? Thank you. What do you want to do? Look, Mr. Blowhurst, what are you doing? I love baseball. Well, we all love baseball. When we get to St. Louis, will you tell me the guys' names on the team so when I go to see them in that St. Louis ballpark, I'll be able to know those fellas? Well, now, all right, folks? All right. Excuse me, I want to find out the fellas' names. As long as it's okay with the audience. I'm crazy about baseball. Will you stand still? Pick up your hat. Go pick up your hat. Okay. Now, look. Then you'll go and peddle your popcorn and don't interrupt the act anymore? Yes, sir. All right. But you know, strange may seem, they give ball players nowadays very peculiar names. Funny names? Nicknames, pet names.
Who's on first? What's on second? And the 200 SMAs on third. Who's on second? What's on first? And I don't know who's on third. The 200 SMA is on third. What's on second? And I don't know who's on first. $2.10. I could buy you a diamond ring with this, Jenny. Especially if we get to 51.95. Better be careful using the word diddy nowadays. Break it. Should I make a business decision? Jim, you don't need level 2 on there. You don't need the news on there. RSI is that sell area. I'm going to egg it out. I've made a business decision. Who's on first? What's on second? And I don't know, but I do know the 200 SMAs on third. So break it. Oh, come on. Oh, yeah. Okay. Jim. That's not professional. I could be all out at 225. Snake breakout, pullback, boom. Or it could be snake pattern, breakout, pullback, boom. Do 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 do. So I'm gonna say there ought to be a two-tier system in here, knowing that the beach trade is probably the bigger risk trade to take, and then the more less experienced traders wait a little bit later in the day for that perfect setup. And if it doesn't show up, then don't trade. And paper trade the beach trade until you get it down. I mean, I was really down in the dumps this morning because that first trade, and I'm going, damn, how did I get stuck in this thing? And then I just waited a little longer, man. I had the best setup ever. And that's the way it works out mostly. The market is pulling back on overbought conditions. These people get me. If you're smart and good trader, you can see all of the criminal exposures of how they CNBC and Wall Street and all them trade, because you've seen it over and over and over, and then after you see it so many times, you go, damn, it's so evident. It's like having that sell-off, and all of a sudden they come out with price upgrades that are $300 or $400 more than the actual price, and you're going, what? After we're up 300 or 400%, you're asking for another 200? SMCI kind of squeezing right now. And NVIDIA, we've got the bottom on it. Dry out your snake. It's pretty simple. Just got to wait for that snake setup. So here's, let me see here. 75. So here's your setup. Come on, erase. Yeah, I gotta get a new mouse, I think. I hope. So here's NVIDIA, snake, breakout, pullback, hammer, boom. Probably to the 200 by the end of the day. 854.51, snake. You got your 1, 2, 3, breakout, pullback, boom. Yeah, it looks like 1, 2, 3, 4. 1, 2, 3, 4. Okay, we're at 210 now on the SPX. Is anybody in this trade with Bobo? We're going to have a double top breakthrough, maybe. Watch for resistance. So you sit here all day long, and sometime in that day, you'll have one good trade out of the day. You just got to wait, patience, be patient. You'll get your trade today.
yes.
The next day might have a little more
Market's
of an impact than usual.
down a little bit.
The concern right now is around supply.
Exactly.
And how that's affecting the trajectory of inflation.
And I think Steve Leeson was saying, you know, these numbers just have to hit spot on exactly sort of where expectations are, or else the Fed is almost going to have a forced hand, it seems. So we'll see what happens. But certainly, I think moving the market already before the numbers are already out. So we'll see what happens when we get them.
Be an interesting day tomorrow. Let's get to the judge in a half.
Carl, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. The great wait almost over.
Did I ever tell you about the 200 SMA on the SPX?
The road ahead for this rally. Joining me for the hour, Josh Brown, Joe Terranova, Stephanie Link, Brian Belsky, and Rob Seach. We got
Brian Belsky.
The markets here. We are lower across the board. Yields are lower too as we have this great wait, as I say, almost over, Joe. JP Morgan gaming it all out, the CPI. Basically, very cool is good, in line is good, anything but that, and all bets are off for this market.
It's so binary, and that's a problem for investors. I never like that. I'm going to be looking at rent equivalents and goods to see how those figures come in. But I think when you're looking at this report, you have to ask yourself, where are we on sentiment? Where are we on position?
You got to listen to what these guys say. They redefine everything day after day after day. I mean, I'm really picking up on this big time. They're writing a script. That's all they do is write a script. They don't have a frickin' clue. They just know the market was real cheap a couple years ago at a huge discount. When I say cheap, I'm talking cheap. They're not cheap no more. Nothing's cheap anymore. And they're trying to plead with you. And I've been saying ever since December that this thing's way overbought. And it still is. A lot of these 400, 500, 600% runners are just ridiculous. There ain't no way a stock can turn like that in a year. And you be honest about it. That's a gradual elevation. It used to always be. In 4 months, you go from 200 to 2,000. Are you kidding me?
And maybe even introducing a hike, right? Depending on how hot it is. I actually think, though, that the headline is going to be hot.
And her and I will argue about this all the time.
What we've seen in the last month. So that I'm actually bracing for a hotter number. The number is 3.4% year over year. I think the core actually will be okay. Joe mentioned new tenant rents. That's a big one. That should come down.
You got to listen. I've been listening to them for a very long time, and they redefine everything. And what they're looking now for is just a little bitty good news. Just a little bit. It doesn't take nothing. I mean, I didn't have no snot falling out of my nose today. The market's going to run. There could be a lot of bad things going on, but just one little bitty something that probably wouldn't mean nothing in an ordinary condition when everything else is failing.
Is stronger than expected. We're running at 2.5% GDP for the first quarter.
See, she's starting in right now.
3.4% all of last year. There's an enormous amount.
And 2 years ago, we had zero GDP, bitch.
Also does bode well for earnings. And so I do think you're going to see better earnings. I'm in the 8 to 10% camp for this quarter and for the full
That's
year.
higher than where consensus is now, because
Yes.
consensus has come down.
I think you're going to
It's about 4 or 5% now, so you're more optimistic than most. Belsky, what's on the line tomorrow morning for this record-setting rally since the October bottom?
I like the way that JP Morgan's going about this saying very hot or very cold. What if it's just kind of hot? I think it could be kind of hot. That could really spook people. And speaking of the binary tone of investors, I don't think a 1 or 2% pullback on low volume in the last week or two is enough to call that we've kind of washed out kind of the overbought status. I mean, this market's up a lot. And I think a lot of the easy money's been made. That's why we've turned a little bit more cautious near term. Longer term, we remain super bullish, but we want to buy stocks lower. We want to buy
He's
stocks
right.
at a little bit more of an attractive price.
He's right. Be extra cautious at these levels, but still yet be super bullish on the dip. It's a perfect time for catching knives. It really is. Because we're so overbought. Everybody knows we're overbought. All of them.
It's caused by
You.
going to be bought. I obviously.
Why do you think that?
Because there's an enormous amount of money on the sidelines in the moment.
You think there still is?
Yes.
I do.
Yes.
Yeah.
There absolutely is. 6.1 trillion, to be exact.
And by the way, animal spirits are picking up.
See, that's bad. That's bad. A lot of people missed out on the rally.
That that we're buying it at multiples that are really, really high, but valuation, because of the strength of the economy, has almost been thrown out the window, at least here
Who's
for
this
the
guy?
near term. You're looking at cyclical sector after cyclical sector that's trading at some very high multiple, 2-decade high multiples, right? And yet the market's not paying attention to that.
Well, now you got earnings season though. Now the rubber has to meet the road. Right? You have multiple expansion. Now you better have earnings to justify the way multiples have expanded. Not to mention the fact that higher rates are an impediment to expanding multiples in and of itself.
Totally. And
My opinion is that everybody had to spend a lot of money to get ready for this next gig economy. And that's to set up for the AI and the tech sector. And it's going to, just like what happened with Tesla. And the cars, I mean, everybody wanted to buy a Tesla, and then all of a sudden, the ones that had the money had their Tesla. And the sales dropped a little bit. Same thing with AI. It's going to drop, and then earnings ain't going to be as good, and
It's only 5% of the S&P. Nobody owns it. Everyone's chasing it
We own
now.
it. We're overweight.
They don't, as am I. I'm just saying, though, that a lot of people don't own it.
Mm-hmm.
Certainly growth managers don't, right? That's number one. Number two, financials. You can get great banks for 1.1 times book value. Maybe the best bank in the world at 1.9
But
times.
Steph,
That's
the
JP
question
Morgan.
was what happens to the market, and the market is market cap weighted.
Sure.
And it's market cap weighted with these names that sit at the top.
I like this
that are
guy.
fundamentally well underpinned. Again, expensive as expensive gets, but fundamentally well underpinned.
So, Josh, what's on the line, do you think, tomorrow? How are you gaming this out for yourself and your view of the market?
I actually would root for a panic, and I'll buy it, because if you look at the root cause of inflation, it is exactly what Stephanie described. It's and Rob described. It's coming from a place of economic strength. It's coming from a place of a fundamental situation where people are making more money than ever.
Yep.
Not only doing their job, but also when they pop open their Fidelity brokerage account,
oh, you're full.
or they see what homes are selling for in their neighborhood, regardless of prevailing mortgage rates. It is a fundamentally incredible time to be living, working, and investing in the United States of America. So if they want to drop the Dow 1,000 points because of a hotter than expected inflation reading, I'm a buyer. It'd be great. I'd rather that, actually. I don't need another 500-point Dow rally on softer than expected. So that's where I am mentally. That's where I've been. By the way,
I have the same attitude. I've said it. We're in a bubble. They've came out a couple weeks ago and said it. I'm very bullish, but we're just way overbought. I'm not going to fall for these guys' skits. When stock is up 400 or 500% in 1 year, it's overbought, and it's got to be corrected. Big time. I've never seen anything like it, so I've got to trade it. I've missed a lot of bubbles because I didn't catch it. I'm catching this one, and I have caught it. SMC, well, and we're still way overbought. You know what's going on? Because this rally is just way too damn much. SMCI, $226. 5 months later, it's at 1,200 and something. I mean, it's just scary as could be. I don't care if the man gave birth to a baby, it's still very bizarre. I'll sit there and argue with all them guys, every one of them. I'll name every bubble that we've been in. And then I'll tell them how much money we've printed in 3 years. And then I'm going to tell them that that money will run out. Then what? That's what I'll tell them. I want my 200.
Customers. So AI resources, of which high-end chips are critical, has to be rationed in some way or another, or Google needs to bring in-house custom silicon to reduce
There's my $100
vendors like an NVIDIA. So that's exactly what Google and its mega cap rivals, by the way, are all doing. Axion is Google's latest expansion into custom
nailed
chips,
it.
which the company says is capable of a range of tasks, from powering Google's search engine to AI-related work. Now, the success of Google's custom chips, it's been at this for some time.
Okay, I'm going to take profit here. We could probably still shoot up, but this was a big engulfing candle, and Jimmy's out. I made it to my 200. Golly, $3. Money can do evil to people. I'm seeing it on CNBC big time. Like that one guy said, they've made more money than they've ever made probably their whole career in this last year alone. I saw Buffett do it during Obama. He tripled his net worth, gross worth, tripled it. Because they printed all that money. He printed so much money. $87 billion a month for 3 to 4 years. I like this guy here, though. He's saying all the good stuff.
The reason I suggested the stock price and the narrative not matching up is because the narrative has been largely negative. The stock performance has been largely positive.
You idiot. The narrative has been 6 rate cuts. It was wrong.
By the way, Brad Gerstner, I think, did a really good job laying out the risks of Alphabet and why he no longer wanted to be invested in it in the new AI era. I think he made a very solid point, which is that even if Alphabet is competitive in a land of generative AI, they ain't going to own the whole thing the way they did with search. And so, if you follow that logic, if large language models are the new search engine, quite frankly, Google ain't going to be Google anymore. I think that's a reasonable take on why to be cautious on the name. But to Rob's point, that's okay, because the stock was inexpensive relative to the fundamentals today and is not inherently at risk of some sort of massive disruption. It takes a really long time for us to...
These guys are all loaded up on Google. Understand what he's saying. And Amazon. They're all pumping Google and Amazon because they know that this AI sector is way overbought. When you've got stocks up 500 or 600% in 3 or 4 months in a sector, it's going to kill you. It's going to. They know it. They're now admitting it.
Bunch Microsoft or Alphabet. I bet you the majority would say, well, of course Microsoft.
Absolutely.
Not the case.
And without question, from my perspective, and the ownership that we have of Alphabet is related to price. And it's related to momentum. And to me, that's been the strongest factor recently. I understand the fundamental argument that you're making. I understand the valuation argument, the AI inclusion, all of that. But there were questions surrounding this stock in the last 6 to 8 weeks. And there were valid questions.
Mm-hmm.
It has been price which has driven investors back towards this stock, and now it's going to be encaptured more momentum funds.
Speaking of price, Amazon, as we said, could close at a new all-time high today. Now we go to Kate Rooney for that setup as we approach a potential milestone here, Kate.
Hey, Scott. Yeah, so new intraday high, at least for Amazon. We have seen a handful of price target increases and calls reaffirming Amazon as one of the street's top picks. Average price target has climbed to $209, about 13% upside from where it's trading right now. 95% of the firms out there have a buy rating. 3 holds. There are no sell ratings on Amazon. RBC, at least, calls Amazon one of the internet's largest true alpha dogs, thanks to scale in e-commerce combined with its cloud business. And then Jefferies says still plenty to be excited about, plenty of runway ahead. And then also a topic from Morgan Stanley, which points out better cost to serve and efficiency upside, plus Prime driving some of the recurring revenue, cloud adoption as well, and advertising potential. And while AI, as you guys have been talking about, has been the story of big tech, very few mentions of it as a catalyst for Amazon stock. The big risks to the downside include any sort of AWS decline and then e-commerce competition from Shein and Temu. Scott, back over to you.
I appreciate that very much from you. Kate Rooney, thank you. Stephanie Link, you own the stock.
Yeah, and I mean, it's had a really good prior year too, right? It's up 81%, so it actually is a clear standout. I would say there's 3 ways to win with Amazon. AWS re-accept.
81% in a year is unheard of. For 20 years, I mean, I didn't hear anybody talking about, I mean, they were talking like, man, you're doing good if you can beat 6 or 7% a year. 8% a year in the stock. Now you're talking about in 1 year I made 87%. Things were way oversold and cheap. Now they're very expensive. And they're trying to convince you to stay in the market. But they're taking profit. And they're, like Josh said, he's waiting for that rainy day for the crash, and he's going to buy the dip. He's got his list already. They're hinting to you, little by little.
from our Phil LeBeau, who follows the story. But let's take a look at the intraday of Boeing, which is dropping. There are reports now from the New York Times that the
More bad news.
FAA is investigating whistleblower claims about potential flaws with Boeing's Dreamliner jet. So,
Oh, shit.
you know, a number of issues over the last many weeks with Boeing here, potentially yet another one. Our Phil LeBeau is going
This
to be
company
up
sucks.
in a moment to give us some more context into all of this, but we do have ownership on the desk, so while we wait for Phil,
That's what happens when you go woke.
Steph, I'm going to come to you first on Boeing, then we'll get back to the technology discussion we're having today, because there's some significant news as it relates to the chips.
There's big news here.
I think you
as
just
the
have,
stock's under pressure.
I think you just have to be patient with this. It's not going to change itself overnight. There's a lot of fixes in place. They don't even have a CEO at this point. I mean, they do, but they're getting a new one, and they're actively searching, and that is going to be, I think, the next catalyst.
Who wants
We
the
have to
job?
combat a lot of these bad headlines. We have to have the stock not go down on bad news anymore. And every time we get these headlines, it goes down. So I'm staying patient. Again, I think, and I speak to the duopoly of Airbus and Boeing and how powerful that is over the long run. But if you have a short-term time frame, you're not going to make a lot of money.
You own it too?
Yeah, we do. You know, if you think about Boeing's place in a value portfolio, I think Boeing, the next 5 years, is going to be the next GE in terms of the turnaround and what it has potential to do in terms of just writing a chip.
So they have the CEO change.
Sir, I disagree with you. They've had years to fix this, and they've not done a thing. It's got worse. Boeing needs to, and we need to stop bailing them out. They got a big bailout. Billions of dollars, sir, during COVID. Makes me very leery of wanting to fly at all anymore.
Again, value portfolio, you want to be contrarian, you want to take a little bit of a different take.
Let's bring in Phil LeBeau. Now, Phil, what are we learning here?
We're still waiting to find some kind of confirmation from the FAA regarding an investigation based on the claims from this whistleblower regarding the way in which the fuselage of the Dreamliner, remember it's a composite fuselage, the way in which the barrels are joined. That's at the heart of the complaints that come from
What are you going to do about it,
quality
Mr.
engineer
Putijed?
at Boeing. So if the FAA does open an investigation, which would not be surprising, if the FAA opens an investigation, then it raises the question, do they ultimately have to halt production, or is this a case where they say, you know what, we will just go forward with additional inspections of about 980 Dreamliners that are in service around the world? But there's no doubt, when you have a report like this in the New York Times dropping in the middle of the day, the fact is, if you're a Boeing investor, you're looking at this, and understandably, the stock's moving lower. You're looking at this saying, okay, what's next? So at this point, we're waiting to learn a little bit more. Ring the bell. Let me jump off. This is the FAA. Let me talk to them,
Phil.
and then I'll talk to you guys. You
All
bet.
right, we appreciate that. That's how reporting goes. Phil, thank you very much for that. All right, so we'll watch for more developments of that. We'll keep our eye on the stock, obviously, down 1 1/3% here. Let's move back to the conversation that we were having, because it's also a big day.
It's a major support.
I do want to get to this. So you got Intel new chip, you got Applied Materials may postpone or cancel $4 billion in California.
Boeing's definitely at a major support right now. I mean, a major support. We could do a double bottom at 173.11 and might be a good buy. Stocks, to get news like this, is at a perfect spot. If it was at the 200, it would have tanked. Zachy Morris is back on here again. Let the trade come to you. Using my old trade. I always told him, wait, let the trade come to you, Zach. Damn. He puts his fingers in that shit. I don't know if I'd do that. That would be good. Intel unveiled something here today. Intel Corporation. Now you remember what I said. The people that were in the room when CNBC was pumping NVIDIA, I gave a 2-week lecture on saying that they were very hyped up and that there would be somebody else coming out with a stronger yet better chip than what they're putting out. There you go, Intel. Yep, I moved out when I was a senior in high school. I walked, my dad and mom and dad were in bed. And we were all getting ready to go to bed, and I walked in their bedroom and I said, Mom and Dad, I decided I'm going to move out. And we rented a big old rock house and had parties. kind of like a frat house. Oh, I haven't had lunch yet. I think I'm going to get that out of the way before the fat cats get back. Now, I learned a lesson a long time ago. I was at a job site and it was hot outside, and opened up the refrigerator and I seen looked like, sandwich bag full of black licorice balls. So I snuck in the person's bag and I grabbed a few of them balls and stuck them in my mouth and chewed on them, and damn, all of a sudden I heard this explosion in my mouth and they were paintballs. So I learned my lesson. I never got into the fridge until the other day. I was at another job, and there was a bunch of creamer in there for the coffees, and I assumed that the coffee creamer belonged to the business, so I grabbed me some creamer and put it in my coffee and did it for a couple of days, and then I came back and was going to do it again. I seen a note on the creamer saying, "Whoever touches my creamer, I'm going after your children." So I thought about that for a couple of nights, and I couldn't sleep on it. I said, damn, man. I thought it was like house creamer. So I went over to Walmart this morning and bought 2 big old bottles of this creamer and put it by his little creamer that he had with his note. So I'm going to see what I'm going to see what he says. And I had this other job where I came in there and cleaned, and there was a half bottle of Coke on the desk, and I made the decision to throw it away. I come in, I get a phone call. "Jim, did you throw a half a bottle of Coke off of one employee's desk today?" And I said, "Yeah." I said, "Figured it'd be stale in the morning, so I threw it away." And so next time I went in there to clean, I bought a 6-pack, stuck it right on her desk. That's how I handle my human relations. Back to trading. BMR. Oh, that's a huge jump. 5G NVIDIA. Oh, what's with NVIDIA? Or somebody bug already put it in there.
Comprehensive work Boeing has done to ensure the quality and long-term safety of the aircraft.
Bullshit.
The issues raised have been subject to rigorous engineering examination. Under FAA oversight, this analysis has validated that these issues do not present any safety concerns.
Yes, they do.
I point out, Scott, that remember the Dreamliner, they stopped production for much of 2020, all the way up through late 22 to inspect really minute cracks and like smaller than a hair, something you and I couldn't see, and whether or not it represented structural integrity degrading to a point
Wow.
where it was a safety concern, a flight of safety issue. And
That's big time.
In 2022, they made
You couldn't see it.
a decision, the FAA did, that the inspections that had been put in place and changes in production, all of that together made the Dreamliner not only safe to continue to fly, but also to once again begin production and deliveries. So we'll see what happens with this claim from a Boeing quality engineer who believes that shortcuts were taken, and then as a whistleblower that he was retaliated against when he brought this to the attention of his superiors at Boeing.
Phil, I think I heard you say in your earlier report that there were some 980 of these planes in operations
Yes.
around the world. Do you know which U.S. airline uses the most of them?
I don't know who uses the most. There are a number of them that are in service with U.S. carriers. United Airlines has Dreamliners that they use. So there are 980 around the world, and I think we just got their production and delivery numbers, their order and delivery numbers for March. I think they only delivered 2 last month, but month to month deliveries can be kind of lumpy when it comes to the Dreamliner, though they are in the process of increasing production of the Dreamliner. I think they're up to like 5 per month right now, but there's a sizable backlog there. There is demand around the world for this airplane.
Phil, I appreciate the reporting. Good context too on the, at least bit of history regarding this, particular model of airplane made by Boeing. That's Phil LeBeau. Thank you for that. Up next, Mike Santoli. He'll be here with his midday word.
I'm not going to buy Boeing. Not here. They keep their long investors in here and keep talking it up. I'm not going to do it. It is at a good spot, but man, it's just bad news after bad news after bad news with this company. Now they don't have a CEO because he can't do the job. And they were supposed to be one of the best ones out there. I see this thing at a, oh, I mean, this is cheap now, but dadgummit.
Welcome back, our senior markets commentator. Mike Sancholi joins us now with his
Right here.
Great weight, almost over.
One more leg
I
down.
mean, you know, by rights, maybe it shouldn't actually have that much significance.
One more leg down maybe to this here W at 170, 169, 170. Somewhere in above 170. A weekly, yeah. So that means it's a weekly, it'd be right there. 173.74. Oh yeah, lunch. I'll be back.
day.
Had a call out of Morgan Stanley today by Mike Wilson upgrading energy to overweight. So it was the best performing sector, Joe, last month, and it's obviously at the top of a lot of people's lists on areas outside of tech and that continue to do well. What do you make of this call, and what do you make of it now, after the sector's run a lot? And crude's run a lot, too.
We continue to maintain an overweight position to energy. Okay. This is more a gasoline story in terms of the performance of energy stocks than anything else.
Does that mean I won't?
Absolutely. Want the refiners, Marathon Petroleum performing well year to date. It performed well last year. Phillips 66, Valero all performing well. And it's important to understand that the strength in gasoline. I was out in Las Vegas. I paid $4.25 for unleaded gasoline. So did everyone else in the gas station. No one turned away and said, "Oh, I'm not paying that price." They're paying the price because to Stephanie and Josh's point before, the economy is strong, and there's no perfect economic world. So let's not sit here and look at oil at $86 and see gasoline up 30% and say, whoops, we don't want to be in the stock market because oil's going to be a problem. Guess what? Oil might go to $100 before this year's out, and that doesn't mean you sell out of your energy equities or equities overall.
Josh, this is where you really zeroed in the other day, specific to, these charts that you were focused on. It really was the refiners, the Phillips, the Marathons, it's Valero, etc.
Yeah, look, I think when most people think of the energy sector, their first instinct is to think XLE, Chevron, Exxon, and with good reason. Those are great ways to play it. But from my perspective, there's a lot more happening in energy worthy of investors' attention right now. There are actually, if you look at the median valuation of it.
I didn't see that guy's face that got on here and talked about he loved to pay high prices for gas. He's full of shit. I mean, I'd rather pay $2 any day for gasoline than pay $4.10 a gallon. It costs me money for my business. It's less cash that goes to my family. So he's full of crap.
Week, maybe Conoco does better last week, but overall, the sector is in a bull market, and I want to stay long here.
I don't know anybody that wants to pay that loves to pay high gas prices but Obama. Obama's the one that said that we were going to pay high gas prices before he became president, and it did happen. I mean, it cost me, I was driving an hour a day to town and an hour back, and it was costing me $600 or $700 a month. Which, before that, it was only costing me a couple hundred, $250. I mean, it fixed the wallet big time.
Exxon is kind of like my safety dividend play. Diamondback is kind of the real growth, and they've totally changed with the Endeavor acquisition, and now SLB, 14 times for 18% total revenue growth and 25% EBITDA margins. To me, that's a bargain.
Well, that made me mad. I had to run in here and say something.
Stir in the pot. I do not like this call. I do not like this call. Sector's 3% of the market. It's up 15%. Two of the top 10 performing stocks, the S&P 500, Marathon, and Valero, they have negative earnings growth the next 30%, next 12 months. I don't get it. I like Chesapeake and Small Midland. We own that. I own Phillips in my value, but Chevron and Exxon.
You think the space has moved too much to make this call now?
Yes. It's too late. It's late.
All the way up to 7 times. You know, you sit in a very dangerous seat.
I know.
And I know the group is up 15% year to date, so you don't have to chase it, but it's really only up 16% in the past year. Last year was terrible for
He prefers to get his energy from the sun and clean. And I don't know why you're laughing either at the end. Apparently you guys are on this.
High blood pressure from working too hard.
Final trades are next.
Well, that burned me up. The excuses they come up with trying to keep this market going. I think they kind of grips that they're on the brink of, that we got to hold this. It's kind of like I said, I'm hearing flashbacks from 2008. When they start pleading with the market, begging to you for telling you that we're going to hold, and we didn't hold. We crashed. It's been weird listening to them today. It's like they're begging.
Look at those year-over-year numbers. Any year numbers could be a positive for equities at this point, but we'll hit that tomorrow on our show. That's going to do it for us today here at Fast Market. Download the Schwab Network app, available in the Apple App Store, and tune in 24/7 on schwabnetwork.com. Stick around. Next Gen Investing's coming up.
They've changed so much, CNBC has. They got very political and in the linear channel. ARM. Enough on BMR from Double Top. That was a good call, guys. I saw you call this on the dip here. That was nice. I don't want this one here.
Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
led by NVIDIA. I have to say, shares slipped earlier this morning and now down 3%.
Yeah, I think this kind of confirms one of the things that, I know Oliver's been really talking about, but we've talked about a lot, is this has been a market that's been so concentrated, and it's been driven really, I don't want to oversimplify it, but like one major stock, and that one major stock has been NVIDIA. NVIDIA's been a little bit squirrely lately. It's been a little bit teetering on these levels of support, and it finally kind of broke and tested those levels, and you saw the market go from the NASDAQ being up like 100 to down like 130. Now look, I know we're nowhere near either one of those numbers now. We have recovered a little bit, but I think it goes to show, especially with dealer gamma appearing to be negative. What I mean by that is, you think about big market-making firms, they want to be neutral. When dealer gamma is negative, as we sell, they sell futures. They get more short against that. But as they start to rally back, they gotta cover those futures. So it can create these moves that happen very quickly, but they don't necessarily always have staying power. What we've seen today is a very whippy market that has moved a long ways in very short amounts of time.
It has, and it's felt like really, ever since like 9 a.m., we've just seen things sort of start to pick up as far as volatility goes. We'll be talking NVIDIA more to kick off the show. We'll start things off with upvote and downvote. We'll chart and trade those upvoted names. FOMO today, we're looking at another one of these high-flying AI plays, ARM, which is also seeing some weakness on the session, although it has eased a bit off of its session lows. We'll also be looking at some of the financial names, two very different players. American Express with a downgrade, then Ally Financial with an upgrade today. We'll end the show with American Eagle, as one analyst says it's time to be optimistic, as that retail name has actually looked quite well on a year-to-date basis.
Now we're going to check in with Jeff Pierce again for under 30, so excited for that on American Eagle. Some of those names have been making a comeback in terms of being fashionable again. The Abercrombies, the American Eagles. These are like the stores that were like kind of cool when I was like a middle schooler.
Me too.
And I guess they're cool again now when I'm in my 30s. So things always go full circle. This is why I just don't go shopping for new clothes that much, because I'm like, hey, even if they go out of style, if I just wait long enough, they're gonna come back into style.
That's why you can't subscribe to trends, right? It's like I can't keep up, so I just stay baseline.
I can't afford to subscribe to trends, to be honest with you. But let's do upvote, downvote, not endorsements, not recommendations. Let's start at kind of ground zero of today's action. That's NVIDIA. NVIDIA has recovered substantially off its lows by about $15 a share, but we're in that danger zone now, Jenny, this 845 zone. I've said 840. Oliver's been saying 850. I know there's another level that was like 830. We're right there. We're in that zone now.
We are in that zone, and so to speak to that, any close below actually 855, which we're well below here, would put the stock into correction territory, which is defined, of course, as decline between around 10 to 20% from its bull market peak. That would put it actually alongside Apple, which is also in correction territory. Tesla, on the other hand, is in a bear market, which is off its peak by over 20%, of course. But of the other components of the Mag 7, if we're still even using that as a barometer, it's interesting, though, because Alphabet, Microsoft, Meta, and Amazon are all nearly at their all-time highs, if not just a few percentages off high. So what we saw with NVIDIA today is some of this selling, and then led to weakness in ARM, Supermicro. But the stocks overall, this semiconductor index is actually only fractionally lower today. But what was also driving some of the pessimism is DA Davidson to deliver a more cautious long-term view on NVIDIA shares. I do want to note, they still have a neutral rating. They're not saying outright sell, but they said the company should really deliver a spectacular 2024 and 2025. However, this recent cyclical downturn, they also said, is something that's significant, and also when your expectations are so high as that with NVIDIA it is, then you have more room to fall.
This is a bear case. Let's not confuse it. I know it's a hold rating. I know that it's a price target that's below, but we've talked about this. This is a stock right now that D.A. Davidson has now walked out. They're saying something different than everybody else in their field. So they're going to be right, or they're going to have some questions to answer. So I respect the call. I don't know what's going to happen, but at least there's a little bit of conviction. But say it with your chest here a little bit. Put the sell rating on it. $600, or what was it? 620. Okay.
Now that's kind of cool to see. Somebody puts a hold rating. I agree with that. I agree with that 100%. Where we were was just crazy.
because it's in the S&P 500, the best performer of the S&P 500 this year, but it's also on a 3-day losing streak, which is extending further today. It did recently unveil its latest Internet of Things and Embedded Systems, which is an attempt to boost its performance and enhance its power efficiency for AI applications. With the new introduction of these models, which includes the latest that support Intel's Atom processor, Supermicro is broadening its infrastructure solutions. And their president and CEO emphasized the expansion of the system product line, which includes servers optimized for edge environments, which are capable, he said, of managing workloads that generate these massive data volumes. Analysts have flagged this name as being a key player in the AI revolution, driven by the overall demand for AI model training, interfacing workforces or workloads, and expectations for the company to lead through these custom-built solutions and swift market delivery. So the bullish case is that the AI market growth potential is significant. I mean, some say it could exceed that of $200 billion by 2027 and 2028, which positions Supermicro well. But then there's the other hand of the argument, and that's what if that market basically estimate right now is just an estimate? We don't see that come to fruition.
Yeah, a couple of things. I basically have said that this is like if you ask one of these AI bots to name a company that has to, do with their space, this is what they would come up with. Maybe a bad joke, but seriously, Supermicro.
I agree.
Takes a little bit of everything. But the second piece is, we were just saying this with EVs, right? Every car is going to be an electric vehicle by 2035 or something. Those are all out the window, right? I mean, we're hearing now that companies are pivoting away from that because no one wants them. I mean, paraphrasing a little bit, but that's basically what Ford and GM have told us. So I think that some of these ideas have been overzealous. That doesn't mean the stock's going to go lower. Doesn't necessarily mean it's not going to go higher. But the real story is the money has to not run out. Right now, into perpetuity, there's this idea that these companies are just going to continue essentially selling more and more and more and more of these products, and no competitors are going to steal market share, and no companies are going to bring those kind of decisions in-house and trying to find ways to do it themselves. It's a big ask. It's not impossible. And also doesn't say that this stock can't go higher, even if something changes just simply off other factors like technicals or what have you.
And I think to your point, I mean, now with the shares up almost 215% on the year, even with the recent, 27% pullback, it's like the market is trading on the expectation for a lot of these big calls from the street and expectations for this mass addressable market in AI. But that doesn't include, supply chain snags, as well as companies that need to improve their fundamentals. Supermicro is one of those. So I think it doesn't include the fact that there is still reason to have some pause, at least when you see a company as supercharged as Supermicro Computer has been. But now to shift gears here and look more at the media space, Comcast is one that's pacing for now 7 consecutive down days, which is the losing streak since September of 2022.
CNBC.
BNP did downgrade shares to neutral from outperform with a $45 price target. That was cut from 49, but does still imply optimism from where we're currently trading just at around $40 a share even. Surprisingly, to my absolute shock of the analysts look at this name, 18 buys, 13 holds, not a single bear or even underperformance in this name as far as I could see. Average price target is $50 a share. That implies about 25% upside. So Street still sees room for this name.
God, 4-day, more like an 8-day.
Down $20
Ready?
from its all-time, or at least 5-year high. I think maybe it didn't go back far enough.
Earnings.
180 is the 5-year high. I think it's probably an all-time high too. That's like 30-some%. So 33%. Math's pretty easy on a 40 to 60 situation. So this.
Now, so they're alerting this one right here, Comcast. Now, I personally don't like the company, but it is an election year. And during election years, these companies make pretty good money. The revenue increases big time. You get all that free money coming in and all them political ads. That's why you raise the money, right? Just and we can go lower. But we'll give you one support and see if it holds. $39.68. Has to hold $39.68. That's a pretty good spot. Now look at the big picture. Ah. Man, I'm eating some. Anybody ever eat split pea soup? It's one of my favorites. I'll have a blue Christmas without you. I'm eating split pea soup without you. NVIDIA made it to the VWAP. Jimmy called the snake. Tesla looking good in a couple. I'll have some pea soup without you. Woo! Yoko, you know how to count to 3? Very good. Okay, I'll be right back.
Out previously. So we had a frequent stopping point here. We stopped out at the same point twice. We had a gap up. We retreated downward. We didn't quite fill the gap yet, but it was a support zone that we had our eye on here. So the day is still not over yet. We could still decline more, but you know, hopefully for the bulls, that this could be a place where the stock gets a little bit of its traction back.
And I think what's also concerning here about some of the recent price activity, like you mentioned, is it seems like some of this selling is only starting to get more power behind it. It feels like more of
I guarantee this chick is drunk.
More negative analysts are coming out of the woodwork here, and some of this selling isn't easing up on the session like the way we used to see. I mean, just several weeks ago. So our side, does this match some of my own read here?
Well, we did have some bearish divergence here. And by that I mean price made new closing highs. RSI was trending downward. We also broke below the overbought area. That's a bearish signal. It would be across below that threshold of 70. You can see that the momentum has accelerated to the downside now. Today, we are dipping below that 50 midline that separates bullish from bearish momentum. At the same time, we're breaking a few different sources of what we would have viewed as support here. So definitely not a great scenario for the bulls shaping up here. However, it's still, you know, I don't want to get hysterical here. We're only down, what, 13% from the highs in this name here. So it's a pullback would not be something that would be horribly destructive at this point. We just gave back a little bit.
Okay.
It seems like we are perhaps finding a supportive...
Correction. He says we're only down 13% on the video, right? This is what these people... Okay. He says we're only down 13%. For the year, but we're only up 300%, 400%. We're only up 300% for the year. God, please. Now we're only down 13%. We're only up 200 and 300%. For the year, you idiots. We're only up 900%. From a year and a half. Now you're talking about 13%.
For just example purposes, of course, walk us through a more bearish leaning trade to lean into some of the weakness.
Yeah, first things first, we looked at this yesterday on FOMO when we looked at a neutral to bullish trade, looking for it to hold the area it's testing right now. So check out the archive show if you want to look at that. But so far it has. This is a strategy that is basically looking at what Rick's talking about, which is what if it breaks down and actually breaks through this support level? Where might it go? Now that's still an if. So I looked at a strategy that I would argue is quite speculative, but has very, very relatively small risk compared to the reward potential, and is essentially a strategy that is looking for this to test by basically 10 days from now where this stock was right before the last earnings report, which is around $740 a share. Now, what this is buying an out of the money put vertical, $750, $740 for 50 cents. So that alone right there, $10 wide vertical for 50 cents should tell you that it's a lower probability trade, and you can see you're risking 50 with the opportunity to make 950. That is a 1 to 19 risk reward ratio. We're normally talking about taking more risk for a smaller reward for higher probability of success. So this goes to show that this is on the complete other side of the spectrum. The break even theoretically would be $749.50. This is likely a strategy that if we never see any more downside, is probably going to work towards zero, and you're going to have that $50 in risk. But if you get that big down move in a hurry, it can go 19x theoretically over the next 10 days. So that's the exciting part of this, especially in a stock that moves so parabolically to the upside, it could quickly, in theory, retrace some of that, and that's where these kind of trades could look to benefit.
And speaking of parabolic moves to the upside, that is a great segue into our next name, which of course is Supermicro Computer. Shares are lower today, although they've eased a little bit off session lows. And Rick, I have to say that we found this name when it was like $600, and we were shocked, like, hey, this name is moving a lot, and it's actually $600. And since it has just been this volatile storm, so we've saw shares shoot up to just over $1,200 a share. Now we've fallen back a bit here. So walk us through this chart.
Yeah, what a roller coaster this name has been here. And this can be one where you gotta kind of look here closely. So to take a first look here, we had a bearish engulfing candle recently, like I was just talking about, where the red candle completely
See, you see the flag? That's how him and I trade. We trade off patterns. So we're down here at support, and if this cracks, you know, it can drop to each one of them different supports, them yellow candles.
upside. Now we're finding ourselves in a situation where we are
If we're off the
down
200 SMA.
from that bearish engulfing candle. Once again, we've broken through the yellow 21-day exponential moving average. The moving average itself is starting to slope downward.
I'll be right back.
As I said before, early warning sign of potential trend change here. So we are still holding on to this trend line, though. We haven't dipped below it. So that's something that's noteworthy here. And we haven't taken out our previous lows right here near 855. Now, our other two moving averages, they're also still trending upward here. So the trend is perhaps a little bit more biased toward the upside, even though we are on pace for our fourth day of declines here. Notice as well the volume situation. Extraordinary volume here. While we were having this this extreme move to the upside, it's kind of trailed off a little bit here. Still, you know, it's still not a slouch in terms of volume here, but we're not seeing those same very high, tremendous values for the volume here. So look for a volume spike when we get a big move to show conviction, either on the upside or the downside here. That would be a useful piece of information to keep an eye out for.
Yeah, absolutely. So now, as far as momentum of this recent sort of retracement, what are you seeing?
Well, a little bit of bearish divergence here once again. Here we were hitting highs at this point on the RSI, then we made subsequent closing highs. RSI was trending down the whole time though. Once again now, we are finding ourselves in a situation where we are crossing below that 50 midline on the RSI. So even though we haven't crossed below our trend line in terms of support, in terms of our price action yet, RSI is starting to falter a little bit here. Now that we have a clean chart here without all our moving averages and everything, there's something else I want to show you that could be potentially a more bearish situation here, and that's the classic head and shoulders pattern. You can see we've got our shoulder here, and then our head, which culminates with those highs, and then a drop off, and then another shoulder here. This is the neckline here. The neckline can be diagonal too. It doesn't have to be a horizontal line exactly straight across. So that would be a situation where I would be more concerned about a more bearish pattern taking place here.
Yeah, no, absolutely. And so now when looking at some levels, I mean, it's difficult to gauge where this thing could go because, I mean, as we know, when we see things shoot up and then start to sort of falter, it could keep going, but obviously we could see the uptrend pick up. So what are you watching then?
If we were to break to the downside, break through our trend line, these old lows that I mentioned earlier, this green line near 855, that would be a point where, like I said before, it would be alarming to break through that. We could see a move to the 63-day exponential moving average, which currently comes in right around 820. So that could be an area to look for some support. To the upside, we want to break above our 21-day EMA once again. We'd want to break above that trend line. Then we have some relative highs right here near 1106.
Yeah, so a lot to look at here, and I think a really, really interesting chart trading at around $896 a share. And Alex, I just have to say that we were a bit ahead of the trend because I went back and looked at the first time we talked about this name, and it was, I believe, in around September, October. So we were, I mean, gosh, like I wish I would have maybe taken my own advice there when looking at this name. But for example purposes, walk us through what you're thinking.
Yeah, so this is actually going to look a lot more like what we looked at yesterday on FOMO for NVIDIA. We're looking at selling a put vertical in this week's expiration because the stock didn't make a new low today. It has tested that area, but it didn't make a new low at least yet. So assuming that the uptrend is still intact, maybe a neutral bullish trade could be in store. Now, the head and shoulders pattern was a little bit alarming, but say you're looking at a risk-defying trade just after this week.
CPI
this
quick
could be
knife.
still a strategy that can benefit if the stock just stabilizes above 850. So 855 or thereabouts, I think is what Rick said was the former low. So we're just below that, just below what would be potentially support. $845, $1.25 credit would mean 125 in max profit, 375 in max risk, 848.75 is the break even. Stall expires on Friday, so super short term here, Jenny. Really just hoping that the stock would bottom out or at least not go any further down than basically where it is right now.
Yeah, I think that's a lot of the hope with a lot of these AI names because they've been such growth drivers of the market and the upside we've seen this year. But we will leave it there, but we'll be sticking with our AI dominant conversation looking at ARM Holdings, the newest publicly traded name to the space, although unfortunately also seeing some pressure today, and we'll dive more into its recent activity coming up next.
Do.
My dad was a hard worker.
Your dad was a hard worker. Your dad taught me how to build an ant farm. Remember in my backyard when we used to play baseball and kickball and dodgeball? One day your dad came back and he built us an ant farm next to the worm farm. Remember how we used to put coffee grounds in the worms? And the watermelon limes, we'd lay them on top and the worms would come up and eat them. Well, these ants were red ants. And they built these colonies in these little sand things. And your dad, man, he taught me a lot about science. He said one day that I'd be able to see the eclipse. And yesterday I got to see it. So I want to thank you. Your dad was very smart. Nobody knew what an eclipse was, but he did. But your mama, now she was kind of cute. I ain't going to tell you about what happened with me and your mama. My dad used to walk in 3 foot of snow to go to work before they ever had automobiles. My dad invented the Eskimo pie before the Eskimo pie was ever invented. That's my dad. Don't you remember having your dad day where you got to take your dad to school? And I said, my dad works as a pellet mill operator. He took me to work one day and I smashed my thumb. And then you'd have the Brady kids sitting in the back laughing at me. We broke resistance on the video. We broke resistance on the video. Randy? Do you think we're going to break 5199.85 on the SPX today? You're talking about head and shoulders, right? Let me show you something here. I'm going to clean this up. So we had a snake. We had this little upward wedge, and it broke out of the wedge and pulled back, right? Look, we had a little place right here. I'm going to clean this up. Clean up. Clearer. And I see an inverse head and shoulders. So I belched. And I take that shoulder line right there, and I run it to that one right there. So I get a knock on the door. Hey, Jim, this is Randy. I've been studying these head and shoulders and I ain't quite got it yet. Could you show me? I think we found one here. And at that time, you just came in and you knocked on my door and you seen we pulled back and broke out of the shoulder. And I said, yes, that is the head and shoulders. You got your left and you got your right. That's a good eye. Now let me tell you something. Don't chase it. Let it break out, and if it doesn't break a resistance, let it pull back and retest that shoulder the second time, and then that's when you want to take that trade maybe. What? On a pullback? I said, yeah, all stocks pull back. So we're sitting here watching it all of a sudden, and we pulled back to that there support level the second time. Now we know here in fat cats are back, and I got a phone call from Wally, and he said, Jim, damn it, we told you not to run the market up until we got back in. We had this planned out. Knife, breakout, pull back, and then we'd come in here at 130 and take the boom. Now you've already had the boom. I said, okay, my fault. So we're sitting here looking at the SPX. All of a sudden I get another knock on the door. Jim, I got a 1, 2, 3 here. I said, what do you mean? On that same ticker, the SPX. You mean you got a double confirmation? Is that what you call it? I said, yeah. Show it to me. So you take that and run it to that, and you have a 1, 2, 3. So damn, Jim, you got a head and shoulders. You got a 1, 2, 3. Hold on. I'm not done yet. What do you mean? I've got another 1, 2, 3. So now what are you trying to say? I'm trying to say in about another 5 minutes, maybe 10, we're going to squeeze out of this here triangle. So you're telling me we got a head and shoulders, we got a 1, 2, 3, and we got a symmetrical triangle, a wedge. I see, that's what I'm telling you. Jim, is that a head and shoulders I see? Hell yeah. Man, you're making this too difficult. You spotted 4 different patterns on that one trade. How in the hell? Left shoulder, head, right shoulder, break it or you'll be dead. So that's your hard resistance. You got a double confirmation up here on the 1, 2, 3. So we're getting ready to squeeze. And in that mess, I created 4 different patterns. Every one of them leading to me, telling me that we're getting ready to have a squeeze. And we got support with the 200, so for it to break the 200, it'd have to be pretty desperate. And it's probably waiting for them numbers. We break the 21. And we go to the 1, 2, 3. Boom. And we got a 2-headed snake. We got another head and shoulders right there. Come on, Randy. That's 5 charts, 5 setups. Now we broke the head and shoulders. I can keep looking in here and find something else I bet. Watch, I will. I think I fished it out pretty good here. I see something right up in here, but that could be a hard, oh, that could be the breakout. I just discovered something. Yeah, that's the resistance. Target. In the close. 519653. Right there. You nailed it, James. There it is. 1, 2, 3. If you can count to 3, you can trade with Washboardjim and me. Now watch this. It's gonna do it. Double top. We just now hit the right shoulder. Comprehend? So that if you got in the trade down here, you know, I get a knock on the door. It's, Jim, we're pulling back. Don't worry about it, man. You're right on the 1, 2, 3. It's going to bounce up. Jim, we're on the shoulder line of the head and shoulders. Should I sell it now? It's up to you. I'd scale out if you. This is a resistance, and it is the right shoulder, so it has to break here. If it don't break here, then we could have more drama on the way down, and hit the 200. But that second right shoulder, that's the strong. That's where, you know, where you take the punch. That's the sweet spot. Break it. Break it. Where's the next resistance again? Jim, I know you pointed out that one trend line, but I see another resistance before we get there. I said, what? You're saying Washboard Jim missed a resistance? I said, you better go tell your mama you need a new spanking, man. No, Jim, let me show you. It's a double top. Oh, dadgummit. You're right. Nobody's ever turned the cards on me before, sir. So we're going to watch this. I didn't get in this trade. I wish I would have. Sitting here calling it out and didn't take it. I was looking at NVIDIA, trying to learn this vertical long green put. Vertical. Put vertical long. It's down $3. Here we go with the knife. See, we hit the shoulder line. See how hard that is? Now we're coming back down to the other shoulder, and this is the third time. So I'd expect it to hit the 200 here. Get ready. SPX. See if we can catch it off the 200. Huh. Second word. I gotta get rid of this one here. I want it down here. That'd be a 1, 2, 3. Perfect. We got a 1, 2, 3 perfect right here. It's off the 200. So that's where I'm going to take it if I can get it. Then we'll create another head and shoulders. See, Randy? You got your left, and then you have your little, if you can get down here. I'm going to try to get that 200 SMA. There we go. We deleted it. Oh, two.
Downgrading the stock to equal weight from overweight, and there's nothing like a conviction for a downgrade by increasing your price target on the stock as well. They did increase their price target to $221 for $220, which is really where it's trading at right now. They do believe that it is still considered the best card issuer that is out there, but they do believe that there's going to be limited potential for further multiple expansion here in the near term. And they are a little bit skeptical when it comes to the revenue guide and the revenue that they're going to be able to print here for their earnings announcement. And if they do miss the expectations, that could also put into question their guidance moving forward, which could result in the stock moving to the downside or underperforming compared to its peers. But once again, it's been a very durable name within the financial space, and international travel continues to increase. We see that type of commentary coming from airline companies, and if those channel checks continue to stay on that type of trajectory, that is going to be a tailwind for Amex moving forward. So that's kind of the dynamic landscape that we are seeing for this company as it does approach earnings here in the next couple of days.
I kind of almost interpret this too, Kev, as just, hey, just wait. There might be better opportunities. Don't sell everything. We're not waving any flags and have any warning signs. I still like the company. It just had a really nice run, and they feel that the risk-reward is a little bit more balanced. Am I interpreting this message correctly?
I'll find out. AXP,
Yeah,
you said nice, right?
About the risk-reward, where the price is at right now, it does perfectly balance the risk to reward ratio, to say the least. And also from a technical standpoint,
I'll tell you what nice is.
Move back to say $195, that would be around 11%
Listen.
correction. And on a 3-year weekly chart,
That's
that
a
was
nice run.
uptrend, just a little bit of a consolidation type of pattern. And once again, they're able to weather the storm.
It's a nice run, sir, but it's also irrational exuberance. But it is making a statement. So we're going to call the 21 for support. The 21 EMA on the weekly, but the 9, we have a 1, 2, 3 on the 9 here. We could bounce off the 9 for a day trade swing up to 228. But I will wait. AXP's on the watch list. There are a lot of good tickers coming up today. AMKR is one we got to really watch. AMKR in the AI sector. No, I didn't hear the teacher say something. Did I miss it? Amazon's pulled back. They're pumping. They're pumper.
That, you know, I thought that we went in a time machine or something.
AEO.
I thought we were back in like the early 2000s, but these stocks are like back. Abercrombie and Fitch has been going crazy. American Eagle has been going crazy, up almost 75% over the last 12 months.
Yeah, absolutely. And investors, analysts have been weighing in more and more. We're starting to see more analyst activity for these names. JP Morgan upgraded American Eagle to overweight from neutral with the price target at $31 after meeting with management. The analyst said the momentum across their brand portfolio with their multi-year conservatism embedded in their 3-year financial plan is part of the reason for this upgrade. The firm views American Eagle as one of the most undervalued assets in the group relative to fair value, given their fundamental model profile of 3 to 5% revenue growth and about 10% adjusted EBIT margins by fiscal 2026. And if you look back, that new power profitability plan that they announced in the last earnings, that they're expecting that 3 to 5% revenue growth from, that coincides with the fact that they also wrote off about $94 million in impairment charges for their internal logistics business, which they kind of picked up during COVID, spending hundreds of millions of dollars to get shipping and distribution companies. But now, of course, the company's been doing relatively well. We're seeing a lot of movement in their Aerie brand as well. They're opening more stores, and revenue came in up 12% in their last quarterly report, so some pretty decent numbers there as well.
So Jeff, specifically this note from JP Morgan, I did see that highlighted that they're actually an undervalued asset in the space. I mean, given its performance, I mean, we're still up 15% this year, and we've seen so many of these retailers not have the same sort of year. I mean, I guess I'm interested in your thoughts about the undervaluing of this name that seems like it's been so resilient and strong in the overall retail space.
Snake breakout, pullback, boom.
Look at its resilience over the last 12 months, up about 74%. If you go back, 3 years or so, down about.
See, look at here. This is cool. This is a 3-year chart, weekly. I noticed a couple of good things about this. Definitely the strategy, but this snake is a little bit different. This snake is a little bit different. This is a falling wedge. I mean, it's totally different look. So we had snake, breakout, pullback, boom. Snake, breakout, pullback, boom. I kind of like this here company. I don't know. I don't think I've ever been in one of their stores. American Eagle. Jim, you're a smart guy. I love you. Don't tell anybody in the room.
Career is what we've seen with Abercrombie and Fitch. American Eagle Outfitters has fared quite well.
No, I just said that on mute.
I will say also, anecdotally, that I know this name has become much cooler on all of. It's to be cool. I mean,
What
really,
the hell?
how lame do I sound saying that? But it does. I mean, like we talk about brands, and I feel like sometimes.
Because we've got a lot of.
Wow, that's interesting.
Sticking with the alcohol theme, you have Molson Coors upgraded by Goldman Sachs to buy, big winner of the spring.
Wait, that was the reset. Reset where they do it twice a year, where the shelves.
Oh, this is going to be on forever.
Bud Light's the
Jim.
one losing share right now.
So let's go back 15 years. Oh, Head and Shoulders. Well. Excuse me. got a head and shoulders here, Randy. Got your left shoulder and your right shoulder. It could go right here, maybe. But that's where I went. Oh, well, yeah. Let's see here. This is on the weekly time frame. Yeah, that's a shoulder. So we're close to that head and shoulders. So here's your left shoulder and your right shoulder right here on the bodies. So that's a resistance level right there. So here's your head, and it drops down, bounces back up. Make sure I got this one A, E, O. I'm going to watch this one for a while. Here's a head and shoulders here. See, your left shoulder, your head, and then your right shoulder right here. So you magnify that up. Take and draw your trend line to that right shoulder. There's your left shoulder and your right shoulder. Then it came back down, your right shoulder, then it broke out, came back down and retested it. Boom! To double top, triple top. This is kind of a neat chart here. So you got a head, you got a falling wedge, you got your left shoulder and your right shoulder. So now it's pulled back to your right shoulder again. Watch this. What is this, Lily? Let me see here. April 12th. And no volume. No volume on the calls. Next week. Yeah, there's no volume. I need at least 1,000 contracts sold. We got 319 at 760, but God, look at the price you got to pay. And on the 12th, you have 700 at 760, 555. Spread's a little wide. Well, I'm going to put a little circle here and say I called it there. I'm going to paper trade this. So I just bought 100 shares of Lilly at $751.81. $751.81. I bought 100 shares. Oh, Jim, you forgot to type in paper trade. Oh. Do I have to? Jim, why'd you take that trade? Do you have confirmation? Small wedge off a shoulder line. Oh, this is way down there. Oh, wow. There's another confirmation right there. Right to the penny. Okay, well, let's see. Adobe's up $5.
Acquiring custom-built ARM-based server chips, similar to their rivals Alibaba, Amazon, and Microsoft. The new processor available later in 2024. They're announcing this at their Cloud Next conference, currently going on in Las Vegas. They have the plans to run YouTube ad workloads on the Axiom ARM chips once they're available. So they have to get the chips, but they're converting their cloud to a less expensive ARM-based chip. Like I said, some of their rivals. Stock up just under 1%, Nicole.
Yeah, and you think that NVIDIA's move, at least in part, is in reaction to this news?
Well, it's certainly, NVIDIA's got its own, issue. If the overall market heads lower, frankly, there's going to be some people with some big profits sitting there in NVIDIA, and it's not surprising that people ahead of first quarter earnings season are lightening some of their exposures, ahead of CPI and PPI data the rest of the week, and ahead of first quarter earnings starting really on Friday with the banks. So this may be just a little bit of hesitation here, a little bit, dry pop.
NVIDIA. Jimmy is up. He was up $100 on his paper trade. Imagine putting 100 shares at $751.
Yeah. All right. Thank you, Kevin Hinks. Nice to see you. Let's take a look at the bigger picture. Alexander Reed is with us, CFA, Chief Investment Officer at Envisage Wealth. Thank you for being here. Your thoughts on the markets, which right now must be in somewhat of a wait-and-see mode for the CPI, PPI prints. Some of your thoughts.
Sure, thanks for having me, Nicole. Certainly right now, we think there's kind of this worrisome and kind of preparation for the CPI print tomorrow. You look at Treasury futures going net short across Russell.
Okay, we've got to listen to the Rugrats. Are we going to be bullish tomorrow or bearish? Bullish or bearish? I see a bear. I see a delta burn. Jen, bullish or bearish? I need a woman's opinion. I stand up for women. I do not believe men should be playing women's sports or wearing women's underwear. We have a little bearish from Randy. A little bearish. Yoko, I need your unjustified attention here. Bullish or bearish? Overall bearish from Jen. Magnificent. We would appreciate your 2 cents worth. Don't be snooty. Are you bullish or, oh, you're bullish, huh? Yoko. Now what in the heck? Wow. Wonder why it did that. Man, this thing's been, my computer's acting strange.
Recommended list, kind of slowly building out those exposures. Valuation gap relative to the U.S. is clearly there. And if we see with international equity indexes being much more correlated to the manufacturing cycle, you know, that correlation there is something that's more predictable, and we're starting to see that leadership take hold. What we think is really the linchpin to really materially start adding to international
I'll be right back.
is a breakdown in the dollar, which would coincide with, you know, the Fed cutting rates. We think we're on the precipice of that, to kind of the leadership of international emerging markets outperforming. So we definitely think if you don't have exposure to international or EM specifically, you know, now would be a good time.
And so I like that emerging markets is creeping higher, right? You're seeming a little more interested in it because truthfully, isn't the market a global market, and this is all working and all the markets are doing well? Isn't that a better picture, or not necessarily?
Historically, yes, it's something we preach
to our clients all the time, right, is if everything's going up in your portfolio all at once, that's probably something to be worried about, not something to be celebrating. And so it's the same approach and perspective we apply to global asset management as well. You know, there's times to be underweight, overweight to certain sectors, to certain equities, especially after the run we've seen in mega caps. And the outperformance, you measure that relative to domestic U.S. small cap or even international. We think now is the time to take those gains.
Jim's up a couple $100. Those little paper trade, he's at resistance. Time to exit. Called it. Nailed it. Boom. Nailed it. In the key of C. We went from 751 to 754. We broke the 9 once more. 751 to 54.
Our next guest is looking at some semiconductors and more, finding some more investment opportunities, maybe even gold. We'll talk about this coming up next.
So did you see that?
Is now.
Lily, I mean, I didn't trade it. I paper traded it. And if the options had more volume, I would have traded the options. But this is a lesson to learn. You got a big long snake. Now Jimmy was talking to Randy. I got a knock on the door from Randy. He said, "Jim, I think we pulled back here to a right shoulder here on your inverse head and shoulders." I said, "Are you serious? And we're still in the trend?" "Yes, we stayed in that trend all the way up down to that level." "Damn, let's take the trade, buddy. And run it up to the top of the trend and get out. You got the right shoulder the second time. You know how solid that right shoulder is. Especially the second time. That's a sweet spot." Jim, I just made $500,000 on that call. I'm going to get you a trip to Mexico.
Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Please, let's do without the commercials of my dad and this ding-a-ling-a-ding shit. Headbanger music.
There's no place like the New York Stock Exchange. We've got you covered, the biggest stock.
You can cover me anytime you want. Whoops. That slipped.
He's live on the floor of the New York Stock Exchange. Some more market movers for you. And we're looking at NetEase. It's up on the day on reports that it's nearing a deal with Microsoft's Blizzard. So this would bring gaming titles like World of Warcraft and
NTE,
Overwatch back to the Chinese market after their original 14-year
NTES.
deal expired in 2022. And the two companies
Start a new watch
to
list.
renegotiate. An announcement is expected as soon as Tuesday. Moderna jumping on the release of positive phase 1 data for
mRNA.
HPV negative head and neck cancer treatment. And the treatment
cancer now.
combines a neoantigen candidate and Merck's Keytruda. Keytruda is already used to treat some head and neck cancers, and Moderna's drug is also being tested as a lung cancer treatment. Goldman Sachs downgrading ChargePoint to sell from neutral, hurting a stock that has already fallen over 80% in the last year. The analyst cites slower electric vehicle sales in the U.S., resulting in less need for charging stations. He notes that 80% of ChargePoint sales are in North America. Tilray plunging after missing third quarter earnings expectations this morning. Company said it no longer expects positive adjusted free cash flow for fiscal 2024. Revenue, though, was up 30% from a year ago quarter, with alcohol net revenue up 165%. Tilray saying it's the fifth largest craft beer brewer in the U.S. with 4.5% market share. Taking a look at Bitcoin. There you go, 69,140, down 4% today. All right, we have some picks and opportunities for you in this market, putting your money to work. Christopher Mulin's with us, founder and chief investment officer at Technical Traders Ltd.
What the hell is the
for being
cancer?
with us, thank you. So, how do you feel? Are you feeling?
It's a phase 1 trial for neck cancer.
We're getting some earnings coming up. We got a lot of economic prints. You feeling bullish, bearish, cautious?
I'm pretty bullish still, although I would say I'm also cautious. I think longer term later this year is going to probably be pretty painful for the markets. There's a lot of leading indicators and money flowing to different sectors, different commodities.
Exactly.
That are telling us
This
that I think
guy's got it
there's difficult
right.
times ahead, but right now the market's just taking a bit of a breather. It's still in a strong uptrend. Semiconductors with like Nvidia taking a bit of a pullback and pulling back the markets just a little bit as people wait for earnings, but we're still in a strong uptrend, so we can't buck that. We don't want to bet against this market, and I think we could see the market rally into May, potentially near June.
What do you think will drive that?
Well, I think right now we're kind of in this feeding frenzy. A lot of people got beat up in 2022, then they got out of the markets and they missed the mother of all rallies in 2023, and now that we've got the indexes screaming to new highs almost every other week or every week, those people are getting sucked back into this market. And
I'm going to say this one more time. CNBC had it wrong last year. They had it wrong at the end of the year. They were very bearish in this market. CNBC was. Jimmy called the breakout before they did. As magnificent is my witness. And they're still wrong. Now they're trying to cover their tracks. That's why a lot of people didn't have their money in there, because they were using fear about this interest rates every single frickin' day. And then they were wrong. They were wrong.
it does have a lot of smaller companies in there as well. But because they have a small weighting to that overall ETF, they don't provide a lot of juice to it. But this is more or less just an AI push. There's very strong momentum. The whole world is still chasing AI.
This might be a good one to watch.
In the semiconductor space and NVIDIA, but there's potentially so much more room to grow. The AI really is only like a year old, and it's already changed and moved mountains, and we're in the infancy stage. So there's so much potential, and we need processing power, and semiconductors are what that is. So, if there's one sector that could totally buck a bear market, if we get one, it might actually be that AI space, simply because who knows what the limits are. I mean, we're really just scratching the surface, and we're going to need semiconductors at a huge rate, which we've seen.
I know you also have utilities there with the XLU. I'm curious about also.
This get ready to squeeze.
Where do you think Bitcoin's headed? I know they're not exactly the same, but BitO is the ETF and gives people an opportunity to do this. Where do you think Bitcoin's headed?
BITO.
is headed.
Yeah, so I mean, obviously that's a volatile play, but BitO, which is more or less mimics the price of Bitcoin, it has about 35% upside potential from the chart pattern. I'm a technical trader. I don't really care what the Fed or what the news is. I strictly
Always
follow
clean
money
as
flow
Jim,
and
may I
follow
help you?
price. And this price chart is still very, very bullish. It is on the verge, I think, of one more big push along with the stock market.
Brandon?
And that'll send BitO up about 30-35% from where it is right now, and that'll be Bitcoin.
Brandon.
I don't know what that is actually in Bitcoin value, but it'll be definitely a level that is going to get everybody's attention. It's going to create FOMO, and just like when Bitcoin topped out several years ago, everybody's going to be wanting to buy some with their credit card over their phone again. I mean, it'll just be a feeding frenzy. So.
Hello, this is the FBI office. Would you please make sure that this phone is recorded? This is a recorded phone line being the FBI situation here.
Everybody wants some of it.
Yeah. How about Royal Gold?
I love the gold space. I mean, that's kind of my specialty. I like precious metals. Royal Gold, I mean, it's really nice because it's more of a royalty play. These companies don't have crazy overhead, equipment, properties, or
RGLD.
They just collect royalties from all kinds of other companies, taking on all the risk, investing all the money, doing all the labor, and they just get a chunk of a percentage of the gold that they find. So I really like it. To me, it's like a low risk play to get in. I don't own it. But overall, I like royalty type of gold stocks, and this chart pattern is primed and ready for a really nice rally to the upside. I think gold and silver have got quite a bit more room to run over the next couple of months. And
God,
we're
guy.
in a time right now, what I believe is a major kind of topping phase in the stock market and the economy.
We
later
did
this
break
year.
a head and shoulders.
This is when gold, silver,
Rodney.
miners, energy stocks, and typically the industrial sector all outperform and take off, and that's exactly what's happening. This is like a warning sign that we are a few months
RGLD.
from a major stock market top,
And we got a triple top.
It's just what we've seen during all of the other major
Resistance.
tops, so it's going to be a very interesting play going forward.
All right.
Maybe
Chris
something to
Rosella,
drink.
Thank you. Technical Traders LLC. Thanks, Chris. Coming up next, we're looking at EV space and the weakness of Tesla and what other opportunities there could be in the group. We'll break it all down. We'll be right back.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking,
Smart money is betting big on Lulu options.
Tesla GM, explain to us the role of Nouveau Monde graphite.
Nouveau Monde graphite is providing a very essential part of the battery, which is the graphite anode material. So the cathode is the lithium, the nickel, the cobalt, the anode is all in graphite. So very important active material for the batteries. And we're building currently a large mine in Canada and a large transformation plant to do the finished product that Panasonic and GM require for their endeavor.
I feel like we always talk about rare earth and how there may not be enough of that. We talk about charging stations and there's not enough of that. I don't know if there's enough graphite for the batteries, but I do feel that, and you tell me otherwise, I think that EV demand is going to be there. It seems to be uneven at times, but do you feel EV demand is going to accelerate year after year, or was it a fad?
Absolutely. If you look just last year number in 2023, 1.4 million EV were registered by the Department of Energy. Numbers, it's a 50% growth year after year compared to previous year. So
Yeah.
only that growth require a company like us to build a project like we're building per year. So it's kind of very big growth for the materials behind the cell needs.
So you're talking about 50% growth year over year, penetration of all these EVs and more EVs. You're not going to have that kind of growth all the time. You're not going to have 50% growth every year for EVs, right? I mean, that's you got to have slower growth because the people, it's low-hanging fruit. Like the people who really wanted an EV probably got one, and then the rest of the people have to sort of get on board, right? Tell me a little bit about the relationships that you have with these companies and how you find them to be. Do you see success ahead for some of these automakers?
Yeah, what is important for us is to look specifically at our customers' need. If you look Panasonic, they have publicly
We've got a 1, 2, 3 setup, setting up.
Battery capacity in the.
We have a 1, 2, 3 setup setting up on the SPY below the VWAP under the 200 SMA with a UPA, 2 bits, and a freebie.
To announce, so that's important for us to understand their specific demand profile, which is massive in the near future. And same with our other important customer, GM. GM, did you see all the new models that are going out in the street? I've watched recently the EV Silverado Chevrolet, 400 miles of range. There's beautiful cars. So for sure, we should not be too worried about the Tesla weakness in the market. Because Tesla, even if they created the pie, they need to share the pie with many other OEMs. And the pie is getting bigger. This is what is important generally.
Do you see Tesla as a leader going forward?
Yes.
I see Tesla as being the first innovator. I'm driving Teslas, but at the same time, there's others out there that are providing very good opportunities for consumers. So not everyone are Tesla fans. So now Tesla will need to share the pie with many others.
Where are you seeing demand for other names? Because
I was getting to warm up to you for a second. You and I could have been bowling partners. Saturday Night League, but you screwed it up. How dare you talk bad about Tesla?
Will play a very dominant role in the future. They're doing all the right things.
You said the right things, and all of a sudden you just went and lost it.
Thing for the long-term vision they have. It's not only implementing model year after year, it's making sure you can manufacture those models locally.
And put a tie on.
Is on the right track.
Yeah, and this 200 kilowatt per hour capacity battery that I guess you're working with them for this, right?
They have announced already one plant in Kansas, and what we have announced, it's 18,000 ton per annum, which represents
Netflix puts
50,000 EV can be manufactured with it. So 18,000 tons with Panasonic, 18,000 ton for GM.
That was a great turnaround on General Motors.
Future production with those two.
What about hybrid versus all electric? Where do you stand with that, and where does your company fit in with that picture?
You know, all batteries require the graphite, so the application itself just make the battery a bit smaller for hybrid because you have also a big combustion engine. Some application will require an hybrid for a long time.
So when we think about the future of EVs, that they're here to stay, and we heard that there was a commission that was advising GM about going with more hybrids, and they did so, and then Ford sort of just recently talked about maybe having some more hybrids as well. Maybe people are not quite ready for the full EV. Where do you see yourself growing? Do you need more investment? Is it the mine that's going to help you to grow? Because you said you're mining in Canada. Tell us a little bit about that.
Yeah, now we're financing our phase 2 of our operation, which is the execution phase to generate profitability in the next coming years. So we're building a mine that is 100,000 tons of flake concentrate per annum. And now we've acquired our closest competitor asset in the mining space. So it's called the Watnan Mining Project. And this one will be built 5 times the size. Now that the market is so big and the demand is getting so important, by 2030, we need to build bigger mines. And that mine we're building is the largest currently planned graphite mine in the world, including China, including Africa, Mars, anywhere. It's the biggest project out there.
Wow.
So in Canada, we are fortunate in Quebec to have both the great geology to make good graphite mine, and we have cheap hydroelectricity and all the infrastructure to transform the product to be very competitive with anybody on the planet. So that's why the large customer like GM, Panasonic, they come to us for this very specialized and important product in their supply chain.
Yeah, reshoring mining, processing, manufacturing here in North America versus having to go abroad. You talk about all the political issues and supply chain issues.
I think we're at a spot now in the SPY where it needs to make a business decision. We have a 1, 2, 3, and we have the VWAP. We have a 1, 2, 3 with a higher low and a VWAP. SPY. You're no longer my friend. You have to go.
Supplier and a bunch of others in their Chinese plant.
Right.
So that's why we work with the supplier of Tesla, Panasonic directly.
When we talk about national security, and Janet Yellen was even talking about maybe putting some tariffs on Chinese EVs, how easy or hard is it, you know, when we think about China competition? Do you work with any Chinese companies? I'm sure you're happy to be here on North American soil as well. What's the landscape there?
Yeah, as I've mentioned, China is the biggest competitor out there. That's our only competitor. There's no major miners who knows about graphite. So it needs to be a company like NMG, like Nouveau Monde, who consolidate the market and build the big capacity. Don't get me wrong, I'm not sure the GM and the Panasonic of this world like to be involved so deeply in a project like ours. Typically, they rely on the major miners to provide those commodities. But now for graphite, it's so important to develop the onshoring because currently it's controlled by China. So this is not a situation that nobody likes. And the tariffs, the IRA, all the new regulation is quite important for the most hidden part of the supply chain to get supported for and justified for the OEMs to invest in those projects.
And as a matter of national security, it just seems great to have it here at home. You know, you mentioned even the military, working with the military and energy storage and other things, not just electric vehicles. Eric Dessonnier, it's great to see you, CEO of Nouveau Monde Graphite. Thank you. Still ahead, we're going to take a look at alt investments that you may want to consider. And what about consumer discretionary names, maybe some of the beauty names? We'll be right back.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to the watch list. I'm Nicole Petalides, coming to you live from the New York Stock Exchange. We have about 90 minutes left in the trading day. You're still seeing some down arrows, but not too far off the unchanged line. So while you have story stocks that are on the move in a big way or capturing headlines like Nvidia and Boeing and such, at the same time, you're seeing the market, S&P is at 5183. It's down at the...
I really want to talk about this morning how I messed up. I mean, we did have a hard sell-off, and I got down here at the bottom, but it just knifed on me. And I'm just trying to figure out how I can fix that. The only thing I could think is that I was bearish because we were up so high, and I wish I'd have kept that bearish sentiment even when we hit this bottom here. So I don't know what I was thinking. I just jumped right into the trade. I made it back for sure, but I'm just trying to figure out. I was bearish when I come in here. Trying what triggered me to buy that stupid thing and get stuck in it and then hold on to it and play. That's a spy. I'm talking about the SPX. What the fuck is here? Yeah, I should have never jumped in that trade. That was a bad idea. I'm going to watch it from now on. Snake breakout, pull back, boom. Snake breakout, pull back, boom. Snake breakout, pull back, boom. Snake breakout, pullback, boom. Snake breakout, pullback, boom. Watch. This is General Motors today. Snake. One, two, three, breakout, pullback, boom. Yep. Here's a SPY with a fallen wedge. Kind of, yeah. Coming to the 1, 2, 3. My darling, my soul. Excuse me, I'll be right back. I'm watching. I really should stick here and watch a spy if I want to trade it. Spy moving up. Jim, he just caught 1, 2, 3 on spy. We got to break a few moving averages. It's now 12 more minutes before power hour. Breakout. Randy, get ready. SPY. 518 strikes. See the head and shoulders? See, here's the head. There's your left shoulder. Your left shoulder. Well, that didn't work out right. There you go. That worked out better. Left shoulder, head, right shoulder, and right shoulder. Head and shoulders, left shoulder, and right shoulder. Left shoulder, head, right shoulder, boom. Left shoulder, head, breakout, right shoulder, breakout, right shoulder, boom. We're now at 197. Called it 160. And target the 200 or this trend line. Or you get out at this right here. We had resistance error and resistance error. Yeah. Yeah. Video at the VWAP.
360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day. Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
I'm Oliver Rennick. Get ready to cut the cord. Market on Close is coming up. Good afternoon and welcome to Market on Close. I'm Oliver Rennick. Thanks for watching the Schwab Network here as we head into the bell. Hour left of trading. Interesting to see how this will finish up ahead of inflation tomorrow. Maybe there's a little bit of nervousness seeping into the market with that print with a lot riding on it. But bonds today are actually not the problem. It's basically just a continuation of momentum unwind. We have been closely monitoring sideways action in high momentum assets like Nvidia, and Bitcoin, and chip makers, and higher beta stocks and momentum trades that are generally all down today, particularly after a big rally in Bitcoin to start off the week. It looked like maybe we might get a resurgence of that momentum trade, but instead it's going the other way here. Bitcoin's not giving too much back, but Nvidia's break is a pretty big deal here. When you see the levels we've been watching start to crack for Nvidia, that's around 850-ish or so. I've mentioned that level several times here over the last couple of weeks. The range that we've been trading in with the previous all-time high around 975, holding in even despite an attempt to get back up there late last month. Nvidia now has been trending lower, lower highs, lower lows since late March. And today's sell-off down through 850 bucks saw a little bit of an intraday bounce back that then stopped at 850. So it looks like that level is pretty accurate. Somewhere between 850 and 855 seems like an important line in the sand because it held several times there over the last month or so, and now we broke down. As you can see on the left side of the chart, there's not a lot below here. If Nvidia doesn't bounce back and this turns into a full reversal, obviously given the velocity that we moved to the upside, we could move with some velocity to the downside. So that's a pretty big deal. Even though the market is doing okay, generally we're only down 0.5% in the indexes. The Russell's actually up on the day. We're taking it in stride. So at least there is still some stability and not a total destructive type
Exactly.
of unwind that still is a risk when it comes to concentration in the market, as NVIDIA accumulated so much market cap, especially in the sector surrounding it. Even though the last few weeks it hasn't been the highlight, it still is a very critical component within our entire market analysis. I would even argue economic analysis at this point, because we did see some broadening out of the stock market rally, but not that much. Ultimately, this is still a tech-heavy, semiconductor-heavy market, and if those trades unwind, we need to be on alert. Winning today is gold again. Gold this morning was up.
Gold.
We did hit a little bit as risk-off hit markets, but it's hanging in there pretty good. The gold bugs are celebrating right now and kind of living the dream, to be honest, because it's working in several different environments. Gold is working in the risk-on trade. Gold's been working in the risk-off trade. Gold just seems to be working right now. The dollar is not presenting much of a threat when the dollar is remaining generally subdued. Despite higher yields over the past week, the dollar has stayed below 105. And then today we get a little bit of a bond rally pushing yields back down. The reason the dollar's up is not really bond related today. It's more just that safety trade where we do see the dollar catching attention by investors when you get the momentum sell-off. So if the momentum sell-off continues or gets worse, you probably expect the dollar to work pretty well. Maybe gold too, just based on its momentum. And a few of the more kind of classical stock market safety trades, utilities, real estate, staples, those are working today because yields are down.
Crazy trade today.
Trade. But here's the thing, the 2-year chart that we're looking at right now is actually still holding above its previous monthly high. So the important technical event for the 2-year yesterday was that green candle popping up above that range that was arguably consolidating to the side. The sell-off that we got yesterday in bonds, the rise in the 2-year yield above where it was in March and above where it was in February, that was technically a breakout. And even today, with the yield coming back down, it's still at least holding a March level. So bonds just kind of resting here ahead of tomorrow. With stocks selling off, putting a bid into bonds, it does make us wonder about inflation tomorrow. And if bonds now are set up to fail if the number's hot. That's where we'll begin our conversation. We got Kevin Hinks and Jenny Horton here in studio. You know, when stocks sell off ahead of inflation tomorrow, like we talked about this morning, Kevin, it's hard to draw that causality. We don't really know, but what we do know is that bonds are rallying today, yields are back down, and so that could be priming the pump if tomorrow brings us a warm inflation print.
Stocks being down are the least surprising thing of this day, right?
Yeah, sure.
But bonds being up with stocks down, what does that say about the fear about tomorrow's number? Or is this a bigger picture? Is this some rotation to bonds and out of some of these high-flying tech stocks? Maybe they hit numbers that triggered something with some positions. It's hard to say.
Yeah.
But if bonds were lower, yields higher, and stocks down,
different type of sell-off.
They fear inflation.
Yeah.
Right? This is something other. This is some flee, because bonds are really strong today, which is bringing yields down, and stocks are heavy, and the leaders in this market are heavy today.
Yeah.
And so that shows a little red flag for tomorrow. But remember, this market, you know, NVIDIA can bring up or down a big swath, a big sector of the economy, because basically everything tied to AI is going to follow NVIDIA, both up and down.
Yeah.
Right? They haven't divided the winners and the losers yet from AI. Right now, it's just everything up or everything down. So we wait tomorrow, and then we see how the market reacts to tomorrow's number. If it comes in hot, what happens to bonds if this number comes in on fire?
So then they got to unwind today's rally in bonds
then
if tomorrow's
more.
hot. Yeah. So we want to watch basically to see the causality of the selling. Right now, we just call it momentum unwind. Okay. Tomorrow,
powder going into a big number.
Sure.
It feels actually a lot like what we were discussing on Thursday before we got the jobs number last week.
Yeah, it is.
We don't really know why the markets are selling off, and then things rallied Friday.
Yeah, no, it's a great point. I mean, if tomorrow goes well, then maybe suddenly Monday's sell-off in bonds looks like a fake out. Maybe we get a little bit of cushion in what right now is basically a momentum drop-off. The thing that's interesting is that there are some stories here. I mean, like Alphabet's going to bring ARM in to develop their own chips.
Problem is, it's doing nothing for ARM stock, and that kind of looks to me like a little exhaustion, Jenny.
It does. So yeah, Google did unveil these ARM-based chips, touched a new all-time high, and it's amazingly been able to hold on to a modest gain on the session, but it's a green name in a sea of red right now.
Alphabet's green.
Alphabet's green, yeah.
Yep.
ARM has been very much lower throughout today's session, which I think is completely the read that obviously this is more beneficial to Alphabet than it is to ARM. ARM is within so many of these major names already that maybe this just wasn't big enough.
It's kind of expected that
right.
they're going to be the go-to if someone wants to develop their own tech.
Right, like this is already something that other companies like Amazon has already done. So
Yeah.
like it to me feels like, all right, Alphabet is now following suit of like some of its biggest competitors. Alphabet is once again a little bit late to some of these trends, but ARM really has been one that has been stuck range bound. I mean, I know we talk about the strength in like Supermicro NVIDIA. Look at ARM over the last few months. I know it's relatively new to the public sphere, but it has been going nowhere.
Yeah,
Nowhere.
we had that incredible 2-day rally around earnings in February, and then it's been stuck.
Incredible.
It tells us
Unprecedented.
about, I think, where our momentum is, and it's at best right now on hold, Kevin, arguably turning. I mean, that's where the NVIDIA chart work becomes really important, because you could argue it's turning. However, that being said, look, we're only down 0.5%. Cisco's up today. There's like a super bullish note on that.
Quit putting so much weight on NVIDIA. CNBC says that the market's broadening out. You're putting all the weight on NVIDIA. Everybody loves NVIDIA. You know the old saying, don't ever fall in love with a stock? Well, it took me, 13 years to fall out of love with Tesla. I mean, I'm still in love with it, but not as much. I'm not trading it every day and calling it out every day like I used to. This Comcast is looking very sexy. But I don't, just price-wise. Can't be all that bad. We're at the 9. I mean, we drop a little bit more, but we actually are at a support right here. A little bit lower. That's about it. 40.22. So we're a little bit below it right now. What do you got there? Oh, I didn't even look at Disney today. I don't think anything was on my list. Shoot, yeah. There it is. It's up $1 something today. Power hour is upon us. we're going to have some good days here coming up. Now I know I put my, there it is, 517.50 to break. Dang, man, I was right on that one. And that was at 10 o'clock when I said that. 517, let me see here. What was that? 517. 10 o'clock. So right here, well, that's not a bad call. We're at 9:56. So right here, 10 o'clock. So I said, Randy, I know who's knocked on. Is Randy home? Yeah, I'm back in the woodshed smoking a J, man. Put that down for a second. I just got through trying to alert you about the 9 crossing over the 21 this morning on the spy. Do you remember me telling you about that? Yeah, I slightly remember that. Right at 10 o'clock. I put it in the room. You remember that? Yeah. I said, target. Do you remember that, Randy? Randy's probably not even here. SPY. And I think I did that on a different chart. Let me see here. On the 21 SMA. Yeah. So I said, Randy, the 9's getting ready to cross the 21. Does anybody else in here have a crossover trade that they do on the moving averages? If you do, check out the SPY. And the 9 crossed the 21. So Jimmy called it out. Jimmy says, resistance to break 517.50. So I come all the way up here, called it out here at 10 o'clock. And here's my evidence. People on YouTube. 517.50 at 10 o'clock. My water's going off. So that right there. So we go up here and look for 517.50. $517.50 right there. Boom. Snake breakout, pull back, boom, to the 200 SMA. It's just, now the 200 wasn't here when I called it out. It was up here. Why did I pick that number? Hey, Jim, why did you pick that 217.50 as resistance? I said, give me a second, man. I gotta go into the kitchen and grab me a shot of vodka and a Valium. Turned down. Get me some tea starter, get me in the groove. And I'll tell you why I come up with that 5:17:51. Now remember, I called it out down here at 10 o'clock. I said the 9 is going to cross the 21. If that happens, we respect the 9. Then we came down, touched the 50 on the pullback. Snake breakout, pullback, boom. So how did I come up with that 5:17:50? I'm curious myself. So we got to go to different time frames. Let's go to the 1 hour. There's your answer. 5:17:50. Oh, here we go. I think that's it. It's 5:19. To knife. Oh, never mind. I'm way out of. It had to have been this shoulder right here. An equilibrium between these two peaks. Or it could have been the I gotta write notes. I can't remember. 5:17. Yeah, I wish I could remember why I called it. I'm trying to figure out why I come up with 5:17:50 and I'm puzzled. $30-minute. See, that would have done it. I'm pretty accurate about my lines, so I don't know. I think that should have been up a few cents. Instead of the 50, unless I was being a rough estimate. Let's try the 5-minute. This could be pretty close. Inverse head and two-headed snake. Well, I'm not ponder it anymore. Oh my. What happened here? God darn, Jim. Oh, you idiot. Oh. Oh. Rodney, would you like my autograph? The 518s are at 223. I can't believe this. Why didn't nobody tell me I was moving on this thing? You told me? When? Come and think about it. Shit. It's getting way too easy anymore. I gotta find something more challenging to do in life. Become a pro wrestler, maybe. How did Comcast get on here? Ladies and gentlemen, in this corner we have Washboardjim. The other corner we have the Head and Shoulders. If you can count to 3, you can trade with me. Okay, 52, 92, 72. Randy, profit. 52, 92, 51, 92, 51, 92, 51, 92, 51, 92, 72. The next one is 51, 94. Bam. Double top. Ladies and gentlemen, we broke the shoulder and we hit the top of the head. You see the shoulder, right? Head and shoulder. Bam. Oh my God. 51, 96, 44. Nailed it. I just hit my resistance. To the penny. Did you see it? I'll show it. I'll prove it. Oh man, please. I can't believe it. Jimmy is rich. Jimmy makes some money. Jimmy is rich. He's out. Ugh. Fudge. golly. Woo! This is incredible. Jeez. Oh my. Oh, if you can count to 3, you can trade with me. I'm gonna put out a song for Sesame Street for the children of the world. If you can count to 3, I'll be the stock monster. I'll be the Jed Clampett. I've got you by my side. Extend it to the left. Dadgum nailed it. I'm just in one singing mood today. My voice is real sore. I've been really getting into it. I don't want to scare anybody away. Called on the 3rd dot. God darn, man. This thing's worth a lot more money than this. We're at 8:30 now. $7.80. I nailed it. If you can count to 3. You can trade with me. I mean, that's dice. You don't expect it all the time. Rodney, did you take that trade when I called it to you? If you didn't, you'll get a big reprimand. Magnificent. I think I made my A today. The crowd is in total shock after that beautiful play. That's incredible right there. Once you kept piling on, they didn't stop. That's a heck of that's one heck of a run. $30. Wow. I was really impressed with calling that out. See if it can 9. Here, same thing right here. The 9 crosses the 9 EMA crosses the 21 SMA. Then you get a confirmation after it breaks the 50 SMA or the 51 EMA. And then both the 9 and the 21 cross the 50, which means a wider spread, and it respects the 9 all the way up until you get out. Once you hits that 9, pulls back, and that's when you exit. Or sooner. See, there's, I mean, it could have gone up more. Seems like every flush has been a good buy. This flush we had last week, look what happened. And then this flush just now, almost back to the top. I mean, that's insane. You know, I'm kind of looking at things differently in a way. Let me look at one to see this time frame. No, I still think we could pull back. It wouldn't hurt. Each one of these represent a month. We double topped. Yeah, there we go. We double topped. There's coming up with something here on the monthly time frame. So the SPY double topped. That's interesting. I wish I saw that sooner. I mean perfectly. Right at 524. Just a little bit, just 1 penny under it. And that's a head and shoulders. There's your right shoulder and your left shoulder. So it could come back up. And here's an inverse head and shoulders. And it can come down a little bit more. Well, it did. I mean, it did. It hit right there. So come down and retest the second time and be a strong buy. Maybe. To come tomorrow after the numbers hit. Or a double bottom. That's my game plan. So we got Mr. today. Mr. had a little snake breakout and then a pullback, and the double bottom didn't hold and created a head. And then we broke out and had the right shoulder. And there's your right shoulder. Then it broke out again, came back and retouched, and boom! Snake breakout, pullback, boom. The Donald is now green. Jimmy called the Donald at 36.07 yesterday. Today it was up a couple bucks to 38. Disney's going to start consolidating and break out again. Netflix. New low. We got 10 more minutes. One, two, three, breakout. Did you like that mannequin? Yes, his dad would love it. Your dad taught me how to shave. I was 7 years old. Well, well. In the video today, snake, breakout, pull back, 200 SMA out of the trade. Out of the trade. Snake, breakout, pull back into an inverse head and shoulders. Boom. Watch this. Randy. Snake, breakout, pull back, boom. Is Jim there? He's kind of busy right now. He's with the retail trader. May I help you? I'm his assistant. Yes, I've notified a snake breakout. Can you tell me how to play it? Yes. In fact, Jim has spent many hours teaching me how to trade this trade. So you take and go to your snake. And you draw it in. You know how to count to three? Yeah, he taught me how to count to three. 1. 1 to the body of the candle. 2, the body of the candle. 3, breakout. Damn, Jim. So what do you do when you break out? You wait. Patience. Don't get ahead of yourself. We're going to try to identify a pattern. So we're going to look for a head and shoulders. You see these 3 lines right here? That's the start of your head. You got your left head, your breakout, and then we kind of pulled back and respected it. You could have took it right there if you wanted to. But then you would have been, you know, maybe I would have took it there too. Who knows? So we're going to extend that out. You got your left shoulder, your head, breakout, pull back to the support line off the snake on a head and shoulders. There's your left shoulder and your right shoulder right to the penny. Take the trade. Second retest. Boom! Out of the trade on a double top. Out of the trade on a head and shoulders. Left shoulder, right shoulder, right shoulder. Snake breakout, pull back, inverse head and shoulders, boom to head and shoulders. Called it out this morning. Snake, breakout, pull back, boom. If that's the only, if you just watch if you just watch this every day, I'll show you. This here's pattern. Snake. God damn it. Jimmy doesn't like to wait. You should know that. Snake. Breakout. Pull back. Higher low. Boom. Snake. Breakout. Pull back. Boom. You got to find a pattern. That's where the pattern. Once you figure out what kind of pattern, you'll know how to take the trade. And you take it to the top of the head and shoulders, and you're out of the trade. Snake, breakout, pull back, boom. Snake, breakout, pull back, boom. I did. Oh gosh, this reminds me of something. What do they call that? I did a painting. Let's see if I still have it. I can't remember what I did this. If I saved it. I'll have to look that up because I can't find it now. Huh. Nope, can't find it. It's a massage kind of healing exercise. It's supposed to be spiritual. Can't remember what it was. Nope, we're done. What a trade. Well, today would have been an excellent day if I just didn't jump in that trade early today. I mean, it would have been a good, clean day. Easy chart. 1, 2, 3, boom. God, look at it. All right. Well, let's kill it again tomorrow. Looks to me like the market doesn't care what the numbers are. I mean, it's hard to describe what. It's starting to make sense. Well, it's still hard to describe what's going on. It's just like a few years back, had a government shutdown and we were in total recession. Stores were closed, restaurants were closed, government agencies were closed for 3 to 6 months. We were getting handouts from the government, checks, which I didn't mind because I figured I paid so damn much money to these guys that have wasted so much. It's against my capitalist. I mean, I've never collected anything from government except I got CETA when we were poor, when I was young, and then I have epilepsy, so I got a scholarship to go to college through a government grant for epilepsies. And what else did I have? I think I had food stamps for maybe 3 months. Never collected any unemployment check ever. Not a one. There's something else that the college. I had to get my GED. And if I got my GED, they were going to pay my school at State Fair Community College in business. So I got my GED at 30. 34. Might have been 34. And then right after that, everything changed. I went to college, got a degree, ended up owning a business in 2 years. Picture Frames Plus. While I was going to college, I mean, my whole life turned around. And I can only contribute one thing to that, and that's music. Everywhere I was going in, every direction I was going was wrong, and so I was invited to a festival, and I said, man, this looks like a lot of fun. And I grabbed me a guitar and started playing guitar, and then things just, my whole life changed after that. So I'm a big advocate for young children playing music. And that's it. I forgot what got me on that subject. So I think I can say, if you want to really learn how to trade stocks, just dedicate. You'll have to cut something out of your life. But give it a couple years and dedicate. Because I think that's what it takes. Some people come in here and they do a couple of trades and they say, oh, I can't do this. I don't want to lose money. And that's why they got paper trading. You got to have a strategy. You got to have something that works for you. Some kind of trading strategy. I'm just sharing mine. I got many, but I like this one the best because it's almost 99%, 95% win rate. But you really got to dedicate and say, I'm going to do this. You're just, I've done it too much. 20 years every day, 8 hours a day. But I changed my whole life. For me to do this, I had to get a job to work nights. I was a picture frame manager making 60 grand a year, and I was okay with that, but so I had to change my whole entire life. My whole career. I had to find a job where I could work at nights. And so I started a janitorial business. And they gave me the time and the money to learn how to trade. And I went weeks without any sleep, 72-hour work weeks, and here 8 hours a day, and go straight to bed and wake up, and did that for 15 years. And finally decided to cut my business back and do it part-time. And I still love doing it, but one of these days I'm going to have to say goodbye to it. I'm a workaholic, and it's just going to be hard to say goodbye. So that's it. That's my story. I'm sticking to it. So don't dedicate your life, but don't do it like I did. You'll never be able to put 100% in it like I did. Because you probably got family and kids and social activities. I used to play, and I had to give up music. That was the hardest thing. Because I could have gone somewhere with that, but I just didn't like traveling and being in hotels and having women always wanting to pick up on me. I like the washboard player. Can I have him? I'll catch y'all later. Thanks a lot. Exactly. GEO. Geo. It's good to see you. So I'm going to go ahead and get on out of here, YouTubers. Make sure you get plenty of sleep and rest and treat your family well. Bye-bye.